up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. It's a millennial takeover for Tasty Live today. Good morning. How are you? Team Mikey Butler, Vanetta Logan, good morning.
Good morning.
Morning. How you doing?
How are you doing?
Great. I'm great. Did not wear my party shirt.
Failed.
I just put it on.
You had one job.
Time. Yeah. But no, feel good.
That's okay. Maybe at the next break you could have like a wardrobe change like Beyonce.
I should.
That would actually be good. I think we should incorporate that into the show moving forward. Just having quick wardrobe changes. We need more costumes, especially with Halloween coming up. We can incorporate that.
Yeah. I'm here for it.
I love it. I already asked Nikki this, but Mike, I will ask you. Are you doing a couple's costume this year?
No, I'm not doing any costume because we're going to San Diego.
Yeah.
Oh, that's right.
So
you forgot we don't
dressed on stage.
Vanetta, you forgot we don't have freedom. We don't have the freedom to enjoy weekends or holidays. You know.
Yeah. Not this year.
Yeah, but Chicago will celebrate Halloween for like 3 weekends in a row. So
yeah, but that's the young people's Halloween. That's the mid-20s Halloween. That's, bottled blonde, which isn't even there anymore. That kind of Halloween.
Okay, well, did you guys lock in your golf in San Diego?
No.
We almost didn't lock in a hotel for Friday.
Yeah.
Oh my God.
So
yeah, we've really failed.
What is going on?
Yeah. Although we will, if we really wanted to, we could find a spot.
Yeah,
some like not a great place, but
yeah, it was tough. I tried to get us on Torrey Pines, and they basically emailed me. They were like, "Sorry, Johnny." That was basically the email. It was like, no, I don't think so. But here's a bunch of like other places.
That's wild.
Yeah, it was unfortunate.
Mm-hmm. But yeah, we'll still have a grand old time.
Yeah, it'll be fun.
Toast.
You guys got to go lots of places. What city was your favorite?
Ooh, I mean, Dallas was a riot. Doing the rodeo. That was one of our more fun outings. Seattle's always great. Seattle's a good spot to be.
So you're just going to name every city that you went to?
Yeah, like they've all been really good.
I did like staying on the wharf.
Yeah, that was a good spot. That was a really good spot.
But yeah, Dallas, Fort Worth is really the diamond in our eye.
Yeah.
But yeah, I would say probably Seattle for the scenery so far.
Mm-hmm. The talent in Fort Worth is quite special.
You mean Texas women?
Yes. Yes.
True cowboys.
Yes. My girls.
Gangs of cowboys walking around with their huge belt buckles. It's great.
Yes.
What's
your favorite spot? You've been to a handful.
I don't go anywhere. I stay here and I just do my job from here. So I haven't been on the road.
You've been to a couple, I feel like.
I came to Chicago.
You didn't do any of the remote ones, like when we were out?
No.
I feel like you went with Tom and Tony a couple times. No?
Maybe once or twice.
Oh, all right.
But, all right. Well, good times. What is on deck for you for the weekend?
Well, the Bears play on Sunday, so I must be available for that.
A beat-up Ravens team, right?
Yeah,
we'll see.
We should get another one, but
the Bears are beat up too. Like everyone is hurt. I don't think Swift is going to play.
Well, luckily, we don't. I mean, he's been great, but we don't need Swift to win.
Manungai.
Yeah.
Okay.
He's good.
We've got the wide receivers that need to be fed. They are starving. But yeah, I'm playing golf tomorrow, actually.
Wow.
You're gonna freeze.
John was just asking if I was playing golf, and I was like, this is the end of the season.
Yeah, I mean, tomorrow should be nice. It'll be like 50 and sunny, so it'll be doable.
Ooh, that's nice.
But yeah, if you hit that ball, your hands are gonna go numb. It's gonna be worse.
That's not even the biggest problem. It's the leaves. You know, you get all the leaves off the trees, and then you hit a bomb down the fairway, and you can't find it.
I hope you have bright balls. Nope, that sounded wrong.
You do probably need that. That probably would help.
The neon. Well, I mean, the neon kind of blends in with the yellow if it's a yellow leaf.
I have pink ones. I have pink ones if you want them, Mike.
Pink would probably be a good one.
Yeah,
a good contrast to the.
We'll have to ask ChatGPT what the best colored golf ball is to offset leaves on the ground. It'll probably just say just a white ball.
I think the pink would work, but yeah, tough to play in fall golf.
How about you, Nikki? What are you doing this weekend?
Nothing really planned today. Tomorrow might make a little road trip somewhere. We've been looking at spots. I am not in charge of planning of these things. I let my significant other plan these adventures, but the dunes have been thrown around where she's dog sitting right now. So we have a well-trained golden retriever that we can go
take him on a hike,
play around with. So we're scheming up ways to
there you go,
get out in the out in the world with them. Yeah. So we'll see.
Oh my God, you got to take him to like a pumpkin patch or an apple picking place and do a fall doggy photo shoot.
That's what this is kind of turning into. We'll see.
Hang out with your girlfriend. We don't need you.
To be completely honest, you could definitely fill in for me. That would be fantastic.
Aw, I love dogs. I just want to have a dog for a day. That's amazing.
Yes, it'll be fun. It'll be fun. And it's good because he's very well trained. Like he's off leash, fetches, listens to whatever you say. It's been fun to hang out with him.
Aw.
Yeah.
See, that's crazy because like trying to board pets right now, it's hella expensive.
Well, we get inflation numbers at 7:30, so they'll tell you if you're lying or not.
That is true. We do get CPI data because they need it for Social Security COLA.
Yes.
I think is it at 7:30 or is it after that?
No, I believe it's at 7:30. It was supposed to come out on the 15th.
Yeah. We also get PMI at 9:40 or 8:45 Central. So we do get some data today, which is why SPX had a little bit of a bid in the 1 day expected move here.
But we've just pinned 6,800, basically all-time highs.
Yeah.
Yeah. I feel like this number, it wouldn't have been put out unless it was advantageous.
How do you think the trading is going to be for Tom and Tony today when the market opens? Like, what are we doing pre-market? Like, do you think, and then with the number coming out, like, do you think it'll be good?
I think so. I mean, they crushed volatility yesterday. And going into next week, next week you have all the big tech names reporting earnings. So I feel like there's going to be a little bit of a bid after this number, but we'll see.
Okay.
Yeah.
Yeah, there'll be two-sided action either way.
It's been great trading, both sides. We've had some two-sided action, volatility expanding, contracting. It's been perfect.
Yeah. And luckily, if you were bullish on Tesla or IBM for earnings, you just had to wait 1 day for that thing to reverse.
Just 1 day for that back that thing up.
Yeah. Yeah.
So yeah, it's been wild. It's been wild and fun.
Yeah.
All right, we'll talk amongst yourselves, I guess.
No, let's get into it. Let's get into what we got.
We got a great show for you today. It is the millennial takeover today. So Mike Butler and Nick Batista holding it down all day long today. They are back together, which I love that for you guys because you guys had a show together, and then Nikki had to go on. He got called up to come to the big leagues. But you guys are back together today. We have a full show for you today at the 8 o'clock hour. We got the weekend stocks. Jamal's recapping all the crazy shenanigans, kicking off with the first, Mag 7 stocks to have their earnings, massive reversal in gold, massive move in oil. Jamal's going to recap it all. And he just titled his segment for today, Washington Buys It All. So just gotta love that government portfolio. And then we got Fast Market. I love this segment because it's viewer submitted trades, and viewers find weird stuff sometimes.
Yes, and we got some from Reddit. So if you're on Reddit, and we've been upping our participation on Reddit, so you can check out our channel there. But I've been posting for trade ideas there for Fast Market and What's Your Assumption, and we have just had some bangers from there. We had a VST short put that I closed after 24 hours. Or
I don't even know what that is. What is VST?
Vistra. It's a power company. Data centers.
Okay.
AI.
It's up another 5 points pre-market.
Yeah. But they've been great. So we're on Reddit if you have not seen us there yet.
Okay. Hold on. Do. I don't know what that is. Sorry. Talk amongst yourselves. And then for 9 a.m., we got market measures. Legging adds risk without reward. Oh, interesting.
Ooh.
Okay.
Spooky.
Gonna get into that. And then back by popular demand at 9:20 today from his iconic appearance yesterday, Marty from the trade desk is back in the hot seat. I love Marty so much.
Great.
And then we got you guys are going to take some questions, and I think around 9:30. So if you would like to talk to Mike and Nick, they would love to hear from you. So at around 9:30, give us a little ring a ding. So we had also an iconic phone call from Robin Maria yesterday as well.
Yeah, that was good. They're the best.
They are the best. I want them to adopt me.
I know, right? They would be fun uncle, like Funkles. Fun uncle, fun.
Yes.
They would be good to have as like a pseudo parent.
Right? Right. Anyway, that is our run of show for today. Like I said, jam-packed as always. Do you want your daily dose?
Of course, sure.
Yeah, let's go.
Our leading story, breaking news,
Coming
across the wire. Leading story, top story, just in.
In today's headline, this just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It is Friday, October the 24th. I cannot believe it. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Quick question. How cold does it have to get in your house before you turn the heat on?
I generally never turn it on.
What?
Wow.
I get enough heat that my condo stays at a perfect spot.
Because you just live in a concrete box.
Yeah, and I'm on a high enough floor in the fifth floor of an 8th floor building.
Oh, so sure, heat rises. Yeah,
the heat rises, and I'm in a perfect spot where I get a sandwich of heat.
Okay,
a couple on the top, couple on the bottom.
How about for you, Mikey?
I would say 65 is like the lower bound.
Yeah.
I'm pretty close here right now to that. Yeah.
Oh, you must not have neighbors pumping their heat then.
Yeah, I don't think I do right now. But yeah, when it gets frigid, I prefer to have a colder place, and then you just wear warmer stuff.
That is true. That is nice.
You're probably 72, Vanetta. You're probably like
I like to sleep cold. I slept so good last night. It was like 63 in my apartment. But I turned the heat on this morning as I was getting ready. And so yeah.
I don't know if my girlfriend has control of the Nest it's getting pumped to like 75. It's obnoxious.
That's great.
It's insane. It's insane.
Well, anyway, getting to today's financial news and headlines that you can use. We talked about this briefly, but the September CPI is coming out today, and inflation's probably going to be seen as holding firm around that near 3% rate as tariffs continue to complicate the Fed's path. The Consumer Price Index is going to come out at 8:30 Eastern Time, delayed by the ongoing government shutdown. Now competing, I think it's the second longest shutdown that there is. What's the expected move for the market today, boys?
It's like 40 points.
Okay.
Yeah.
Just under it.
It's come in pretty significantly. I mean, volatility, the VIX came in like 1.5 points yesterday. We're at 17.15. I mean, they've taken all the juice out. There's no more fear.
So you think this is just going to be a nothing burger?
I think so. I mean, I think next week is obviously a big week with all the earnings that are coming up.
Sure.
But yeah, I just don't think anybody cares about these anymore. I think it's just an asset rush. You just got to get them all.
Although I will say this is the first number we've heard in weeks. So maybe people will be excited for it.
Yeah.
Maybe absence makes the heart grow fonder.
Yes.
But is there any opportunity in bonds? Because bonds have been kind of, just a hockey stick trajectory. What can we do in bonds today, maybe?
We sold bonds yesterday, and I took that off into the down move. We kind of top ticked it on. It was actually a what's your assumption trade on Wednesday, which ended up working out, but they're at the higher end of their range. Are you in any bonds, Mikey?
No. Yeah, it's been I've traded it directionally with zebras because IV is so low in there, but I haven't touched it in a little bit. But yeah, they've been moving around. The dollar's been moving. Precious metals still flying around. Oil. We've got everything kind of just whipping around until something happens.
Yeah.
Here's an interesting headline. A Goldman Sachs trader has taken on one of the big questions in the markets this year. Why are retail investors who typically capture trends too late, how are they beating the pros? So-called dumb money versus smart money. It's a complex question, but this analyst says retail traders have remained risk-seeking while institutions have been cautious. What do you guys think is the real reason retail seems to be outperforming institutional?
Good question. I think this year specifically, there have just been a number of stocks that have gone from like 10 to 50. And I feel like a lot of those names were not just like fringe names. There were products like SoFi and IBM. Like I think there's been a lot of big movements in household name stocks that a lot of retail investors would probably be exposed to, where the overall market, if you're invested in the E-minis or NASDAQ as a benchmark, you've had more opportunities to outperform this year, specifically to the upside.
I think has a lot to do with just the way markets have been moving and the news-driven cycle that we're in. I think retail traders are pretty tuned into the tweets and the headlines and what's happening, and they jump in, and they're, because the market has mostly just gone straight up, it's a pretty easy bet. And
they've been buying all of the dips.
Yeah, exactly. So, I mean, I think that helps, but I also think this dumb money versus smart money thing is just the silliest, I just don't think it applies anymore. Like, I just don't, everybody's on the same playing field. There's unlimited access to markets in 50 different ways, whether it be prediction markets, betting markets, crypto markets, stock markets. You can bet on all this stuff at all times. So the access is just so quick. So I think this is like kind of this is a boomer headline.
Well, there's another boomer headline. A long-standing seasonal trade has had excellent results over the years, and it occurs at the end of October. I think another fun, like LeBron stat from yesterday, I think October 23rd is like the best day or something to buy on the market because like historically, I don't know. I forget what the fun fact was for yesterday. But another fun fact is that by the market at the close of trading on October 27th is that institutional investors basically have to buy a bunch of stock because their fiscal year ends at the end of October. So not we're going through the end of like a calendar year, but you just sort of I don't know, they are buying a bunch of stuff in October and then selling it maybe at the start of November. So there could be some opportunity. Do you believe in any of this market seasonality?
I mean, we talked about how the September seasonality is usually a weak month, and we basically didn't have a single day that we were down. I think we've gone. I saw some other stat that we're 120 days straight above the 50-day moving average, where the longest run of that was like 130 days.
Oh.
And so we're, like there's been no sort of downside move at all. It's been straight up. And so, yeah, I mean, if you buy at any time, it's been a good time to buy in the last many years.
Okay.
Like I don't know if I take so much out of the seasonality part.
Sure. How about for you, Mikey? Are you on the seasonality conspiracy theory train?
I don't know if we have sleigh bells on our sound deck, but that is what I think is pretty consistent, the Santa Claus rally.
Okay.
But that kind of is more in line. It's a similar story where it's in line with people are getting bonuses, people are creating IRA accounts to write off taxes, those kind of things. So I think you see kind of a bid into the end of the year, not necessarily October specifically, but I think right now, if there was ever a reason for this not to happen, I think maybe now would be a time where you have a lot more chop, a little bit of an elevated VIX, and an inability to get past this high that we've realized in the E-minis.
Well, sad news for gold. It is snapping a 9-week win streak as heat comes out of the rally. Bullion edged lower near $4,110 an ounce, putting it on track for a weekly decline of more than 3%. Let's talk precious metals.
Yeah, shout out to Jamal for that stat that he brought of the 9 week up weeks in gold. There's never been a 10-week stretch.
Yeah.
So that was perfectly timed. This move definitely helped a lot of people. I think everybody was kind of feeling the heat on the upside. There's no way you can really defend against that sort of move in something that is that low volatility, or at least was such low volatility until then. So it was definitely a needed move in both silver and gold.
Yeah, gold's rally has been crazy. I've been talking about implied volatility in gold and how even with an Ivy rank of 80, the actual implied volatility doesn't even come close to representing what we've seen. But yeah, I'm glad to see a little bit of a sell-off here. I'm short gold. I've been short gold in a defined risk way for a couple weeks here. So
what underlying are you using to trade gold?
For this position, I have it in GLD. Okay. Sometimes I'll do spreads in the gold futures, but I have a calendar spread at 370 for December, November, and then I have a diagonal spread that I had on for a longer period of time. That was a 345, 335 diagonal spread. But yeah, gold's down. GLD's down 5 points pre-market. Selling off a little bit. So this might create a scenario where I can close this calendar spread today.
Yeah, MGC, the micro gold contract, is a fun one to trade. It's 100-ounce notional. So with the way gold is moving right now, There's obviously a lot of risk. I mean, $70 move today is a $700 move per contract, and those contracts, use a couple $1,000s in buying power, so you can get some big positions with those. I've been scalping around those. There is a 1 ounce gold contract, but I forget what it is.
It's one OZ.
With the one.
Yeah, one and then the O.
Oh, that's wild.
Yeah, I'm actually shocked that there's this much volume. There's almost 30,000 contracts that have traded. That is a little bit too small. Shame on the CME. We're getting make it 10.
What are you, Goldilocks?
Yeah.
Well, you need like the ETH contract and the Bitcoin contracts. They're too big and too small. Like they just don't. They need to go in the middle. I need to talk to the peeps at the CME.
Okay.
Same thing with these gold contracts. It's like, one contract is 1,000 ounces, the next is 100, and then the next is 1. Like you miss the whole middle. You went to the two absolute extremes.
Sure.
Bitcoin is 5 Bitcoins, which is $500,000, or 1/10 of a Bitcoin, which is $10,000. It's 500 versus $10,000. There's an entire room in there. You could park a Costco in that range.
I get it.
Tell us how you really feel.
I know. This is so funny, but it illustrates a good point. I was not aware of that, but you're right. Yeah. There's some gaps there that should probably be filled. Hey, just real fast before the number comes out, President Trump yesterday pardoned Binance founder Changpeng Zhao, mostly known as CZ. He pled guilty in 2023 to enabling money laundering on the site, while CEO of the crypto exchange Binance is not currently allowed to operate in the U.S. He also was part of a plea that was a $4.3 billion settlement that Binance reached with the DOJ. But conversely, his company has been helping the Trump family with their Bitcoin endeavors. And so that sort of brings light of why was this guy pardoned, but it's neither here nor there. He's writing a book. So what's Bitcoin doing today?
Yeah, I don't love that. Bitcoin has had a nice little bounce from the lows, but it's been kind of stuck in this range around, 108 has kind of been the magnet. But it's been in the 105 to 110-ish range for the last 2 weeks or so. Two-sided action for sure, which has been good.
Still on the lower end of its range from recent times, but it'll moon eventually.
What's Coinbase doing? Because that could be a clear and present, threat to Coinbase if Binance can come back and operate in the U.S.
Coin's at 332. It's up $10 pre-market. It's been again a proxy for Bitcoin, and so it has been choppy as well. MSTR, another one that's kind of on the lower end of where it's been trading. A little bit of the volatility has come out of MSTR, especially on the upside. I mean, that can change very quickly, but it feels like that kind of high beta trade is at a lull at this point. So I think if I was a gambling man and if you wanted to be long crypto, I would.
There goes the market.
Yeah, there you go.
There's your number out. Let's go.
Yeah. E-mini's up 50 right now. The Nasdaq's up 230-ish. Dow up 200. Russell up 400. Cancel crash. New all-time highs. Buy it all every day. Until you run out of cash. And then I don't know. I have that argument with Dylan. I'm like, he's like, you just got to buy. You just got to buy it. I'm like, okay, if you do that every day, when do you run out? Like when can you not buy? It's a big question.
Well, once you get a 20%, 30% sell off in the E-minis, and then you just liquidate and turn it into leaps, and then you multiply what you had.
Yeah,
that's all you gotta do.
Yeah.
But yeah, big move out of the initial number. Market just ripped up 30 points. Bitcoin ripped up 1,000, just like that.
There you go.
What happened to volatility?
Well, I mean, they smashed volatility yesterday. So, volatility is at lows. We're at 1645 on the VIX. bonds are basically unchanged here. Gold's rallying a little bit, silver rallying a little bit from the lows. I mean, it's a buy everything. Vol's coming in, buy it all, new all-time highs. You'll probably get 7,000 next week on all the fluffery that we get from the big tech stocks. I mean, I can't imagine not having money in the market right now.
LFG.
Yeah.
There you go.
Got the pumper in chief, baby.
Pumper in chief.
Well, now that excitement's over, let's get to some earnings from last night. Intel beats on sales in first earnings report since it became part of the government portfolio. Intel shares are up 87% so far for the year. The chipmaker brought in revenue of $13.65 billion versus $13.14 billion expected. Shares were up around 6% in extended trading.
Yeah, Intel, I played it like neutral / upside. I was really playing the vol crush, which I think is going to come in very significantly today with the stock basically up, $2 now. It was up like $3 or $4 after the announcement, but it's a relatively inside move. The straddle yesterday was trading at about $3.50, $4 ish. So you're well inside that move. So it's a nothing burger. I expect volatility to come in very significantly. The rest of the market, I imagine vol to come in even more. So it should be a good day. It should be a good day for premium sellers, especially if you leaned a little bit long in basically anything.
Did you do anything? What'd you do, Mike?
I did not do anything in there. I've been pretty light on earnings. I'm waiting for the other Mag 7 products. I had a Netflix calendar spread on the upside pre-earnings, and I closed it before the announcement, so that was lucky.
Oh,
that thing sold off aggressively. But I'm waiting for like Apple, Amazon, those products to come out. But
I gotcha.
Now I have a pretty clear strategy, given the cool CPI number we just got came in at 3%. Expected was 3.1%. So all bets are off.
Yeah. No inflation, Vanetta. You're wrong.
Just our health insurance premiums. That's it.
You tell that to my grocery bill. I am one tiny lady, and my food bill is out of control.
I mean, everything is.
Yeah, that's.
If you leave the house, it's $300.
Yeah, it really is. It's
Where
crazy.
are you going?
That's the problem. It's like you're not really going anywhere that extravagant.
Yeah,
but it's just
like if you have 2 beers, it's $50. Like, that's just what it is.
Oh my goodness.
That's the United Center. If you go to an event at the United Center, you are spending $200 just to like get a couple of drinks.
You need one of those wine bras.
There we go.
You put the wine, they can't detect it. Like you put the wine in there and then it's got like a little straw and then
there you have it.
There you go. Hey, another company to report earnings. That's Newmont. Newmont beat third quarter profit estimates as record high gold prices helped offset weaker production. But Newmont did warn that fourth quarter free cash flow would take a hit due to higher spending. I don't know if you traded it. NEM.
Newmont has had a meteoric rise along with all the mining stocks. Not a shock given the move that you had in gold that basically, moved in tandem there. I did a little upside crab trade, so this should probably work out pretty good for me. The stock's down $3 or $4 here. And I sold, some of the tail premium in November around 100, and that should get vaporized today. So it should be a good day for earnings trades in NEM and Intel. I think we're going to hit both those.
Nice. All right. Good looking out there. Good job.
Yeah.
Another earnings, I don't know if you traded it. It was Ford. Ford beats on earnings, but did lower their 2025 guidance after one of their suppliers caught on fire. Ford was able to make some decent numbers for the quarter, but they said a fire last month at a New York plant for an aluminum supplier is expected to cost the company between $1.5 and $2 billion. Stock up small this morning.
It was up significantly more in the after hours session. I think it got up to like above 13, maybe 13 and a half ish. But yeah, I mean, Ford, not one that I'm trading most of the time. So I don't think that's going to change here.
Sure.
Yeah, Ford was one of my long-term bags that a short put delivered 100 shares to. So I had 100 shares for many years, but I got out.
Yeah.
I got out at like 13 or 14. So this thing is just like it's crazy. It's like they need to do something like get acquired.
Well, they said they're also not
trading.
going to produce their F-150 Lightning truck for a while. They don't know when that's going to come back either. So do with that what you will. What a wild run! Quantum stocks got juiced up on news that the Trump administration was going to maybe buy a piece of some of the quantum computing companies, but the administration actually came out yesterday and said that they are denying that they're currently in talks with any quantum computing companies to take an equity stake. Market didn't care. Shares of IonQ, Rigetti, and D-Wave were still all higher despite the statement from the Commerce Department. Quantum firms were discussing funding awards of $10 million for equity. Let's talk QBTS, RGTI, and IonQ.
I traded both these to the short side, took them off into the down move that we had. We got that little pump and I got back in, so I have some short delta now. I did put diagonal spread in INQ. I mean, these things, they move $5 a day. So,
Ooh.
and either direction you want to play it, you're probably going to have a chance to take profits on it. It's a tradable vehicle. You
That's
have
fun.
to trade it because it's, up 10%, down 20%, up 10%, down 5%. It's every day, those sort of moves in these stocks.
Mikey, what is your quantum exposure?
I have no quantum exposure as of now, but yeah, I agree with Nick. I think a lot of these products are under $100 and they do move around quite a bit. So you can play them however you'd like. I think you just got to keep in mind, like if you see a stock that goes from 90 to 50 and then back to the middle of the range, like the premium is great, but it's for a reason. So you still got to keep your size in check here.
Yes. I don't know if you guys heard that ding, but I've gone ahead and decided that I'm taking a little bit of a short position here at the highs. So I sold a couple of micro E-minis. This is it.
You're like Babe Ruth. You're calling your shot.
Speaking of,
I'll take like 5 ticks out of this if possible.
World Series starts tonight.
Yeah.
There
Who
we go.
you got? You going with the Dodgers or the Blue Jays?
I would love for the Blue Jays to win because the MLB has the same problem that the NBA does, where there is no cap. It's just soft cap. So your big market teams.
I thought you were going to blame it on the Cosa Nostra. I thought you were going to say the MLB also has been influenced by the Cosa Nostra.
I'll get to that in a second. Yeah.
Yeah, I would love for the Toronto Blue Jays to win just because I love rooting for an underdog. And they came back. They were down like 0-3 in that series, and they came back and won. I think it was 0-2 or 0-3.
I just like whoever the very large man is that sits behind home plate in the Blue Jay Stadium. Have you seen that guy? He's like absolutely yoked. He's on my For You page. I will send you the video.
Yeah.
Perfect.
Well, pink hat guy, the guy behind the Cubs home base.
Oh, so his wife knows that he's not cheating.
Yes. He's an Ojibwa alum. So
that's a sweet story. That's
he sponsors the softball teams when we have our little yearly event. It's quite
all right. Yeah, Yentas. So, I got more news. Supermicro shares fell 6% on weak preliminary results. The company says they expect to report $5 billion in revenue for the quarter, down from previous guidance of $6 billion to $7 billion. SMCI, we don't talk about them a ton, but they were a big move yesterday.
they were a fraud, then they weren't a fraud, then they got included in the S&P 500, and then it was still maybe a fraud, and then like like it's one of those wild ones.
How can you add this company to the S&P with all the things that are going on behind the scenes?
Don't worry about it, girl.
I don't know.
Yeah, I haven't touched this thing.
Yeah,
in years.
It's got high volatility though. I mean, it moves. Stock is actually up $1 here pre-market, so cancel crash there as well.
We'll see what happens, but just be careful in that stock. So
yeah.
Oh yeah.
Apple abused its dominant position by charging app developers unfair commissions. That was the ruling from a tribunal in London. That is how they ruled, which was a blow, which could leave the U.S. tech company on the hook for hundreds of millions of pounds in damages. Apple, I think, set to report earnings soon. What are you doing in Apple?
Why do they call it a tribunal?
Because it's a tribunal. It's like on Survival. It's a tribunal.
Yeah. Like you are the weakest link goodbye kind of thing. Like what the hell is this? Apple, I do not have a position currently. I traded a little bit of the upside volatility into the spike that it had on the China sales data.
Yeah, the iPhone 17 hit all new highs. Yeah.
Yeah. That $10, $11, $12 up move, I sold some upside volatility, took it off pretty quick. I've been trying to trade in and out of stuff. Like, I don't want to stick around too long in some of these things. They've been good. It's been a good trade to sell the upside volatility into these big spikes because it's usually come in pretty quickly and or the stock has kind of pulled back a little bit across the board. Like we've seen it in Oracle and AMD and Apple. Like a lot of these stocks have had these big one-day moves. If you're selling some upside volatility, it's been a decent trade if you manage it quickly. If you're not a greedy person.
How about you, Mikey? What are you planning on doing in Apple for earnings?
I will likely go back to the well and do a call diagonal spread.
Okay.
Assuming that we don't have a blast off prior to earnings next week.
Okay.
But yeah, I think that's probably where I'll land. It's at highs, but this is I don't see how they don't have numbers that just explode off the paper. So yeah, I'll probably do defined risk, keep it small, but play it to the upside.
Yeah.
Alibaba. Oh, I'm so sorry.
Sorry. I was just going to say bonds are rallying. They're above 119 right now, the highs.
Yeah. Interest rate cuts are all but guaranteed now.
Yeah,
The probabilities were falling. They were pricing in some risk based on the CPI, but they've now snapped right back up. 99% chance we get a 25 base point cut on the 29th, and a 99% chance we get another 25 base point cut in December.
There you go. We should call them, they shouldn't be rate cuts. They should be market stimmies.
Yeah.
We should bring back stimmies and just call these market stimmies. I think.
You should contact your mortgage broker because you might be able to refi your mortgage.
Well, not until they actually do it. Yeah.
Real fast, I'm going to skip a story here. A ton of layoff notices came through yesterday. I'll run through just a couple. AMAT, Applied Materials, announced they were laying off 4% of their workforce. The cuts come amid automation, digitalization, and geographic shifts, the company said. AMAT has approximately 36,000 full-time employees. A 4% layoff would represent around 1,400 people. I don't know if you're trading the stock at all.
No position here, but I mean, I think these are going to be more prevalent.
So then Rivian announced they are laying off more than 600 workers. EV makers are facing a more challenging market amid changing regulations under the current administration, like the EV tax credit is going away. So Rivian says they are laying off 4.5% of their workforce as they try to meet market challenges. Not sure what Rivian is doing.
Rivian trading at 13 right now. It's kind of the lower end of where it's been trading. It has earnings on the 4th. But I mean, if it does anything like Tesla, it will be up or at least flat on earnings.
And then the big one, the big matzo ball yesterday, Target, big box retailer Target, announced they are cutting 1,800 corporate jobs. That is the company's first major layoffs in a decade. That amounts to around 8% of Target's corporate workforce. The retailer is fighting to get back to growth, and they are poised to get a new CEO in February. What are you doing in TGT?
Buying it. I have a call diagonal spread 95-100 it's a shorter term one though, because I've had it on for quite some time. But yeah,
Should
seeing a
help
little
today.
bid. Yeah, seeing a little bid today. It's up almost $1 pre-market. But
Nice.
Yeah.
Staying long. You can't fade the bullseye. Come on.
Yeah.
There you go. Not quite layoffs, but Starbucks Workers Union is set to vote on strike authorization today. The union says they are planning a wave of rallies and pickets across the country with its baristas. Workers United began organizing at Starbucks in 2021. Some of the stores that have had the most labor unions have since been shut down by the corporate arm of Starbucks. What are you doing in Starbucks?
I've traded puts there. It's bounced a little bit, so it's gone from like the mid 70s up to about 85 here, but still on the lower end of where it's been trading. You got earnings coming up middle of next week. Not exactly the sexiest stock to trade. Volatility isn't that high, but maybe look at it when the market opens today.
Okay.
Yeah, we've been trading it similar to Target, just buying it when it dips to the annual lows, and it's been a nice little trade.
Yeah, buying dips in general.
I mean, yeah, it's just it works every time until it doesn't work anymore.
That's why retail is winning. Hey, real fast, this is fun. Chipotle wants you to dress up for a Halloween food deal. Chipotle is bringing back its burrito. Yeah. Halloween celebration, giving Chipotle Rewards loyalty program members a holiday deal on food items. If you visit the restaurant dressed in a costume on Friday the 31st, you can also dress up at home and submit your photo to capture yourself, and you could win $500 of Chipotle VIP cards. So there you go. This year, if you dress up in costume, you can get a $6 entree deal. Typically, entrees at Chipotle cost between $11 to $15. So there you go. Back in 2019, though, this deal was $4. So inflation. But I love a burrito.
Yeah, I might have to go there.
What are you doing in CMG?
It's another one of those stocks that hasn't been able to stay afloat, sitting at the bottom of its annual range at 40.
Yeah,
it's all the way up at 68 at the highs earlier this year. But
yeah, they took the juice out of that stock with the split. They did too big of a split.
There you're back again.
Yeah, like it's too low now. The gamma isn't there anymore. Volatility is relatively low. They kind of nuked the tradability of the stock a little bit. You got to be at the 100 mark. 100 is the sweet spot. $100 to $200 stock price. That's the sweet spot. It's inflation, right? I mean, like 10 years ago, $50, perfect. Now, got to be $100, $200.
Well, speaking of food deals, John, I'm going right to my video today. Every Friday, I like to scour the internet to find food dishes to see, to do a little trader taste test. And as we finally start to feel like fall with the temperatures plummeting, it is soup season. But here is a way I have never seen to level up your soup game. Pretty sure you could replicate this and do it at home. Look at this. I don't even have words.
Herb butter croissants for tomato soup. We're gonna dip our croissants in garlic butter here and then roll it around in 2 different types of cheese, Parmesan and cheddar. And now we're gonna take it to the oven so the cheese melts on the tops of those croissants, get nice and crispy. Serve it garlic herb butter croissants for tomato soup. We're gonna dip our croissants in garlic butter here and then roll it around.
That could just go right in my mouth.
Yeah, that's good. That's perfect. Anytime you get that crispy cheese on anything, you put that on anything, it's just perfect.
Soup season, baby.
Yeah.
I would definitely utilize that.
Yeah, that was good. I like that one.
Well, thank you. A pleasure as always, boys. What's coming up next?
Well, we got some confirm and send questions, and then we got Jamal coming in right before the opening bell. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Mikey, my friend, we are back. E-mini's up 39. You got the NASDAQ up 200 and change, the Dow up 200 and change. The biggest mover of the group is the Russell, up 34 and change here. Oil basically unchanged, but has had a really nice rally, 61.81, up 2 ticks right now, 2 cents, but is up 5 or 6% in the last couple sessions here. Volatility futures coming in 30 cents. We're at 18.55. The VIX itself at 16.69, down about 3.5%. So a nice vol crush coming in the VIX. You got bonds up 2 ticks here. They were just above 119. We're at 118.29 right now. Gold had a nice little bounce here of about 30 or 40 handles. It's only down 50 at just under 4,100. Silver as well has bounced, but still on the weaker end, down 77 cents. You got Bitcoin Spot up $200. The future's up 1,000. They had a nice little rally. They've given up a little bit of that too. So see if we get some two-sided action today. It seems like we're going to be up, but maybe not much more than what we got here on the open. Or not on the open yet, on the initial CPI release.
Yeah, it looks like we had a swift reaction to the number. We just like shot up 60 points, and now we've slid back down to lower levels. But yeah, I need SPX to stay under 67.60 today. So I think I'm going to be in a scenario where I need a 20 point sell off here.
Okay. Doable.
Yeah. It's definitely on the table. Definitely on the table.
Sweet. Let's get into it. We got a couple confirm and send questions on this beautiful Friday, October 24th, 1 week before Halloween and our event in San Diego. If you still want to sign up, tastylive.com/events. Let's do it. All right, Mikey, do you think short-term treasury yields staying this high will eventually hurt the stock market, or has the market already priced that in? And as we speak, treasury yields have come down pretty significantly given the move that we had in the last 48 hours. Do you think rates matter is the big question?
Not really. I mean, yes and no. I mean, I don't trade them directly. You can trade them directly, but I think to answer the last question, does the market already price this in? I think the market will always price things in, and then you can, after the move has happened, you will back into the narrative ultimately. Like that's how it always works.
Yeah, I think that's a great point.
Look at the chart of gold. Like you look at the chart of gold and you're like, okay, this is ripping, this is ripping, this is ripping, and then you get the narrative of gold-backed securities, all these things. And it's like, okay, then now you have all the countries that are buying gold come out of the woodwork. So it's like the move happens and then you hear about it later. So I think with rates and bonds, especially with like interest rate cuts and things like that, I mean, especially now, we are basically guaranteed to get a 50 basis point cut through the rest of this year.
Yeah.
And a 25 in October, a 25 in December. But even with the fluctuations of the probabilities of that, it was still always like 90% that was going to happen. So, and we know that the Fed doesn't like to surprise the market because that's what creates shock in the market. And that's not their job to create shock.
Liquidity is coming.
Yeah.
We know that liquidity is coming. So
But yeah, I think the market prices in what is happening in real time. And if you can get ahead of it, that's amazing. But yeah, I would say it's already priced in.
Cool. Next one, please.
If volatility has stayed low for months, how do you keep trades interesting without taking on too much directional risk? Well, if you're trying to stay neutral, it definitely is harder in ETFs because a lot of the ETFs tend to just drift up and to the right when you have super low volatility. But that's when we kind of go back to the high IV equity world, right?
Yeah.
I mean, you can always find a product within your price range that has 50, 60, 70% implied volatility if you're trying to sell a strangle or something like that. IBIT is a perfect example. Like IBIT is my year-long trade. I've had a strangle on the entire year, and implied volatility in IBIT has not dropped below 50%. And if it has, it's been like 49, 48. So it's like, regardless of IV rank, you can still get plenty of premium for taking neutral risk in there. And that stands for a lot of different equities. You just have to figure out what your price range is and then figure out what you want to trade. But there's always equity opportunities.
Get a little more directional too, diagonal spreads, calendar spreads, short premium positions. You can define the risk. That sort of thing is kind of what I lean into as well. But I think your point about moving into higher volatility equities, that's typically what we're looking for when, market volatility comes in significantly. Next one, please. So when I sell a strangle and then volatility contracts, how much of my profit is usually from the volatility drop versus the underlying price movement? It's a good question.
Yeah.
Go ahead.
You go ahead.
Yeah,
We're gonna say
I was going to say it's hard to put an exact number around it.
Yeah.
A lot of it's going to depend on time too. So if you get like, I sold that VST put for what's your assumption on Wednesday, and I closed it yesterday for about a 20% of the max profit. A lot of that, I mean, the stock went up $5 or $6, which is relatively significant, but most of that was volatility contraction. I mean, you don't get 20, like all else being equal, if one day passes, you should make on that put, 10 or 15 cents, maybe, not $1.50. And so that the delta move helped, of course, but that volatility came in significantly because the decay curve that's not what you were expecting out of that position. The decay curve was much steeper than what was projected when you put the trade on. And so volatility came in significantly. So for the most part, it's hard to say an exact number, but you will know. When a position moves 20 or 30% overnight, that volatility came in that stock.
Yeah. And I think another way of putting it is if there's a directional move in that stock, but you're very profitable on that directional move with a neutral strategy, that's when you know that vol has come in more than the directional move. But at the end of the day, the textbook definition of Vega is the rate of change of your options price given a 1% change in implied volatility in the expiration that you are trading. So if you are trading a product that has big swings in implied volatility, you have more opportunity to get profit from implied volatility crushes and expansions.
Good stuff. Let's get to the last one here.
How much correlation is too much in a portfolio of short premium trades before it starts to lose diversification benefits?
So I think diversification comes not only from the things that you're trading, but also the strategies that you're using. So you got to have offsetting stuff. You got to be short on some positions. You got to be long. You got to be neutral. You want to have different strategies in play too, so that certain things are working in different market environments and days, day-to-day movements. Like today, volatility is coming in significantly. You got a up move. You want to have positions that are going to benefit from that. So, from a short premium perspective, volatility is getting pretty low. So you should have less short premium on. Like that's just how it works. So I think that's, kind of the answer here.
Yep. And you should also just be careful with correlation because we know that when there's big macro market moves, correlation can go to 1 where everything sells off and everything rallies. So correlation can help you diversify, but it's not ever going to be the be all end all unless you are long volatility products, short the market, or vice versa. That is one that will still be inversely correlated, especially in those big market moves.
Well said, sir. Fantastic. We're going to take a quick little 90-second break, come back. We'll bring on Jamal for This Week in Stocks. Then we got the opening bell coming up, so stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
not a paid, you're not getting paid for this advertisement.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, we are back, my friend, and we have your new work wife. This is I feel like I am the third wheel here as the Gumada of the group here. Jamal Chandler, good morning, sir.
Oh, come on now, don't be jelly. Come on,
I am jealous.
You know, we can all friends. We can all hang out together, and we can all go on date together. We can all go to dinner together.
Yeah,
we can do that.
Yeah. Hey,
what's going on, guys? How you doing?
You're welcome anytime.
What's going on?
We're thriving. Markets up.
Thriving and surviving.
If we open our eyes and the markets are green, everything's great.
Yeah.
This is true. This is true.
It should be a good day.
I mean, it's been wild, man. I feel like that's kind of what these slides for This Week in Stocks sort of depict. I mean, it's just been wild in a good way. First of all, there's so many different things to trade. I mean, the fact that you have as many positions on as I do tells me everything I need to know. I think we all have a lot of positions on right now because there's so many different things going on in this market.
Yeah, it's been flying around. I mean, this volatility crush is just epic over the last, week.
Okay, see, you bring up DraftKings. Now we gotta talk about it.
Yeah.
But in a nice way. Look, there's a lot going on from the standpoint of the scandal. A lot of people have heard about it. It was huge yesterday. To some degree, it's kind of splashy, you know. It's splashy on purpose, I think, clearly, because they've been doing research on this for a long time. They've been doing a lot of data gathering, and they dropped everything the day after the NBA started. Come on now, you had this like a week ago. You could have easily brought it out then. They waited for the right time.
Yeah, DraftKings is at the lows, but it's up about 50 or 60 cents here in the pre-market. I mean, you were saying on the break that it's existed forever. Obviously, this like gambling ring in some sort of form, but this one seems of epic proportions.
Yeah.
I mean, it's just it's a little crazy. I don't know if these guys. I just don't know. I don't know why they would ever risk this.
Well, they got Terry Rozier's family locked up somewhere. Clearly, I mean, I don't understand it neither.
Maybe. I mean, but like. Yeah, that's got to be the only reason. But if that's not the case, I mean, what do you got $100 million contract and you're trying to scalp $100,000 from some Johnny at a blackjack table? Like, what are you doing?
Yeah,
you know, come on.
Did you see? I think I at least I thought it was. At least the caption on whatever video I saw said so. So whatever, take that for what it's worth. But I thought it was after the first night of games in the NBA. Chauncey Billups was talking about the team, and he said, "Let the chips fall where they may when it comes to how the rest of the season is going to go."
Yeah,
was that like a hat tip to to whoever was holding his family hostage?
Yeah, I know, right? I don't know. I know his one particularly hits me hard because he's like my age, and it's like he just went into the Hall of Fame. And you won 2 championships with Detroit. You can make money anywhere. What are you doing?
It's not even about money at that point. It's just about like the rush of doing something in that regard. Like unless like you said they're doing this against their will, which is also possible considering the families that are projected to be involved. But
yeah.
It's all crazy. But yeah, I mean, my favorite thing whenever these bubble up is I always just go back to the Twitter videos of some of these guys that do insane stuff. Like at the end of the game when everyone else is standing around and then you've got Malik Beasley sprinting across the court to score the bucket to move the spread. They were winning by 9 and he had 8.5. And everyone else is looking around like, what is this guy doing?
Yeah.
Or the college player that instead of taking a knee, he took the ball and ran 80 yards backwards to take a safety for his own team. It's like, oh, you're clearly gambling. Like, there's no reason for you to ever do this unless you are. Like, it's funny to see those videos.
Yeah, it is pretty funny. I guess the last thing I'll say on this is I hope it fixes some gambling things. Because like one of the big things, and I was talking about this with my son last night, my 22-year-old who came home. We were talking about like how sometimes they freeze lines. Like that's the one thing that I think annoys me. You know, how often do things get halted in the market? Like not really, unless there's extreme volatility. They halt stuff in games all the time, right? We were talking about last night. We were watching the double overtime game with OKC. And he's like, well, you know, people are going to keep betting the over. I'm like, this game's frozen at this point. There's no betting allowed in this game. And that's usually what happens. And I hate that. And I think that's the thing that differentiates how much I bet versus how much I trade in the market. There's no frozen lines. You can pretty much bet up until the close. I mean, you know, like that's the difference.
Mm-hmm.
Agreed.
You want to talk about the week a little bit?
Yeah, let's do it.
Let's do it.
We got that out of our system. Vanetta said she had something for us, and then we didn't talk about it. And I was like, you got to talk about this.
We have to. I mean, it's like the biggest thing going on. Dude, that thing hit CNN. That thing hit ESPN. Everything. I mean, come on. That thing hit Fox News. That thing hit every major network. It's only natural. It hits Tasty Trade. Washington buys it all. Speaking of buying it all, I mean, Washington seems to be buying stakes in a lot of different stocks right now. And I feel like that was one of the biggest news of the week once again. Let's move to the next slide. So we've had about 22% of the S&P 500 reporting earnings so far. 85% have beaten forecasts. Truth be told, though, shares have underperformed on some things, I think, by and large. We've seen situations where stocks are beating estimates and they're kind of underperforming as far as their performance on the day after. And of course, if they miss, it's even worse actually, which not many have, but we've seen that. Tesla and Netflix, of course, headline earnings this week. We saw the shares fall in both of them. For Tesla, it was this Brazil tax issue. And sorry, for Netflix, it was the Brazil tax issue. And for Tesla, it was just literally they missed earnings. I got to ask you, Nikki, have you heard of this K-pop Demon Hunters? Did you watch this thing?
I have heard of it. I have not watched it.
It's huge, man. It's like,
yeah, that's a new thing. I mean, your kids probably have a Labubu.
No,
in that
no,
same realm.
My 13-year-old that looks like he's 17. No, he doesn't. He's not into it. It's Roblox for him. It's Roblox. That's
okay.
That's where life begins and ends, is Roblox with him.
All right.
Yeah.
Yeah.
I know. I got to get more shares in that thing. I'm telling you, they find a great way to like get kids addicted.
Yeah.
I'm going to stop there because I might say something about Roblox. Delayed CPI report was released this morning, showed inflation is back at 3%. It's highest since January. Crude oil had its best week since June, and Mikey and I have been looking at crude a lot. I'm sure you have. I mean, this thing was, we thought it was going to, Tommy Tuesday basically was telling us about the lower range more recently, how it's been going in contango. We thought this thing was going to be basically about a 55 handle. And once again, this market has a surprise for you. It jumped even higher over the last 2 days. Trump administration, has sanctions on Russian oil companies. They just feel like they're not moving enough to prevent this war in Ukraine. And after last week's close of 2078, VIX fell to 17 and is probably falling lower. That was yesterday's close.
Yeah.
VVIX is back below 100. So these are just a few of the things going on. We got more though. Let's move to the next slide. Massive move in gold. 7% high to low range on Tuesday. I completely pounded the table on this on Monday on overtime. I couldn't help it. I mean, I just thought it was nuts. But prior to that move, we had seen the previous 2 Fridays were the only real down moves in the previous 3 weeks. And then we came in on Monday and it just, mooned even more, almost 4,400. And then the levees broke. 2-day down move. But it seems to be stabilizing. And I think it's going to be interesting to see where it moves from here after CPI.
Yeah. You also had that stat of the nine up weeks that you brought to the table, I think last week for this week in stocks, where it has never had a 10th up week in a row. And that was perfectly timed as well. So
thank you, sir.
It was awesome and made me a couple bucks. So
it was ridiculous.
Crazy.
I know when something is out of control. That's for sure. Because I've been out of control. So no, I'm just kidding. Let's move to the next slide. SPX 1 month skew has steepened to 1-year highs from our friends at the SIBO. This is essentially we're seeing a little bit more bid to the downside to some degree. That was actually one of the things too in oil and crude, in gold, by the way, different from this. But I think that was one of the other things to me that stood out. Speaking of skew got flat in gold, and we never see that, right? It's usually to the upside. So to me, that felt like, okay, something's about to happen soon. But different from that, this is SPX skew, of course, and we're seeing skew similar to what we saw during last year's late run to the upside. So take that for what it's worth.
Yeah, it's skew is a reflection of both sides, the up and down. The skew index is right at 154 right now, which is kind of middle of the range. It's not super high in terms of its range, but you've certainly seen it with the pop and volatility that we got on the sell-off, that the tails were juiced up. So we'll see if some of that comes out today.
Let's move to the next slide. So going forward, we get a little busy here. Of course, we had CPI today. The things in the black, of course, are macro. Who knows if we actually get them? But next week we got FOMC of course, rate decision on Wednesday. I don't even know if it's a decision at this point. I mean, seems pretty well forecasted. We're getting a 25 basis point cut. Earnings, we got BA, UNH, we got Meta and Microsoft midweek, and then towards the end of the week, we got Amazon and Apple and ExxonMobil. We definitely are going to have an end of the month. We usually see some wild flows there. I don't know if we're going to get PCE though, but market seems to think it's going to be a big deal just based on the way that this chart looks. It seems CPI and PCE are equivalent. The week after, we get more earnings from Palantir, Uber, Humana, Robinhood, AMD, MP, which I don't know if that's going to move, but again, that's been at the epicenter of a lot of these things that the government has been buying. Talked about buying those a couple of rare earth metal companies, that one in LAC and even maybe USAR. We got ConocoPhillips, and then I don't know if we're going to get ADP or the non-farm payroll. They just came out today and said we're not going to get another CPI. Who knows, man? And then the week after that, Disney earnings. Let's move to the next slide. So, yeah, I mean, the title of this thing, Washington Buys It All, we've already heard about a lot of the rare earth metals. The big rumor yesterday was there might be purchasing stakes in quantum computing companies. And this has been a thing. I mean,
Yeah.
This has been a thing.
No, we sat and talked about, Alcoa or FCX as other, metal plays, and those have moved too. It's nuts. It's nuts.
You know what else has moved is coal companies. Again, that was something that was mentioned a lot in the first administration. We're going to make, coal viable again. It was the big phrase. And if you see companies like CNR, I know that was one of the ones that had been moving more recently. I've seen a couple of other different coal names. But aside from that, I think this has been interesting in this market where you see, I talk about this a lot. I mean, because I just notice it. And I find comfort when I see big groups of names moving. So it's been the rare earth metal names. It's been these nuclear names. It's been these quantum computing names that have been moving in large groups. And honestly, it's provided a lot of trade fodder for us. But there's a lot going on there.
Yeah, for sure.
Yeah, I mean, dude, what year is this? IBM, Honeywell, Intel, they've been the big movers on earnings to the upside more recently. Target's supposed to be laying off 8% of its workforce and eliminating 800 open roles. I feel like this is one of the most interesting stories of the week that really nobody's really talking about, considering the kind of week that we've had. NHL strikes its first ever deal with prediction markets, Kalshi and Polymarket. That's not nothing at all. And you talked about DraftKings being down. I mean, mostly it's down because of the news surrounding some of these prediction markets more recently. So
yeah,
I think it's something. And then, of course, next week we got the FOMC decision. Research, October 21st, market measure why volatility doesn't follow price. Check it out.
That was a good one. I will mention the Polymarket news of the 15-minute binary Bitcoin up or down markets. I think that's gone too far. 15 minutes.
Wait, seriously?
Yeah. They're launching 15-minute up-down prediction markets. So you just, will Bitcoin be up or down in the next 15 minutes? That you think that's where we're going, Jamal?
I hope not. I think, you know what? I think the further you go, I think eventually you push back. And so I've talked about this with people a lot. Like there's a lot of people who love trading zero DTEs. I think at some point in time, that's going to get pushed back to the point where people start trading more 2 and 3 month out. It's a fun thing right now, but people are, it's just eventually, yeah. It's you know what it's like? It's like in sports right now, in NCAA, there's a dude from the G League that's going to be playing in NCAA. And that's too far. Because you know what? You weren't allowed to go to the NBA and then come back and play in college. Why are you allowed to go to the G League and come back and play in college? That's too far. And it just happens sometimes.
But yeah, the NHL Polymarket deal is pretty genius because it gets them out of the jurisdictional issues that DraftKings, FanDuel, Flutter, like that's bravo to them. If they're like getting into the Polymarket versus going your traditional book route is very interesting.
It's just another app I got to download on my phone and deposit some money into.
Hey, you'll get a bonus though.
I got sprinkle of cash in 100 different places. I start to lose track of it. So
that's exactly the way that it's supposed to work. And then at some point in time, you forget about all of them, and then you got to go to those websites to figure out where you have cash somewhere.
Good stuff out of you. Thanks for joining us today. We're going to take a quick little 90-second break, come back. We got the opening bell coming up. E-minis at the highs up 46 and change. NASDAQ up 230. Buy the dips, it seems. Works forever. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Mikey, we are back, my friend, and we are getting into the opening bell here. We've got E-mini S&P 500 futures near the higher end of where they've been trading, up 45 and change here. You got the NASDAQ up 215. You got the Dow up 240, and the Russell, the strongest of the group, up 34. Oil futures up 8 ticks, 61.87. Volatility futures at 1850. The VIX smashed to 1643. Bonds down a tick. They were in the 119 handle. They've sold off a little bit from there. Gold has bounced about $60 from the lows. It's only down 15 now. You've got silver down 32 cents. It too has had a nice little bounce here, and Bitcoin has remained strong. It seems like it's going to be a risk on open here as we get into the end of the week.
Yeah. I think markets were waiting for this data. The data came in a little. There we go.
There's our bell.
Nothing alarming with the data. If you look at the FedWatch tool, the probabilities for interest rate cuts were down at the lower 90s. Now they're up at the higher 90s. So we're getting 50 basis points for the rest of the year, and government shutdown prediction markets have it past November 16th. That's the biggest probability. So that's a pretty long shutdown, and we're already like a month in. So yeah, I think because of that, we may just see low vol grind higher until things change. But kind of wild to see the reversal from the big sell-off we saw, the big shock in the market, and now it's completely erased, and we're now at all-time highs.
The dips happen very quickly, yes. E-mini's up 40 right now. Some of the stocks that had earnings, we have Intel up $2 and change. I did that crab trade yesterday. We can look and see if that's moved at all. I think the market should be open here. I also have a strangle on that I'll have to roll at some point, or maybe even take off. That hasn't moved all that much. These options, this crab trade kind of basically flat at this point. So I'm going to leave that one on. NEM is another one that I had an upside crab trade on. I did a 1x2, so I'm long the December 90 and then short the hundreds against it here in the November 21st expiration. Those markets kind of stink, so I might hold off on that. On the high option volume list to the downside, Decker, this was another one that had earnings down 14% and change here. Obviously, you got the VIX basically going to zero. Who cares about volatility? It's done, dead. On the upside, you got your Beyond Meat. That one's moving around a little bit. You got some of your quantum stocks in there. Oklo's up $8. You have, MBIS is in there. The SanDisk. Have you looked at this stock?
No.
Well, it's a memory chip stock. It's gone from 40 to 176. You remember the SanDisk, the little external memory chip you could buy for your phone when you had when you needed those? That's what it is.
Perfect.
In terms of the S&P 500, which is one that I like to look at here, I go to the S&P 100 list, look at the biggest movers to the upside and downside. On the downside, you got Tesla there, Netflix, which can't get out of its way. On the upside, you got Intel in there, AMD's up 10 and change, GD, which was another one that had earnings as well this morning, I believe. PayPal's up $1, Goldman Sachs. You got some of the banking stocks in there. So it's a buy everything day is what it seems like.
Yeah, it seems like we're just fluttering around this up 40 mark. But yeah, volatility getting crushed. The VIX is back down to 16. It's
amazing.
Not looking good for the Bears. Well, not the Chicago Bears. That looks great. But
those
market.
The Chicago Bears look good.
Yeah. But yeah, it's just wild to see that the shock in the market is gone. Interest rate cuts for the next two decisions are completely priced in, and we have a lot of tech stock earnings coming up. I think that would be the only thing for the rest of the year that would create any panic in these markets, is if you get bad numbers from Apple, Microsoft, Amazon. But what's the probability of that happening? Close to zero. given the AI, the demand for these products, it's just. I guess the only thing would be if the numbers are good, but they're not great, and you see a big sell-off in these products, that could create some volatility. But it seems like we're looking to 2026 already.
Listen, you got to have some major cojones to fade into next week. I mean, given that we have all those big earnings coming up, maybe today you get a little bit of profit taking, but I don't know if you can with the VIX at lows. You got all the big name tech stocks. There's going to be big numbers thrown around. I don't know if I have the stones to fade that.
Yeah, it's a tall task, that's for sure.
Yes, E-minis right now up just about 50. We're at the high of the session here. Higher,
more.
Yes, Bitcoin selling off a little bit here from the highs as well.
Yeah, gold was down significantly pre-market. That has been zapped as well. But it's kind of crazy to see Netflix inability to rally or reverse given the strength of the rest of the market.
Yeah, Netflix has been a dog. It's kind of a surprise. I agree. I got long it on the close with you yesterday. That trade really hasn't moved. We did the 1200, 1225 call diagonal spread, so got some upside delta there. I don't know. It's easier to get long that sort of name compared to, an AMD that's moving, $15 more to the upside. It's tough to look at that and say I got to get some of that.
That's fair. But yeah, I mean, the craziest chart of the week is IBM for me. I just can't believe I can't believe it.
It was just like, oops, got it wrong.
Yeah, it literally looks almost like numbers were digested wrong and created a sell-off, and then they were like, wait, this is wrong. We need to buy this now.
Yes.
Like I don't think I've ever seen such a strong sell-off for earnings that were reversed in the same day or the next trading session. I really don't think I've ever seen such a reversal in sentiment in such a short period of time.
E-mini's up 53 now. We're at the high of the session. Cancel crash. The 1 day crash that we had.
Yeah. I do need to roll this IBIT position eventually, but given the strength of the market,
you just hold it. Why even roll? I mean, you got the delta. You need the delta.
Well, the nice thing about this position is it's not really going to matter when I roll, but it would be better if I can roll with IBIT above 65, just so I can get a little bit more premium in the 75 short call. But I've looked at this a couple of times over the past week, and the credit is the same. It's around 250. So I'm not expecting to get any kind of massive rally here, but again, regardless of when I roll, as long as we're around 65, ideally we're above 65 to get a little bit more premium, but we're looking at another $2.50 roll, and that will basically take us to the end of the year, and we can do a glorious anatomy of a trade on this strangle that has been one of the best year-long trades we've done here on this show.
Yeah, for sure. SPX sitting right at 6,800. Do you think we just kind of pin this all day today?
Yeah. I love a good narrative.
That's the move.
Yeah.
IV rank at 1. It's incredible the speed that we've had of this vol just coming out. I mean, it's just incredible. Just incredible. Good stuff.
Absolutely nuts.
All right. Well, do you want to take a quick little 90-second break and come back with some trade ideas from the peeps? They've been absolutely on fire. So yes. you better be ready to sling them.
I'm ready. Let's do it.
Perfect. We're going to take a quick little 90-second break and come back with Fast Market. That's trade ideas from you, the viewer, that has submitted them over the last couple days here. So get some trade ideas on here in a moment. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, we are back, my friend. E-minis at up 53. More of the same. The dip has been bought. It seems like Vol is just getting smoked here. I'll be interested to see what people have for us because it's a much different landscape than what we were looking at just a couple days ago. I'm closing out of some of my Intel positions. I rolled my Strangle to December. I closed out of the crab trade. I took a couple bucks out of those. I'll publish those to the follow page as soon as possible. But let's get into it here for some trade ideas. Fast market. Play me some music here. Fast market.
Yeah.
Let's do it.
Love to see it. MCL Iron Condor 65.55. OPEC increasing supply while inventories surprised on Wednesday, carving out a range from Leroy in Toronto, TORO and TO. Okay.
What do you think? Do you have an oil position right now?
No, I was long MCL and I closed out 2 days ago. for like $160, but yeah, this has been a crazy rally from the lows in a short amount of time. So I think 55.65, and this goes along with what Thomas was saying too. He was saying that we should be expecting a new range here, a little bit lower. So yeah, 55.65. I like the range. I think I'm going to go to the big contract and do this one. 27 days. So I actually have a short call spread at 63.64 in CL. But 65.66, 55.54. So yeah, this iron condor gives you $3.10 or $310, risking $690. Buying power is $500. Classic, 1/3 the width. I'm going to the 24-day, which keeps you in the near-term cycle, which it has a lot more implied volatility. But basically, just going to the 24-day last options expiration for the Z contract. But yeah, I'll do this. I'll layer on here.
I had a put spread already in CL that, and I as well as what you had, I was long MCL that I closed out of into the move here, but I had the 58.56, which was up about $100. I was looking to close it, but I figured I'll just sell the call spread. I'll do a 67.69 call spread against it. So I've got that on for a 27-cent credit. So I've got like 60, 70 cents total in the position here.
Cool.
So I have an iron condor, but I legged into it via having already the put spread on. E-mini's up 59, high of the session.
Yeah. Naturally.
More. Volatility coming in 40 cents. You got the VIX down a full point. Absolute massacre of volatility. Next one, please. So we're 1 for 1. CoreWeave. I have not traded this in a little bit. CoreWeave up $6. It's at 129 and change here. CoreWeave 130 calls, bought at 55 cents. Okay, good for you. Looking for $2 to $3 a contract. If there's still 50 cents when you're reading this, would you play this as a lotto trade? Nick Bat. So we got another person. I think this might be a Reddit trade. We don't have an expiration on these. Let's see if if you're long these calls in any expiration, you're looking really nice. Even the 0-day 130s are trading at $1.40-ish. So you hit a home run. If the trade idea is upside over the next it's $2 to $3. I can play the upside.
It must have been a 0-day trade.
Yeah.
Because the 130s were trading for 50 cents yesterday, and now they're trading for $1.40. So if you are listening, I would close this because this is all extrinsic value. And if you get a reversal of this move, you lose all that value today.
Yeah.
So yeah, I would just close it as a home run. And then if you want to stay in it, you could do, if you're trying to keep it cheap, you could do a upside calendar spread for earnings, something like that. Like the 150 short November, long December. That is a $400 calendar spread, but it's much more long-term. You have a lot more time for that to work out. But yeah, nice trade if you did it yesterday.
Yeah, that was good. I'm going to sell the November 21st 100 strike put. I did it at 315. So I will lean long with you in solidarity, but a little bit less aggressive given the move that we've had today. Volatility is relatively high. Monthly implied volatility over 100. IV rank in 19 and change here.
Beautiful.
So I like it. One that I haven't traded in a little bit, so I like that.
Yeah.
Good stuff. So we're with you, Nick Bat, my name brother.
From Baton's Couture. I'm definitely butchering that. I'm usually pretty good at not butchering. MU, November, December, 1 standard deviation strangle. Classic. Betting MU stays range bound from Tyler in Missoula, Montana.
This stock, I have I have some painful trades in this stock, but I mean, I think it does warrant something.
What a move this stock has. I mean, it's up 100% since August.
Why
Late
not?
August. The only issue I have with this stock. So if I'm doing a strangle, I'm sticking it with November.
I agree.
Because December you have earnings and risk on both sides with earnings pending equals not a lot of profit potential with the same amount of risk. So, and the IV is high enough here where you can go to November and capture that premium. So I would stay in November if you're doing a strangle. One standard deviation basically brings you to 185-ish and 250-ish.
Yeah.
If you're just looking for round numbers that are liquid, that's an $800 credit, $2,000 buying power reduction, which is pretty sizable return on capital. But I think for me, I would still like to go defined risk here, given the craziness of this product.
Yeah, markets are not great.
Yeah. You could do a 10-point wide for almost $3 at those strikes, 185, 250. Big range there. So I'll do that. I'll do a short-term 28-day iron condor 10 points wide, selling the 185, 175, and then selling the 250, 260.
I'll do the strangle, leans a little bit short delta, but with the same short strike. So the 175, 250, and I did that at $6.50.
Lovely.
Cool. So we're in them all so far.
Yeah. As foretold.
Yes. I mean, we're doing them all in some way. I don't fade our peeps. Our peeps are some of the best. So I'm taking them all. Let's get to the next one here. TLT. Oh God, after I have to say that, and then you got to give me TLT. Rates go down, bonds go up. That is correct. That's how it works. Tom, see the rabbits, Iowa. Everyone needs a core position to trade around. Covered call on TLT. Buy TLT, sell the 97 call for 30 cents. Roll the call each month and collect the 30-cent dividend until it gets called away. Ooh.
Tom from See the Rabbits.
Cedar Rapids.
See the Rabbits or Cedar Rapids?
For me, I mean, I get it. I think TLT, if you want to have a core position there, you have a larger sized account, go for it. I like that sort of thing. But I think for most people, if you're going to make this sort of trade, you got to make it a poor man's covered call. Even if I know you're trying to do the dividend thing here, but just from a capital allocation, it's too capital intensive to be long shares in this.
Yeah. I got filled in directional solidarity with you. So I just did the zebra. I think the zebra is exactly, I don't think I've ever traded TLT without a zebra in recent years, because like you said, 13% implied volatility, it's just begging for a static delta position with defined risk options. This is a $90 product. I just bought a call zebra with zero extrinsic value in the 28-day cycle. So I'm renting stock for 28 days to the upside for $200. There's just no reason to take the risk of the full shares. I know TLT doesn't move that much, but still, you can get the same stock return with $200 in terms of capital outlay. So the 90-91 call zebra in the 28-day cycle is what I was just filled at for $234.
There you go. I like it. Next one, please.
Ooh, SPX, XSP. Gamma. Constantly on the upside and holding strong around 67.50, selling broken wing butterflies with upside risk, 1 day to go with a short around 67.25 each day. For every 2, I do 1 with downside risk. From Jason in our favorite place ever, Vegas.
Well, this is a hard one to do today, given the move, but maybe I set one up for Monday. Here.
This could be nice for Monday. If you do like a 10 by 20, is that what you're thinking?
Yeah. The expected move is like, right around 68.25.
Mm-hmm.
I guess like 68.35 is really where you're at. Damn, I wanted to do I could do, I was going to go 15 by 30, but that trades at like a small debit. Let me see if I could do a 10 by 20. All right, so I could do a 10 by 20. So I'm looking at the 68.20, 68.30, which puts you right at the expected move. Your break even's at 68.40, and then I'm buying the 68.50 as my wing into next week. We'll see if I can get filled here at like an 85-cent credit. Nope. We'll try 75 cents and then I'm going to let this sit. All right. So I'm in at 75 cents. We're going to play it right to the expected move on Monday.
Lovely.
Let's see if that one works out. Cool.
Good stuff.
5 for 5.
Mm-hmm.
Gotta love it. All right. Meta now looks very exciting. I won't go down. I won't go down 700. It won't go down to 700 anytime soon. I recommend selling the put spread at some 700. Make it 45 days. This is Jackie in Chicago. I did have a Meta put spread that I took off a couple days back. Stock is basically unchanged today, not participating in this rally. It does have earnings in the middle of next week.
Mm-hmm.
You think we do like a little Johnny put spread into next week? Oh, God.
Yeah.
It's so hard. I mean, you look at you have to be at the 700 strike.
Yeah. I think it's fine though. You could do a November monthly 700, 695 for $1.70.
Yeah. Oh, you're going to the monthly? I was thinking just doing the weekly.
The earnings
like into earnings, yeah.
Yeah, I mean, you could do that too. That's trading for a similar premium. But yeah, if you go to the weekly, you have no defense in terms of time if the stock sells off.
Yeah.
But at least with the monthly, you do. So that's why I leaned towards the monthly. You'll still get paid if there's a rally in Meta for sure.
Yeah. I think I'm going to hold off on this one. Wait until earnings next week and assess the situation from there.
That's fair. But yeah, we will definitely be participating with a short premium spread, most likely, because this is an expensive product.
Yeah.
But yeah, I like the idea, but I agree. I'll wait. We'll wait with Nick here, and we'll wait till the October 29th date because it's after the close. So yeah. I like it.
The only one we've missed so far. Next one, please. Oh my God, I haven't traded this stock in quite
Twilio? Twilio.
100? I thought this stock was like a $50 stock.
I think it's going to finish filling the gap in this up move. I'm going with a Jade Lizard 36 days out. Sell the 101 put, sell the 120, 124 call spread. What do you think, brothers? From Ben in West Kelowna. Yeah, I'm in the same boat as you. I have not even thought about this stock in many moons, but let's see. 36 days out puts you into the November 28th weekly cycle.
Okay, I'm going to move this. Let's see. I mean, these markets stink.
Yeah, even like monthly.
Yeah, they're like some of these are more than $1 wide. Some of these are $2 wide.
Mm-hmm.
I was looking at this and it sets up well. It's got high implied volatility, IV rank of nearly 60. You got 70% monthly implied volatility, but these markets they're just not tradable. I mean,
yeah,
you're looking at the 20 delta calls and they're 193 at 315. you've got a dollar and a half wide spread. Same thing on the put side, even at the 100 strike, it's a 90-cent wide put spread. Some of these are even wider. I think I got to pass on this. It's just not liquid enough to trade, unfortunately.
Yeah, I like the idea, especially with capping your upside risk into an earnings strategy here. But yeah, I think the markets are just a little bit too wide.
Yeah, just too wide. Sorry, Ben. We're going to pass on Twilio.
It's all right. We'll get him next time.
Yeah. Next one, please. NVIDIA. Glad VST worked out for you. So this is OK Avocado on Reddit. Has been just banging out winners for us. It's been great. VST up another $7 today. I wish if I knew the future, I would have held that a little longer. But they also closed out of their trade, so I don't feel that bad. Vol Crush today, eyeing bullish Mag 7 calendar plays. Sell to open NVIDIA. We're looking at the 21st 200 strike call. Buy to open the 200 strike call in December. So we're going into earnings here. Earnings on the 6th of November. So you're looking at a 200 strike calendar in... Oh, I'm sorry. I'm looking at VST. NVIDIA earnings are on the 19th. So this is a cheapy upside play here.
Yeah. December, November, 200 strike. I'm 100% in on this.
I did a diagonal spread. I'm interested to see where you went with it. I think we're probably thinking the same thing.
Yeah, I think you can go diagonal spread. But since you did the diagonal, I'll do the calendar so we can compare and contrast.
Okay, very nice. I am long the 190 strike in December. I sold the 200 against it in the November monthly expiration here. So a little bit of extra time, I guess, right around earnings there. So I'm with you.
Yeah.
Thank you to OK Avocado for the VST attendees as well.
Mm-hmm. But yeah, we're in.
Cool.
Baidu, oh no. Baidu pulled back to midpoint between highs and the support line, selling the 108, 150 strangle in November from Sean in Hong Kong. Shout out, Sean. Baidu, 108, 150, November. Let's take a look, see. So this is another one that falls in the earnings cycle. 108, 150 does give you a nice range. But this is a little bit elevated implied volatility, buying power requirement, $2,800 on $120 stock, and picking up $4. I think this one, I like the idea, but I think for me, I would do this for earnings. So like wait until November 17th and then throw this on, because this premium is not going to come out of here until earnings.
Yeah, I don't have any exposure in any of the China names. I had a strangle on from Julia that we took off pretty quickly. IV rank is high here. I don't know if I want the upside risk. I think you have all the China tariff stuff that can kind of, assuming it's a taco, which I think everybody agrees is coming soon. I don't know if I want that upside risk. So I'm going to do a put ratio spread. I'm going to buy the 120, 115 put spread, and then I'm going to sell the 110 against it in the November 21st monthly expiration. I did that at a 51-cent credit. So no risk to the upside. Your max profit, though, is to the downside. So an omnidirectional type position here.
Lovely. Lovely.
Doing something in basically all these stocks, except Twilio, which just it just was too wide to get into.
Yeah.
So let's get the last one here. Thank you, Sean. You. 4 U's. And I put on a position in here yesterday. So call ratio on quad U's, November 21st, you're buying the 30, selling 2 of the 40s against it. Credit of 60 cents, potential $1,000 profit if it goes on a tear, break even at 50. Overall good returns for the money considering the buying power. This from Reddit as well. Expensive pitch. I appreciate your trade idea here. You have to keep in mind these stocks have been going nuts. I did a similar thing in Oklo and figured there's no way that it gets to 175. And sure enough, in like a week, it was at 175. So keep these small. I do have a similar trade on. I did a crab trade, so I bought the 25 in December. In November, I sold 2 of the 35s against it. So I am with you in this trade. I think you brought this to me, Mikey. Jamal was doing some tail type trades in here.
Yeah, so this exact trade we actually looked at a couple days ago, actually yesterday, because Jamal did sell a call at the 40 strike for $2.20 or something like that. So it's come in dramatically on just this lack of movement. But yeah, we looked at how flat the premium here is in this November cycle, and we were looking at this exact trade, the 30-40 call ratio. You can pick up 38 cents right now. Buying power is $300. Break even's up above 50, and stock's at 20. So yeah, I like it as a nice wide ratio play where you're giving up all your credit to get that 10-point range where you can be profitable here. But yeah, again, you got to be just small with this trade.
Small.
But if this thing goes to 60, if you have this on, it's $1,000 loss. So it's not the end of the world if this stock triples in price.
Yeah. It's just a tough hold. Volatility expands and it's they do get painful. They do get painful sometimes. So just stay small there.
Yeah, it can be a mental issue if it does rip like up to 25, then 30, then 35, then 40.
Yeah.
Because you would be seeing losses even though you're at your prime price point.
Yes. So I like it. I'm already in something similar, so we'll call that a yes.
Sweet.
Good stuff. Do we have our final slide to go through? There we go. We got pretty much all of them on. We did a bunch of stuff here. We passed on the Meta trade because Meta has earnings next week, so we'll definitely look at something ourselves there. We also passed on the Twilio trade. That was the market's just way too wide there, so passed on that one. But 8 out of 10. That's
passing, baby.
That
is passing.
That's a great score. I mean, thank you.
Yes, we will take our B in stride.
Yes.
But yeah, I got the crude iron condor on 55.65, 1 point wide wings. The Micron iron condor 10 points wide. Short options are at 185 and 250 in November. And then TLT bought a call zebra 90.91 for $200, and then Nvidia bought the call calendar December, November for $200. So nice and small, great ideas, love them all.
Beautiful.
We're doing well. We're thriving.
E-mini's up 60. You got the NASDAQ up 285, the Dow up 413, and the Russell up 42. The Russell and the NASDAQ, the strongest of the group today. Oil catching a little bit of a bid here, up 45 cents. Volatility getting smacked here off the lows. VIX at 1646. You got the vol futures at 1850. Bonds down 11 ticks, bucking the trend here. A little bit of a weird move there in bonds, given that rate cuts seem to be the soup du jour right now. Gold only down 15. You got silver down about 15 cents here, so a little bit of a buy the dip in the metals. And then Bitcoin has actually sold off. We're at 110 and change here. Futures up a couple $100 here, so seems like it's risk on.
Risk on, vol crush, move along.
Yes, that's exactly it. We're going to take a quick little 90-second break. We'll come back with a market measure. We got a market measure on legging out, so you don't want to miss that one. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back. We've got E-minis up 59, NASDAQ up 280, got the Dow up 415, and the Russell up 46. It's been just a steady climb higher all day. Just buying. Can't stop the buying. You must have them. You must have them today. They are cheaper today than they will be the next time the market opens. That's been the story of this rally here. We got this market measure, and then we're going to bring Marty on for our live from the trade desk. We're also going to have YouTube chats. So if you guys got questions you want us to talk about on air, hit us up there in the YouTube chat. We'll keep Marty around as well to answer anything platform trading, Tasty Trade related too. So, give us some questions there in the chat, but let's do it. Let's get into the market measure here on legging in and legging out. So legging adds risk without the reward. Do you feel this way, Mikey?
It depends on what we're legging out of or into. But yes, I mean, you can add significant risk if you're not aware of actually what you're doing. But I think the one exception is if you have a credit spread, like if you have an iron condor and one side gets blown out, if the other side's worthless, then yeah, you can leg out of that spread and get rid of that risk. But that's really it.
Yeah, I think legging makes sense from individual equities, especially the way things are moving now. In the if you're doing something in like SPY or Qs or whatever, most of the time I'm not legging out of stuff, and the put side, the skewed side usually holds its value. I think the biggest issue with legging comes from spreads, and when you're we get that question all the time. Why not just close the long option? The long option is profitable. I'm going to, leg in when I'm going to sell the put into a down move and then sell the call into an up move. Those are really the bigger issues, I think. But this one should be a good one. Sponsored by the CBOE.
Love them. Love the CBOE.
So let's get into it. So the market has been trading at a wide range since 2025, so even this October so far, which has impacted the strategies we use and the way we manage our positions. I have been much more aggressive with managing positions, especially stuff that moves very quickly. So, if I'm selling something for $4 or $5 and it moves $1 in a day or two, I'm off. I'm not sticking around for 50%. If you're well in front of the decay curve, if you've moved, if a position has moved very quickly, I have no problem taking positions off and legging out of positions into huge moves. It's been a trader's market this year.
Yeah, for sure. I think if you're cognizant of that and you have the ability to manage it, it makes a lot of sense to remove risk that comes in quickly in your favor.
Yes. Next slide, please. So the study that we're looking at is SPY. We're looking at the last 10 years of data, selling the 16 delta, 45-day strangle. We're going to look at managing the entire trade at 50%, managing each side independently at 50%, and the percentage of occurrences on both sides, and analyzing and comparing those results. Again, we kind of preface it by saying, one thing that is different is that we're looking at SPY itself. We're looking at like an ETF that doesn't typically move as much as individual equities. When you look at like, an AMD that's up, $15 today, you usually don't have a 6% move in SPY. So these trades don't move as much. You don't sell something for $1 and you wake up tomorrow and it's trading at 10 cents. These are much slower moving trades. So, the legging aspect is a little bit different, which I think we'll see in the data here with this study. So the next slide, please. So in the past 10 months, up to October, the average daily price movement has increased by 2.4x, and the daily percentage change has increased by 1.5x compared to 2015 to 2014. It's not a shock that over the last 5 years and in this data set, the last 10 months, has been much more volatile from a price perspective. The things are moving much more significantly than they have been in the past. You can see here the daily dollar move is obviously much wider. That's a reflection of just the stock market getting bigger. 2015, the stock market was a fraction of what the size is right now. When you look at percentages, which kind of weights it together, you can see it's much bigger from a percentage standpoint. You're talking about 0.9% of a daily percentage change versus 0.5%. And a lot of those years, the 2015, 16, 17, 18. You remember those days of where, we would wake up and the market would be up 0.1%, couple points, and would just sit there all freaking day. It was the biggest grind, no volatility, no two-sided action. It was brutal. A lot of this data is reflecting that here.
Yeah. And now, what you're talking about was like markets up 7 every single day. Now, market's up 30 every single day. That's just a reflection of the price of the product that has increased as well. But yeah, we've had some pretty volatile times, especially intraday. And that two-sided action has been good for 2025 for sure.
I would say you're getting a little bit more two-sided action in the last couple years than compared to what we've been used to prior.
Mm-hmm.
Next slide here. So as a result, some traders wonder if they should time the market by legging in and out of a position in order to take advantage of this volatile market, as opposed to managing the position as a whole. By doing so, traders aim to achieve more winners with shorter holding durations. I've been legging out of a lot of individual positions, less so in the ETF positions I've been trading. So I think we'll see why with these slides here. So next slide, please. So legging in and out refers to managing multi-leg positions independently, such as exiting a put before the call instead of closing both at the same time. Basically just taking off one side of the trade as it becomes profitable and leaving the other side. You're getting more directional. I think this is something that in smaller sized accounts is a little bit more justifiable, because it's very hard to get directional exposure in those trades. So if you're starting with something that's neutral delta and you're trying to get short delta into this up move, closing out of puts is going to synthetically get you that short delta without putting a new short delta position on, because you have limited capital. So it certainly has its merits.
Mm-hmm.
Next slide here, please. So we analyzed the performance of selling SPY 45-day, 1 standard deviation strangles using 2 management approaches. So we managed the whole position at 50% of the max profit, and then we managed each side independently at 50%. What do you think this looks like?
Well, this is where my initial statement comes into play. Managing independently at 50% means you are buying back that option for still a sizable amount, and that debit paid is risk added to the other side.
Yes.
So when we talk about legging out, we're talking about closing the untested side at 90% profit, 80% profit, like a much more sizable amount where you've basically extracted all you can out of that option if it's a short premium trade. But that's what I'm expecting to see on the next slide.
Yes, exactly. So getting over to the next slide here. So our analysis found that legging approaches didn't help to improve the performance. In fact, managing the whole position slightly outperformed legging out over the long term. You'll see here, it really didn't change all that much. You of course have a larger loss because you're buying in that premium every time, just to what Mikey said of like 50% on one side still leaves a lot of value in that position that you're buying in, and that debit is added risk. And that's why you see your largest losses increase here, because most of the time you were just buying those put spreads or the put back, which is value that is adding to your risk on the upside. You'll see your average P&L, of course, has decreased as well. Not a huge amount, but certainly has. And your win rate goes down. Again, that's all a reflection of just buying in the premium. And the point being that 50% of the value is still a lot of the value left in that option, especially in an ETF where you're not getting as much volatility exposure on entry.
Yeah, totally. And I think when you consider the debit paid adding risk, that's where maybe waiting a little bit longer if you're trying to leg out, try and get more than 75%. I think that will help these numbers for sure.
Yes, for sure. Last slide here, a couple takeaways. So legging in and out increases the complexity of portfolio management and requires traders to take on more directional risk, especially so in like SPY. Managing strangles as a whole position is a more effective strategy than managing each side independently. Not a shock here. I think if you're going to leg out, and you should leg out, of cheap risk, wherever it is. And I don't even look at it as legging out. Like I look at it as taking risk off.
Yeah. And everything is risk reward. When it's harder to manage a debit trade that has like an unlimited profit potential. Short premium trades, you know what you can get out of that position. The more you have on the table in terms of profit, the less you can make going forward, and you still hold all the risk plus the unrealized profit risk. So yeah, if we are legging out of an iron condor, we're waiting to get 75, 80, 90% of that value, because at that point, there's no reason to have that on anyways. But 50% is more of a debate.
Yes, good stuff. Awesome. That was a good one. We're going to take a quick little 90-second break, come back with Marty on the trade desk for our live from the trade desk segment. We're also going to take calls if you got some. You can give us a call at 855-238-2789 or 855-B-TASTY. We'll also take chats from the YouTube section, so hit us up there as well if you got some questions for Marty or for us. We are happy to take them, as well as trade ideas. We'll take those too. It's a tough market. We're looking for some new ideas, so put some trade ideas there. We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something?
Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, we are back, my friend, and the E-minis are crashing. They're down about 17 handles from the highs here. We're sitting at 68.18, up 44 and change here on the E-minis. The NASDAQ up 227. You got the Dow up 345 and the Russell up 34. Oil continuing to catch a bid here, up 40 cents. We're at 62.18. Volatility futures actually bid a little bit from the lows here, 1868. They're down 17. The VIX itself at 1659. It's down 71. So a little bit of a bid in volatility here in the middle of the session. Bonds down 7 ticks. We're at 118.20. They've come off the highs. They were in the 119 handle, so a little bit of a move in bonds there. Gold was just green. It's rallied about 70, 80 handles from the lows here. At 41.40, it's down 5. You've got silver down 22 cents. It too has had a very wide range today. And then Bitcoin falling out of bed here. It's not enjoying the same sort of risk-on move that we've seen in equities here. Futures are at 110.7, down 200, and the spot is down about 900, taking a little breather here. What say you about this market?
Vol's super low. Vol futures are in contango, which means up and to the right with some chop.
I feel you on that. We've got a special man in the house today. Give me a little bit of a deet. Who do we have with us today? Good morning, my man Marty. What's up,
Good morning, gentlemen. Good morning. I feel like almost like a TV celebrity 2 days in a row, right?
Hey, you're the guy now.
Yeah, I remember when I was the man. I don't know about now, but I remember when I was. What's going on, gentlemen?
We had to get somebody that looks as close enough to Scott as possible. So we're
and that's where the comparisons end, don't they?
No. But you're much better looking.
Well, thank you, my friend. Thank you. What's going on, gentlemen?
There you go. Not much. We are just bracing for this market move here.
Yeah.
Shocking that the SPOOs are up 50 handles, right? Shocking.
Another day. It's another buy. It's crazy.
Like as we were discussing in break, it's remarkable. I'm sure that anybody that thought they were fooled 5 months ago was like, it's just can't get in the way of it right now, I imagine.
How does this compare to back in the day being on the floor? Because Tom used to always say, we've never seen a down move, blah, blah, blah. I mean, we had COVID. We had the yen unwind. We've had the volatility explosion when we had XIV, all those like short vol products go to zero. You think it's any different than what it was on the floor, or the mechanics are just a little different?
The mechanics are a lot different. I think that if you look at it in perspective, we always had that line of demarcation in the pit, and as a trader, like 20 in the VIX was like, above 20, you'd get action. And then below 20, it was just like you're doing as a spreader, you're doing your legging, and you're not getting like that type of movement that obviously you're going to see in a 30. But once it got above that 20 and started going into the 30 and 40 areas, then you're getting all this activity. Things picked up in every aspect of the pit business as well as the E-mini business as well. Like Mikey just said, you got VIX's where now at I didn't even see
1656.
Yeah, this would be like mundane period where, and institutions and brokerage houses, they weren't really interested in the business as much as you would think during those times. It would be the second it crawled above 20, then you got a lot of activity, and you got a lot of activity from everyone else. But it didn't stop, like a Goldman or at the time, like a Merrill, whatever, to start putting in these time orders where they're just buying all day long, whether they were covering or establishing a new position.
Those guys can't do anything but be in the market.
Right.
They don't have the flexibility.
Right. So you kind of probably have to pick your individual symbols as you always would, and I guess look for some volatility in them. And then if you're kind of a directional trader, like I said, I've been trading a little bit of Baidu because it just moves, So my mentality is if I see like a $3 or $4 down move in it, I'm gonna try to come in and buy something on the puts or sell a put spread closer to in the money. And then I'll add a call spread on the back of it because, I think I know what I'm doing. That's the problem. That's where you get into trouble when you think you know what you're doing. But as far as,
one-way markets will do that to you. It's too easy.
Yeah. So, Fridays, obviously at the desk, it gets really busy because people are kind of looking at what they have to adjust, what they're going to do, what has to be done. So, I don't trade a lot. Obviously, I can't get too involved in my own business
From a volatility perspective, did you guys was volatility a little bit higher and maintained a little bit longer? Like I'm thinking of, this week, in the last week, we've had a VIX of 30 and a VIX of 16.
Yeah.
That's been 4 or 5 sessions in between those two numbers. Is that how it was, or was it kind of more
I don't think. I think we were getting ranges like they're getting now. I think they were. But what's an inside day now in the minis? Is it 50 handles?
Yeah. That's about
I'm not wrong. Like I remember going, I go, it's kind of slow. It's an inside day. There's a 40 handle range. Yeah. So I think that you would get days, and I haven't been on the floor since 2018. You would get days when they would spike up the vol and you'd see the options pit start to really make moves. And then the guys that were, hedging their option positions with the actual big S&P futures would start coming in, and they would probably do it more spread based. They would do that calendar spread there. But I just think that now these moves are so the intraday move you can get in the minis is, I remember it being volatile in there but not like it is now because it's Twitter based geopolitical comment markets, right? I don't think I'm that far off of base. And Mike, I listen to you talk about fundamentals all the time and what's causing, vol spikes and vol control. You're 2 tweets away from a 50, the VIX going to 50. And that's, just the way it is now. Information is out there, and whether it's, information that's viable to what you're doing as a trader or just information, their markets are going to react to it. So I think now you're getting, the fact that I'm even out loud saying, yeah, it's an inside day, there's a 50 handle range, is just that's what you're dealing with now. As far as trading goes, I guess if you put on your iron condors now and just try to play the decay thing as best as you can, it gives you, it's fun to kind of adjust. As a trader, I like that. I like moving my positions around. I like it.
Yeah.
But, it's a different time now. It just really is. And it's gotten this way. It's become more and more prevalent every single year, right?
Yeah. Yeah.
I don't know what
think
bad
some of
news
it-
is. What's bad news in the market, Mike? What's bad news?
No such thing.
Is there?
I mean, it's just an opportunity to get long.
Right.
That's what it's been.
We've basically had buying opportunities since 2017.
Yeah.
It's crazy. But yeah, I think to your point, the last couple of downside moves that were closer to 100 points were all about what was said in a tweet, or what relationships are falling out versus being repaired. And it's just like something is said on the internet, you see a sharp reaction in the S&Ps, but then by the end of the day, it's like, maybe it's not so bad.
Yeah,
it's been a buy the dip environment for sure.
Right, and the institutions and hedge fund guys, they're waiting for that to to get back in, respond, and fade it or whatever, however you want to do it. It's just a lot different now, and I think in a lot of ways it's better, as a trader and what goes on in the markets, and in a lot other ways it's like, it's just creating constant opportunity every single day for the most part, right?
Yeah. That constant information stream is probably something that is one of the bigger changes in the last 5 or 6 years, where people are watching Twitter and they have notifications on, and you're watching the news and you see these things happen. And now that everybody has a mobile app to trade on, and they could trade on Kalshi and Tasty and Robinhood and all these, and DraftKings and all these other places, you can instantly place a bet. And now even with that stuff, you have 0-day options, the prediction market stuff, where you can take a cheap shot with 10x upside, and I think that's kind of running our market.
It would be like back in the day, you'd see traders and you'd be looking at your front end, your software where you were getting out of trades, and you'd be looking up at the big board, right? Now, if it was like that, everybody would be like this, waiting for something to come on their phone. So from that aspect, obviously, it's unbelievable to have this type of information at your fingertips and everything that is associated with it. But that's the difference now. What is your market indicator with whether it's news or information that's going to come out that's going to make this thing move another however many handles? So to your point, it's just a different time, and I guess Tasty has been at the forefront of making sure you're adaptable to all this information that's going on, or put yourself in a position that you're not going to have to be that adaptable with, right?
Yeah. Very, very good. You got our symbols for us today?
I'm ready for you, gentlemen.
Awesome.
All right,
Let's
at
do it.
number
Let's see what's
20,
on the list.
Beyond at 67, BYND. 19, CRWV at an 18. At number 18, Ford F at 12. 17, Coin at a 33. 16, AVGO, a 15. IBIT coming in at number 15 at 49. Goog, GOOG at 44. GLD at 13 at a 60. Number 12, Oracle, 42. Netflix, huge fan favorite, 14. Number 10, Sophie, 32. Goog L is number 9 at 44. MU at a 41 at number 8. Hood at number 7 with a 31. Number 6, Amazon at a 34. 5, Palantir, 28. Number 4, NVIDIA 16, 3 AMD at a 50. Intel is number 2 at 36. And number 1, Tesla, yet again, 13.
Of course. That move yesterday was incredible.
Yeah,
Mikey's obsessed with the IBM one too. IBM did this.
Yeah. Tesla's,
Yeah, if you ever want to see a buy the dip chart, go look at IBM.
I was trading it about 4 weeks ago and I liked it. You know,
did you like it this much? I just to buy the dip.
Not. I didn't like it enough. Evidently, I didn't want a relationship with it. You know what I mean?
Yeah.
So I decided to break up with it, and then I moved on to Baidu. That's my new lover.
That's your new thing. I like that.
Yeah.
Yeah, that's an incredible chart. I mean, we've gone to
sorry about the earpiece.
265 to 300.
I know.
In no time, it's crazy.
It's just
the only one that really surprises me on that list is SoFi, because they have I guess they have earnings early next week, so maybe that's why. But
stock's up
interesting
$1 today.
Yeah, interesting.
Yeah. Moon it all.
Yeah.
But Tesla is just it's like its own little micro universe. Tesla. It's amazing to watch it, because that's another one that's very difficult to fade. You know, I mean, you can because of the moves, but long-term stuff, it's one you better have your seatbelt on with.
And there's an army of Tesla bulls out there that you just know.
Yeah.
Yes.
You know.
Yeah.
Marty, so these stocks like Beyond Meat, you ever get squeezed in them back in the day? You remember one that sticks out to you?
What was my last big one that I got what did I get squeezed on? GME I was not involved with, and that was like, I remember working that with during COVID. And I think your fearless leader, Tom, had on like 30, 60 strangles on, because it was, this is when it went from like 2 to 29.
Yeah.
And I was talking to a buddy of mine that had it on, and I remember like adjusting and selling the call side, and you were getting juice for like 520 calls in this.
Yeah.
So if you could have sustained the loss, because there's another example. What are you in that? You're basically just short 30 calls in the trade. But that was the last. I mean, recently, I really haven't been trading a lot of stuff. I got squeezed out in Baidu about 2 weeks ago too.
Did that sort of thing happen though on the floor? Did you guys ever find yourself with
God. Yeah, I mean, if you got the wrong way in spreads and they started moving and you had a number on, and back then too, it's hard to put it into perspective, maybe for today's traders, but we were trading big S&Ps, which were 5E minis, so 50 micros. And, you know, I'm not a glory days guy, but a normal size position of 200 or 300, calendar spreads on. We'll put it into perspective. You got 2,500 minis on each side. And when the spread would start moving with the market, because usually it was like, they did it with a lot based on like what the euro dollar futures were doing. Cost of carrying, if they would break and the market would rally, that spread could blow up, 10 ticks on you. But now you're talking about, $250, 100 points. And then the spread, if you have 100 spreads on, $1,250 for each 100 spreads, and the thing would move. There would be ranges in it.
Yeah.
So, yeah, I mean, there's always been that, been that day or days in there where you have a position on and you're wrong, and that's where kind of the discipline thing comes in. But the numbers could be kind of astronomical. I'm sure your father's told you that. You never really hear about the giant winning days from traders, but they'll stomp their feet and make their face, and then when there's a loser on, that's all you heard about. Oh, you're not going to.
Yeah.
Winners, you didn't hear so much about it. But I used to like.
You expect to have the winning days.
Yeah. I used to play like walking on sunshine in the pit every time I saw a guy get like a winning trade, just to let them know that we're aware that there was a trade that they had on that was a winner. Okay.
Keep the vibes.
Well, no, it was done to like stick it to them because I didn't get any of it. Right.
There you go.
Right.
Good stuff. Good stuff. Mike, we got anything in the chat we can pull up here? I know somebody was asking about, or was looking at a Starbucks call spread, maybe doing like a call diagonal spread in there. Somebody asking about kind of upping contracts versus widening the spreads. You got any comment on that?
Yeah, I think Starbucks is certainly a candidate for buying the big dip. Starbucks and Target are two that I think are, staples in the U.S. economy, or at least the people that like people go to Target and Starbucks all the time. Like I don't see these things going away. So seeing them at the annual lows or near annual lows is definitely interesting. Paired with low implied volatility, like 40% implied volatility in Starbucks, 45 in Target. It's pretty cheap relative to other products. But yeah, we talk about this all the time when it comes to wider spreads versus more contracts. There gets a point where more contracts make sense, but it's mostly going to be just widening the spread. I'm not doing 10 1-point wide spreads in SPY. I'd rather do 1 10-point wide spread in SPY.
Right.
Just think about improving your break evens with reducing the ability to take a max loss. If you have a 1-point wide spread, that's a loser. It's going to be a max loss. Where if you have a 10-point wide spread, you have a little bit of wiggle room for some variable loss in there. And your 10-point wide spread once, your break even is going to be beyond where you would have a max loss in your 1-point wide spread. So more often than not, we're just widening the spreads. But yeah, I could get on. I don't have anything in Starbucks, but they have earnings next week.
I did a little call diagonal, a little Johnny one, $2 change.
85.90.
Yeah. What are people calling in about on the desk today, Marty?
Today so far has been just kind of adjustment issues with them, when they should close out. If you have, we get a lot of calls about, just like you're talking about max loss trades. And, usually on Fridays, we try to give, it's always, even if you have a max winning trade today, and you're like thinking that you're going to let it just go to expiration and you're going to get, that's that fixation that I guess all traders have with max profit. But usually we're trying to get you to close out of the risk side, close out of the short side, no matter what. What else? We're getting a lot of guys. I've seen a lot of impetus into people that are trading like in the money, dollar wide SPY spreads, longs like calls. Goes against a lot of it recently. I think that some of the newer traders are trying that strategy out. I don't know if it's from a subscription or whatever it is. Like they'll pay 65 cents for, a $2 in the money SPY spread, and they'll try to get out at 85 cents. But we always, even that, we try to guide clients into just, if you're at max loss or you're at, if you're at a max loss trade 3 days before expiration and you're not in assignment risk, don't get out of anything. Yeah. Just hold it. The winning ones, just take your money and go and enjoy your weekend, because assignment risk can happen, till 4:30 on a Friday.
Yes, so that's like expiration risk, and there's a lot of people get caught up in that. I get that email all the time. It happened when the S&P inclusion. So at each quarter, there's like some stocks that get removed or added, and at Robinhood was one of them where it was a top speculation that it was going to get added to the S&P 500, and so the calls and puts were bid into the close of expiration. So they had extrinsic value when the market closed. And people, I had tweets and emails like, why not sell these calls like they're $1 or with 30 seconds to go in the market, like why didn't you, why is this happening? And so it's because the market trades for another 30 minutes after the close. And if you get a big move, you can get exercised or assigned on that option without even knowing it, because it's by request. And so, if you go and you're out hitting your golf balls and you get a big move like that, you could come in with short stock on Monday and then you're just binary short the stock, and that can be a problem.
There's no defined risk on expiration day. It doesn't exist, basically. So if you're again, as for everyone's edification, if you have the money and if you're splitting hairs for $2 because of whatever it is, nothing really good can happen if something does happen. Because trust me, as you guys both know, if you get assigned, they're not doing you any favors for it. Okay.
No.
So we get a lot of calls like that today. Fridays are usually busy from basically around 8:30 going forward, because now you're starting to really have to manage what you have in your accounts. And a lot of our traders have, very, very large positional accounts. So usually having the conversation with someone that gets, that is closed out by risk or something is never pleasant, but there's always 97, 98% of the time, there's the most valid reason for it that there is. And it's just like close out and you're taking your money and you're done. And I guess if you want to hold on to the long side, to your point, you can, because then you could always DNE it or something, but no one's watching those trades at 3:30. They're like, okay, I've made, 87%. Like you said, me, of course, since, to your father, all I basically do is play golf. Right. So that's what right. But it's just a great rule of thumb. And I think the more that, customers understand it, the more it makes sense. Right. Because literally 80% of the people I talk to that have a situation where they were closed out, whatever, by risk or whatever, they don't understand that you could you can be assigned till 4:30 Chicago time.
Yep.
And again, you don't want to wake up with it. So if you're in an account that can't handle an assignment, then obviously they're going to take steps. But it's a really good thing to know and learn. There's no defined risk on expiration day.
Good stuff out of you, Marty. You're getting tons of love in our YouTube chat.
Oh, awesome. I love doing this. You guys are incredible, really. I love doing it.
Thank you. Well, we're gonna keep you on. We love having you, man.
All right, buddy.
We're gonna take a quick little 90-second break and let Marty get back to all those calls. But we got a ton of stuff. Yeah, and you got pizza coming up.
Right.
Oh, we do have two calls. Do we want to go to them? All right. Yeah. We'll go to them. I didn't know. Yeah, we got Kevin. Kevin in California. Kevin, good morning, sir.
Hi, good morning, guys.
Hello.
Morning.
Hi. Yeah, I have a question about the zero DTE SPX trade.
Sure.
Yeah, so I've been doing it recently, and the call sites haven't been getting any luck. So I was wondering, what are your thoughts on maybe having a $5 Y on the call side, and then the put side make it $10 or $15 Y? Any thoughts on that?
Yeah, I mean, we've done, and the last 2 0-day studies that we've done on our Thursday sessions have been about just doing the put side, which obviously has worked over the last 2 years. The market has gone straight up. I mean, the market's essentially doubled. So it's not a shock that, you're having trouble on the call side. I just wanted, you got to keep in mind that you are, you're obviously taking a lot more downside risk at highs, and that's, nobody knows the future. So that's one of the things. I would also say, and something anecdotally that has worked for me while using both sides, is managing them more aggressively. Instead of looking for, 50 or 60 or 70% or holding them until expiration, take 10 or 15 or 20% of the max profit. If you're selling them for $3 or $4, take $1, take 50 cents, 60 cents. And that, that's been kind of a better adjustment for me. So,
and they're going very directional at that point too. And they're putting that other side on, which, just to your point, yeah, it's been really working. I mean, I guess you could, raise your call side up initially, if this is the way it's going, to at least get what you're going to get out of it. But yeah, I like the idea of just taking that 25-30% profit and then just, and if you want to do another one, you can obviously do another one.
Yeah.
Yeah, because the 25-30% comes in the morning pretty consistently, especially if you place it on the open and you wait until like 9:30, 10. You're getting that 25-30% if there's not a big market move.
Right.
Yeah.
And you're dealing with the trade too, if you think about it. If you're doing those 0 days, whether they're, condors or short puts, and you're getting your 50 cents or whatever, you're doing it well out of the money. As long as you understand that you basically have to be right 98% of the time on a 10 trade basis, because if you're wrong the one time and you're not being diligent and using discipline to get out, then you're taking a $450 loss on a spread and you've just made, $50-$60 per, SPX spread that's settled out of the money. And then you're kind of back to even. I like your point of taking your 25-30% and then
take your ball.
Just
and go home.
Yeah.
And then if you get a downside move, then maybe you get put on a wider put spread.
You know what I found?
That's the next session.
Let me see if this makes sense to you guys. You can always get back in the market too.
That's true.
Always get back in, right? Oh.
Yeah. And then what about do you guys ever make any roll adjustments on the 0 DTE, or do you just let it sit?
It's tough because you're doing it into the hole. If you're rolling up the put spread's basically got no value, and you're rolling up into a big up move, and you've got these things are trading on hours, not days.
Mm-hmm.
You kind of put them on and it either works or it doesn't. And that's why I think, the more aggressive management is probably the way to go with your situation.
Yeah.
I see.
You're going to make back a lot more. So if in this move today, if you're I'm 20 points in the money on my 0-day iron condor, but if I rolled this, technically I could, but if we get a 20-point sell-off today, this position is going to come in really quickly. So I would rather be trading much smaller with the idea of, if it's in the money, I'm just holding it through expiration to see if we get that move in my favor at the end of the day. And then if it doesn't work, so be it. I'll redeploy it for Monday. And just
if you get a down move, you take it off for a little bit less than the max loss.
Yeah.
You're lowering you're narrowing your thresholds to the point where, if you pick your head up and the minis are only up, 27 points in the next, which is obviously potentially going to happen, then that spread becomes something that you're, now the other side's, in the money, which you don't want. It's the 0 days, depending upon how wide they're put on. Yeah, I guess you could slide down your, move your put side up and try to get another, whatever you're going to get, 5-10 cents for it. But at that point, you're probably, to Mike's point, you're already probably making 25 or 30%, and just take it. But you're in the money, like you said, and just sit, right? You never know what's going to happen.
Yeah. Kevin, thank you. We've got one more caller on the line. We got Jack on the line. I just want to fit you in before we bounce off to the next segment here. Thank you, Kevin. Appreciate your call, man.
Thank you.
Appreciate you.
We got Jack in Austin. Jack in Austin. Good morning, sir.
Hey, guys. Hey, real quick. I was anxious to watch the CPI this morning. And I was kind of surprised that it came out so flat, and to learn that we didn't have inflation. And all I could think of is smacks of manipulation. And that's about what I have to say.
We were saying it all morning. You know, I think the powers that be, if there was something that would be bad in this, I don't know if they would let this one come out. But
I think certain person wouldn't go through after you approved the amount.
Yeah. Could be the case.
Right. He's
Who
like
knows?
Marlon Brando in The Freshman. Only good news. Only good news when I call.
That's exactly right. Hey, good talking to you guys this weekend.
Yeah, you too.
Thank you, Jack.
Thanks,
All
Jack.
right, Marty.
All right, guys.
Appreciate you hanging out with us.
Appreciate you guys. No worries.
We're going to take a quick little 90-second break and come back with more tasty content coming up next here. A couple of VODs, and then you got Jamal and TP. We got a whole host of fun hosts today with switching things up with everybody out and about today. So we're going to take a quick little 90-second break. You're listening to Tasty Live. Mikey, we are back, my friend, and we have your new work wife. This is I feel like I am the third wheel here as the Gumada of the group here. Jamal Chandler, good morning, sir.
Oh, come on now. Don't be jelly. Come on.
I am jealous.
You know, we can all friends. We can all hang out together. And we can all go on date together. We can all go to dinner together.
Yeah.
We can do that.
Yeah. Hey,
what's going on, guys? How you doing?
You're welcome anytime.
What's going on?
We're thriving. Markets up.
Thriving and surviving.
If we open our eyes and the markets are green, everything's great.
Yeah.
This is true. This is true.
It should be a good day.
I mean, it's been wild, man. I feel like that's kind of what these slides for This Week in Stocks sort of depict. I mean, it's just been wild in a good way. First of all, there's so many different things to trade. I mean, the fact that you have as many positions on as I do tells me everything I need to know. I think we all have a lot of positions on right now because there's so many different things going on in this market.
Yeah, it's been flying around. I mean, this volatility crush is just epic over the last, week.
Okay, see, you bring up DraftKings. Now we got to talk about it.
Yeah.
But in a nice way. Look, there's a lot going on from the standpoint of the scandal. A lot of people have heard about it. It was huge yesterday. To some degree, it's kind of splashy, It's like it's splashy on purpose, I think, clearly, because they've been doing research on this for a long time. They've been doing a lot of data gathering, and they dropped everything the day after the NBA started. Come on now. You had this like a week ago. You could have easily brought it out then. They waited for the right time.
Yeah, DraftKings is at the lows, but it's up about 50 or 60 cents here in the pre-market. You were saying on the break that it's existed forever. Obviously, this like gambling ring in some sort of form, but this one seems of epic proportions.
Yeah.
It's a little crazy. I don't know if these guys, I just don't know. I don't know why they would ever risk this.
Well, they got Terry Rozier's family locked up somewhere, clearly. I mean, I don't understand it neither.
Maybe. But like, yeah, that's got to be the only reason. But if that's not the case, I mean, you got $100 million contract and you're trying to scalp $100,000 from some Johnny at a blackjack table. Like, what are you doing?
Yeah.
Come on.
Did you see? I think I at least I thought it was. At least the caption on whatever video I saw said so. So whatever, take that for whatever it's worth. But I thought it was after the first night of games in the NBA. Chauncey Billups was talking about the team, and he said, "Let the chips fall where they may when it comes to how the rest of the season is going to go."
Yeah, was that like a hat tip to to whoever was holding his family hostage?
Yeah, I know, right? I don't know. I know. His one particularly hits me hard because he's like my age, and it's like he just went into the Hall of Fame, and you won 2 championships with Detroit. You can make money anywhere. What are you doing?
It's not even about money at that point. It's just about like the rush of doing something in that regard. Like unless like you said, they're doing this against their will, which is also possible considering the the families that are projected to be involved. But
yeah,
it's all crazy. But yeah, I mean, my favorite thing whenever these bubble up is I always just go back to the Twitter videos of some of these guys that do insane stuff. Like at the end of the game, when everyone else is standing around, and then you've got Malik Beasley sprinting across the court to score the bucket to move the spread. They were winning by 9, and he had 8.5. And everyone else is looking around like, what is this guy doing?
Yeah.
Or the college player that instead of taking a knee, he took the ball and ran 80 yards backwards to take a safety for his own team. It's like, oh, you're clearly gambling. Like, there's no reason for you to ever do this unless you are. Like, it's funny to see those videos.
Yeah, it is pretty funny. I guess the last thing I'll say on this is I hope it fixes some gambling things. Because, like, one of the big things, and I was talking about this with my son last night, my 22-year-old who came home. We were talking about, like, how sometimes they freeze lines. Like, that's the one thing that I think annoys me. You know, how often do things get halted in the market? Like, not really, unless there's extreme volatility. They halt stuff in games all the time, right? We were talking about last night, we were watching the double overtime game with OKC. And he's like, well, you know, people are going to keep betting the over. I'm like, this game's frozen at this point. There's no betting allowed in this game. And that's usually what happens. And I hate that. And I think that's the thing that differentiates how much I bet versus how much I trade in the market. There's no frozen lines. You can pretty much bet up until the close. I mean, you know, like that's the difference.
Agreed.
You want to talk about the week a little bit?
Yeah, let's do it.
Let's do it.
We got that out of our system. Vanetta said she had something for us, and then we didn't talk about it. And I was like, you got to talk about this.
We have to. I mean, it's like the biggest thing going on. Dude, that thing hit CNN. That thing hit ESPN. Everything. I mean, come on. That thing hit Fox News. That thing hit every major network. It's only natural. It hits tastytrade. Washington buys it all. Speaking of buying it all, I mean, Washington seems to be buying stakes in a lot of different stocks right now. And I feel like that was one of the biggest news of the week once again. Let's move to the next slide. So we've had about 22% of the S&P 500 reporting earnings so far. 85% have beaten forecasts. Truth be told, though, shares have underperformed on some things, I think, by and large. We've seen situations where stocks are beating estimates and they're kind of underperforming as far as their performance on the day after. And of course, if they miss, it's even worse, actually, which not many have, but we've seen that. Tesla and Netflix, of course, headline earnings this week. We saw the shares fall in both of them. For Tesla, it was this Brazil tax issue. For Netflix, it was the Brazil tax issue. And for Tesla, it was just literally they missed earnings. I got to ask you, Nikki, have you heard of this K-pop Demon Hunters? Did you watch this thing?
I have heard of it. I have not watched it.
It's huge, man. It's like,
that's a new thing. I mean, your kids probably have a Labubu.
No,
in that same realm.
My 13-year-old that looks like he's 17. No, he's not into it. It's Roblox for him. It's Roblox. That's okay. That's where life begins and ends, is Roblox with him.
All right.
Yeah.
Yeah.
I know. I got to get more shares in that thing. I'm telling you, they find a great way to get kids addicted.
Yeah.
I'm going to stop there because I might say something about Roblox. Delayed CPI report was released this morning. Showed inflation is back at 3%. It's highest since January. Crude oil had its best week since June. And Mikey and I have been looking at crude a lot. I'm sure you have. I mean, this thing was... We thought it was going to, Tommy Tuesday basically was telling us about the lower range more recently, how some going in contango. We thought this thing was going to be basically about a 55 handle. And once again, this market has a surprise for you. It jumped even higher over the last 2 days. Trump administration, has sanctions on Russian oil companies. They just feel like they're not moving enough to prevent this war in Ukraine. And after last week's close of 2078, VIX fell to 17 and is probably falling lower. That was yesterday's close.
Yeah.
VVIX is back below 100. So these are just a few of the things going on. We got more though. Let's move to the next slide. Massive move in gold. 7% high to low range on Tuesday. I completely pounded the table on this on Monday on overtime. I couldn't help it. I mean, I just thought it was nuts. But prior to that move, we had seen the previous 2 Fridays were the only real down moves in the previous like 3 weeks. And then we came in on Monday and it just, mooned even more, almost 4,400. And then the levees broke. 2-day down move. But it seems to be stabilizing. And I think it's going to be interesting to see where it moves from here after CPI.
Yeah, you also had that stat of the nine up weeks that you brought to the table, I think last week for this week in stocks, where it has never had a 10th up week in a row, and that was perfectly timed as well. So
thank you, sir. Thank you.
That was awesome and made me a couple bucks. So it
was ridiculous.
Crazy.
I know when something is out of control. That's for sure. Because I've been out of control. So no, I'm just kidding. Let's move to the next slide. SPX 1 month skew has steepened to 1-year highs from our friends at the SIBO. This is, essentially we're seeing a little bit more bid to the downside to some degree. That was actually one of the things too in oil and crude. In gold, by the way, different from this. But I think that was one of the other things to me that stood out. Speaking of skew got flat in gold, and we never see that, right? It's usually to the upside. So to me, that felt like, okay, something's about to happen soon. But different from that, this is SPX skew, of course, and we're seeing skew similar to what we saw during last year's late run to the upside. So take that for what it's worth.
Yeah, it's and skew is a reflection of both sides, the up and down. The skew index is right at like 154 right now, which is kind of middle of the range. It's not super high in terms of its range, but you've certainly seen it with the pop and volatility that we got on the sell-off. That the tails were juiced up. So we'll see if some of that comes out today.
Let's move to the next slide. So going forward, we get a little busy here. Of course, we had CPI today. The things in the black, of course, are macro. Who knows if we actually get them? But next week we got FOMC, of course, rate decision on Wednesday. I don't even know if it's a decision at this point. Seems pretty well forecasted. We're getting a 25 basis point cut. Earnings, we got BA, UNH, we got Meta and Microsoft midweek, and then towards the end of the week, we got Amazon and Apple and ExxonMobil. We definitely are going to have an end of the month. We usually see some wild flows there. I don't know if we're going to get PCE, though, but market seems to think it's going to be a big deal just based on the way that this chart looks. It seems CPI and PCE are equivalent. The week after, we get more earnings from Palantir, Uber, Humana, Robinhood, AMD, MP, which I don't know if that's going to move, but again, that's been at the epicenter of a lot of these things that the government has been buying. Talked about buying those a couple of rare earth metal companies, that one in LAC and even maybe USAR. We got ConocoPhillips, and then I don't know if we're going to get ADP or the non-farm payroll. They just came out today and said we're not going to get another CPI. Who knows, man? And then the week after that, Disney earnings. Let's move to the next slide. So, yeah, the title of this thing, Washington Buys It All, we've already heard about a lot of the rare earth metals. The big rumor yesterday was there might be purchasing stakes in quantum computing companies. And this has been a thing.
Yeah.
This has been a thing.
No, we sat and talked about, Alcoa or FCX as other, metal plays, and those have moved too. It's nuts. It's nuts.
You know what else has moved is coal companies. Again, that was something that was mentioned a lot in the first administration. We're going to make, coal viable again. It was the big phrase. And if you see companies like CNR, I know that was one of the ones that had been moving more recently. I've seen a couple of other different coal names. But aside from that, I think it's just been interesting in this market where you see, I talk about this a lot, because I just notice it. And I find comfort when I see big groups of names moving. So it's been the rare earth metal names. It's been these nuclear names. It's been these quantum computing names that have been moving in large groups. And honestly, it's provided a lot of trade fodder for us. But there's a lot going on there.
Yeah, for sure.
Dude, what year is this? IBM, Honeywell, Intel, they've been the big movers on earnings to the upside more recently. Target's supposed to be laying off 8% of its workforce and eliminating 800 open roles. I feel like this is one of the most interesting stories of the week that really nobody's really talking about, considering the kind of week that we've had. NHL strikes its first ever deal with prediction markets, Kalshi and Polymarket. That's not nothing at all. And you talked about DraftKings being down. I mean, mostly it's down because of the news surrounding some of these prediction markets more recently. So
yeah,
I think it's something. And then, of course, next week we got the FOMC decision. Research, October 21st, market measure why volatility doesn't follow price. Check it out.
That was a good one. I will mention the Polymarket news of the 15-minute binary Bitcoin up or down markets. I think that's gone too far. 15 minutes.
Wait, seriously?
Yeah. They're launching 15-minute up down prediction markets. So you just, will Bitcoin be up or down in the next 15 minutes? That you think that's where we're going, Jamal?
I hope not. I think, you know what? I think the further you go, I think eventually you push back. And so I've talked about this with people a lot. Like there's a lot of people who love trading zero DTEs. I think at some point in time that's going to get pushed back to the point where people start trading more 2 and 3 month out. It's a fun thing right now, but people are, it's just eventually, yeah. It's you know what it's like? It's like in sports right now, in NCAA, there's a dude from the G League that's going to be playing in NCAA, and that's too far. Because you know what? You weren't allowed to go to the NBA and then come back and play in college. Why are you allowed to go to the G League and come back and play in college? That's too far, and it just happens sometimes.
But yeah, the NHL Polymarket deal is pretty genius because it gets them out of the jurisdictional issues that DraftKings, FanDuel, Flutter, like that's bravo to them. If they're like getting into the Polymarket versus going your traditional book route is very interesting.
It's just another app I got to download on my phone and deposit some money into.
Hey, you'll get a bonus though.
I got sprinkle of cash in 100 different places. I start to lose track of it. So
that's exactly the way that it's supposed to work. And then at some point in time, you forget about all of them, and then you got to go to those websites to figure out where you have cash somewhere.
Good stuff out of you. Thanks for joining us today. We're going to take a quick little 90-second break, come back. We got the opening bell coming up. E-minis at the highs up 46 and change. NASDAQ up 230. Buy the dips, it seems. Works forever. So we're going to take a quick little 90-second break. You're listening to Tasty Live. Mikey, we are back, my friend. E-minis at up 53. More of the same. The dip has been bought. It seems like vol is just getting smoked here. I'll be interested to see what people have for us because it's a much different landscape than what we were looking at just a couple days ago. I'm closing out of some of my Intel positions. I rolled my strangle to December. I closed out the crab trade. I took a couple bucks out of those. I'll publish those to the follow page as soon as possible. But let's get into it here for some trade ideas. Fast market. Play me some music here. Fast market.
Yeah.
Let's do it.
Love to see it. MCL Iron Condor 65.55. OPEC increasing supply while inventories surprised on Wednesday, carving out a range from Leroy in Toronto. TORONTO. Okay.
What do you think? Do you have an oil position right now?
No, I was long MCL and I closed out 2 days ago for like $160, but yeah, this has been a crazy rally from the lows in a short amount of time. So I think 55.65, and this goes along with what Thomas was saying too. He was saying that we should be expecting a new range here, a little bit lower. So yeah, 55.65. I like the range. I think I'm going to go to the big contract in this one. 27 days. So I actually have a short call spread at 63.64 in CL. But 65, 66, 55, 54. So yeah, this iron condor gives you $3.10 or $310, risking $690. Buying power is $500. Classic, 1/3 the width. I'm going to the 24-day, which keeps you in the near-term cycle, which it has a lot more implied volatility. But basically just going to the 24-day last options expiration for the Z contract. But yeah, I'll do this. I'll layer on here.
I had a put spread already in CL that, and I as well as what you had, I was long MCL that I closed out of into the move here, but I had the 58.56, which was up about $100. I was looking to close it, but I figured I'll just sell the call spread. I'll do a 67.69 call spread against it. So I've got that on for a 27-cent credit. So I've got like 60, 70 cents total in the position here.
Cool.
So I have an iron condor, but I legged into it via having already the put spread on. E-mini's up 59, high of the session.
Yeah. Naturally.
More. Volatility coming in 40 cents. You got the VIX down a full point. Absolute massacre of volatility. Next one, please. So we're 1 for 1. CoreWeave. I have not traded this in a little bit. CoreWeave up $6. It's at 129 and change here. CoreWeave 130 calls, bought at 55 cents. Okay, good for you. Looking for $2 to $3 a contract. If there's still 50 cents when you're reading this, would you play this as a lotto trade? Nick Bat. So we got another person. I think this might be a Reddit trade. We don't have an expiration on these. Let's see if if you're long these calls in any expiration, you're looking really nice. Even the 0-day 130s are trading at $1.40-ish. So you hit a home run. If the trade idea is upside over the next it's $2 to $3. I can play the upside.
It must have been a 0-day trade.
Yeah.
Because the 130s were trading for 50 cents yesterday, and now they're trading for $1.40. So if you are listening, I would close this because this is all extrinsic value. And if you get a reversal of this move, you lose all that value today.
Yeah.
So yeah, I would just close it as a home run. And then if you want to stay in it, you could do, if you're trying to keep it cheap, you could do a upside calendar spread for earnings, something like that. Like the 150 short November, long December. That is a $400 calendar spread, but it's much more long-term. You have a lot more time for that to work out. But yeah, nice trade if you did it yesterday.
Yeah, that was good. I'm going to sell the November 21st 100 strike put. I did it at 315. So I will lean long with you in solidarity, but a little bit less aggressive given the move that we've had today. Volatility is relatively high. Monthly implied volatility over 100. IV rank in 19 and change here.
Beautiful.
So I like it. One that I haven't traded in a little bit, so I like that.
Yeah. Good
stuff. So we're with you, Nick Bat, my name brother.
From Baton's Couture. I'm definitely butchering that. I'm usually pretty good at not butchering. MU, November, December, 1 standard deviation strangle. Classic. Betting MU stays range bound from Tyler in Missoula, Montana.
This stock, I have some painful trades in this stock, but I think it does warrant something.
What a move this stock has. It's up 100% since August.
Why not?
August. The only issue I have with this stock, so if I'm doing a strangle, I'm sticking in with November.
I agree.
Because December you have earnings and risk on both sides with earnings pending equals not a lot of profit potential with the same amount of risk. So, and the IV is high enough here where you can go to November. and capture that premium. So I would stay in November if you're doing a strangle. 1 standard deviation basically brings you to 185-ish and 250-ish.
Yeah.
If you're just looking for round numbers that are liquid, that's an $800 credit, $2,000 buying power reduction, which is pretty sizable return on capital. But I think for me, I would still like to go defined risk here, given the craziness of this product.
Markets are not great.
Yeah. You could do a 10-point wide for almost $3 at those strikes, 185, 250. Big range there. So I'll do that. I'll do a short-term 28-day iron condor 10 points wide, selling the 185, 175, and then selling the 250, 260.
I'll do the strangle, leans a little bit short delta, but with the same short strike. So the 175, 250, and I did that at $6.50.
Lovely.
Cool. So we're in them all so far.
Yeah. As foretold.
Yes. I mean, we're doing them all in some way. I don't fade our peeps. Our peeps are some of the best. So I'm taking them all. Let's get to the next one here. TLT. Oh God. After I have to say that, and then you got to give me TLT. Rates go down, bonds go up. That is correct. That's how it works. Tom, see the rabbits, Iowa. Everyone needs a core position to trade around. Covered call on TLT. Buy TLT, sell the 97 call for 30 cents. Roll the call each month and collect the 30-cent dividend until it gets called away. Ooh.
Tom from See the Rabbits.
Cedar Rapids.
See the Rabbits or Cedar Rapids?
I mean, I get it. I think TLT, if you want to have a core position there, you have a larger sized account, go for it. I like that sort of thing. But I think for most people, if you're going to make this sort of trade, you got to make it a poor man's covered call. Even if I know you're trying to do the dividend thing here, but just from a capital allocation, it's too capital intensive to be long shares in this.
Yeah. I got filled in directional solidarity with you. So I just did the zebra. I think the zebra is exactly, I don't think I've ever traded TLT without a zebra in recent years, because like you said, 13% implied volatility, it's just begging for a static delta position with defined risk options. This is a $90 product. I just bought a call zebra with zero extrinsic value in the 28-day cycle. So I'm renting stock for 28 days to the upside for $200. There's just no reason to take the risk of the full shares. I know TLT doesn't move that much, but still, you can get the same stock return with $200 in terms of capital outlay. So the 90-91 call zebra in the 28-day cycle is what I was just filled at for $234.
There you go. I like it. Next one, please.
Ooh, SPX, XSP. Gamma, constantly on the upside and holding strong around 67.50, selling broken wing butterflies with upside risk, 1 day to go with a short around 67.25 each day. For every 2, I do 1 with downside risk. From Jason in our favorite place ever, Vegas.
Well, this is a hard one to do today, given the move, but maybe I set one up for Monday. Here.
This could be nice for Monday. If you do like a 10 by 20, is that what you're thinking?
Yeah. The expected move is right around 68.25. I guess 68.35 is really where you're at. Damn, I wanted to do I was going to go 15 by 30, but that trades at a small debit. Let me see if I could do a 10 by 20. All right, so I could do a 10 by 20. So I'm looking at the 68.20, 68.30, which puts you right at the expected move. Your break even's at 68.40, and then I'm buying the 68.50 as my wing into next week. We'll see if I can get filled here at like an 85-cent credit. Nope. We'll try 75 cents, and then I'm going to let this sit. All right, so I'm in at 75 cents. We're going to play it right to the expected move on Monday.
Lovely.
Let's see if that one works out. Cool.
Good stuff.
5 for 5. Gotta love it. All right, Meta. Meta now looks very exciting. I won't go down. I won't go down 700. It won't go down to 700 anytime soon. I recommend selling the put spread at some 700. Make it 45 days. This is Jackie in Chicago. I did have a Meta put spread that I took off a couple days back. Stock is basically unchanged today, not participating in this rally. It does have earnings in the middle of next week. You think we do like a little Johnny put spread into next week? Oh, God.
Yeah.
It's so hard. I mean, you look at you have to be at the 700 strike.
Yeah. I think it's fine though. You could do a November monthly 700, 695 for $1.70.
Yeah. Oh, you're going to the monthly? I was thinking just doing the weekly.
The earnings
like into earnings, yeah.
Yeah, I mean, you could do that too. That's trading for a similar premium. But yeah, if you go to the weekly, you have no defense in terms of time if the stock sells off.
Yeah.
But at least with the monthly, you do. So that's why I leaned towards the monthly. You'll still get paid if there's a rally in Meta for sure.
Yeah. I think I'm going to hold off on this one. Wait until earnings next week and assess the situation from there.
That's fair. But yeah, we will definitely be participating with a short premium spread, most likely, because this is an expensive product.
Yeah.
But yeah, I like the idea, but I agree. I'll wait. We'll wait with Nick here, and we'll wait till the October 29th date because it's after the close. So yeah. I like it.
The only one we've missed so far. Next one, please. Oh my God, I haven't traded this stock in quite
Twilio? Twilio.
100? I thought this stock was like a $50 stock.
I think it's going to finish filling the gap in this up move. I'm going with a Jade Lizard 36 days out. Sell the 101 put, sell the 120, 124 call spread. What do you think, brothers? From Ben in West Kelowna. Yeah, I'm in the same boat as you. I have not even thought about this stock in many moons, but let's see. 36 days out puts you into the November 28th weekly cycle.
Okay, I'm going to move this. Let's see. I mean, these markets stink.
Yeah,
they're like
monthly.
Yeah, they're like some of these are more than $1 wide. Some of these are $2 wide. I was looking at this and it sets up well. It's got high implied volatility, IV rank of nearly 60. You got 70% monthly implied volatility, but these markets are they're just not tradable. I mean,
yeah,
you're looking at the 20 delta calls and they're 193 at 315. You've got a $1.50 wide spread. Same thing on the put side, even at the 100 strike, it's a 90-cent wide put spread. Some of these are even wider. I think I got to pass on this. It's just not liquid enough to trade, unfortunately.
Yeah, I like the idea, especially with capping your upside risk into an earnings strategy here. But yeah, I think the markets are just a little bit too wide.
Yeah, just too wide. Sorry, Ben. We're going to pass on Twilio.
It's all right. We'll get him next time.
Yeah. Next one, please. NVIDIA. Glad VST worked out for you. So this is OK Avocado on Reddit. Has been just banging out winners for us. It's been great. VST up another $7 today. I wish if I knew the future, I would have held that a little longer. But they also closed out of their trade, so I don't feel that bad. Vol Crush today, eyeing bullish Mag 7 calendar plays. Sell to open NVIDIA. We're looking at the 21st 200 strike call. Buy to open the 200 strike call in December. So we're going into earnings here. Earnings on the 6th of November. So you're looking at a 200 strike calendar in, oh, I'm sorry, I'm looking at VST. NVIDIA earnings are on the 19th. So this is a cheapy upside play here.
Yeah. December, November, 200 strike. I'm 100% in on this.
I did a diagonal spread. I'm interested to see where you went with it. I think we're probably thinking the same thing.
Yeah, I think you can go diagonal spread. But I'll do, since you did the diagonal, I'll do the calendar so we can compare and contrast.
Okay, very nice. I am long the 190 strike in December. I sold the 200 against it in the November monthly expiration here. So a little bit of extra time, I guess, right around earnings there. So I'm with you.
Yeah.
Thank you to OK Avocado for the VST tendies as well.
Mm-hmm. But yeah, we're in.
Cool.
Baidu, oh no. Baidu pulled back to midpoint between highs and the support line, selling the 108, 150 strangle in November from Sean in Hong Kong. Shout out, Sean. Baidu, 108, 150, November. Let's take a look, see. So this is another one that falls in the earnings cycle. 108, 150 does give you a nice range. But this is a little bit elevated implied volatility, or sorry, buying power requirement, $2,800 on a $120 stock, and picking up $4. I think this one, I like the idea, but I think for me, I would do this for earnings. So like wait until November 17th and then throw this on, because this premium is not going to come out of here until earnings.
Yeah, I don't have any exposure in any of the China names. I had a strangle on from Julia that we took off pretty quickly. Ivy rank is high here. I don't know if I want the upside risk. I think you have all the China tariff stuff that can kind of, assuming it's a taco, which I think everybody agrees is coming soon. I don't know if I want that upside risk. So I'm going to do a put ratio spread. I'm going to buy the 120, 115 put spread, and then I'm going to sell the 110 against it in the November 21st monthly expiration. I did that at a 51-cent credit. So no risk to the upside. Your max profit, though, is to the downside. So an omnidirectional type position here.
Lovely. Lovely.
Doing something in basically all these stocks, except Twilio, which just it just was too wide to get into.
Yeah.
So let's get the last one here. Thank you, Sean. You. 4 U's. And I put on a position in here yesterday. So call ratio on quad U's, November 21st, you're buying the 30, selling 2 of the 40s against it. Credit of 60 cents, potential $1,000 profit if it goes on a tear, break even at 50. Overall good returns for the money considering the buying power. This from Reddit as well. Expensive pitch. I appreciate your trade idea here. You have to keep in mind these stocks have been going nuts. I did a similar thing in Oklo and figured there's no way that it gets to 175. And sure enough, in like a week, it was at 175. So keep these small. I do have a similar trade on. I did a crab trade. So I bought the 25 in December. In November, I sold 2 of the 35s against it. So I'm with you in this trade. I think you brought this to me, Mikey. Jamal was doing some tail type trades in here.
Yeah, so this exact trade we actually looked at a couple days ago, actually yesterday, because Jamal did sell a call at the 40 strike for $2.20 or something like that. So it's come in dramatically, and it's just this lack of movement. But yeah, we looked at how flat the premium here is in this November cycle, and we were looking at this exact trade, the 30-40 call ratio. You can pick up 38 cents right now. Buying power is $300. Break even's up above 50, and stock's at 20. So yeah, I like it as a nice wide ratio play where you're giving up all your credit to get that 10-point range where you can be profitable here. But yeah, again, you got to be just small with this trade.
Small.
But if this thing goes to 60, if you have this on, it's $1,000 loss. So it's not the end of the world if this stock triples in price.
Yeah. It's just a tough hold, volatility expands and it's they do get painful. They do get painful sometimes. So just stay small there.
Yeah, it can be a mental issue if it does rip like up to 25, then 30, then 35, then 40.
Yeah.
Because you would be seeing losses even though you're at your prime price point.
Yes. So I like it. I'm already in something similar. So we'll call that a yes.
Sweet.
Good stuff. Do we have our final slide to go through? There we go. We got pretty much all of them on. We did a bunch of stuff here. We passed on the Meta trade because Meta has earnings next week, so we'll definitely look at something ourselves there. We also passed on the Twilio trade. That was the market's just way too wide there, so passed on that one. But 8 out of 10. That's
passing, baby.
That
is passing.
That's a great score. I mean, thank you.
Yes, we will take our B in stride.
Yes.
But yeah, I got the crude iron condor on 55.65, 1 point wide wings. The Micron iron condor 10 points wide. Short options are at 185 and 250 in November. And then TLT bought a call zebra 9091 for $200, and then Nvidia bought the call calendar December, November for $200. So nice and small, great ideas, love them all.
Beautiful.
We're doing well. We're thriving.
E-mini's up 60. You got the NASDAQ up 285. The Dow up 413 and the Russell up 42. The Russell and the NASDAQ, the strongest of the group today. Oil catching a little bit of a bid here, up 45 cents. Volatility getting smacked here off the lows. VIX at 1646. You got the vol futures at 1850. Bonds down 11 ticks, bucking the trend here. A little bit of a weird move there in bonds, given that rate cuts seem to be the soup du jour right now. Gold only down 15. You got silver down about 15 cents here, so a little bit of a buy the dip in the metals. And then Bitcoin has actually sold off. We're at 110 and change here. Futures up a couple $100 here, so seems like it's risk on.
Risk on, vol crush, move along.
Yes, that's exactly it. We're going to take a quick little 90-second break. We'll come back with a market measure. We got a market measure on legging out, so you don't want to miss that one. We're going to take a quick little 90-second break. You're listening to Tasty Live. Mikey, we are back. We've got E-minis up 59, NASDAQ up 280, got the Dow up 415, and the Russell up 46. It's been just a steady climb higher all day. Just buying. Can't stop the buying. You must have them. You must have them today. They are cheaper today than they will be the next time the market opens. That's been the story of this rally here. We got this market measure, and then we're going to bring Marty on for our live from the trade desk. We're also going to have YouTube chats. So if you guys got questions you want us to talk about on air, hit us up there in the YouTube chat. We'll keep Marty around as well to answer anything platform trading, Tasty Trade related too. So give us some questions there in the chat. But let's do it. Let's get into the market measure here. On legging in and legging out. So legging adds risk without the reward. Do you feel this way, Mikey?
It depends on what we're legging out of or into. But yes, I mean, you can add significant risk if you're not aware of actually what you're doing. But I think the one exception is if you have a credit spread, like if you have an iron condor and one side gets blown out, if the other side's worthless, then yeah, you can leg out of that spread and get rid of that risk. But that's really it.
Yeah, I think legging makes sense from individual equities, especially the way things are moving now. In the if you're doing something in like SPY or Qs or whatever, most of the time I'm not legging out of stuff, and the put side, the skewed side usually holds its value. I think the biggest issue with legging comes from spreads, and when you're we get that question all the time. Why not just close the long option? The long option is profitable. I'm going to, leg in when I'm going to sell the put into a down move and then sell the call into an up move. Those are really the bigger issues, I think. But this one should be a good one. Sponsored by the CBOE.
Love them. Love the CBOE.
So let's get into it. So the market has been trading at a wide range since 2025, so even this October so far, which has impacted the strategies we use and the way we manage our positions. I have been much more aggressive with managing positions, especially stuff that moves very quickly. So, if I'm selling something for $4 or $5 and it moves $1 in a day or two, I'm off. I'm not sticking around for 50%. If you're well in front of the decay curve, if you've moved, if a position has moved very quickly, I have no problem taking positions off and legging out of positions into huge moves. It's been a trader's market this year.
Yeah, for sure. I think if you're cognizant of that and you have the ability to manage it, it makes a lot of sense to remove risk that comes in quickly in your favor.
Yes. Next slide, please. So the study that we're looking at is SPY. We're looking at the last 10 years of data, selling the 16 delta, 45-day strangle. We're going to look at managing the entire trade at 50%, managing each side independently at 50%, and the percentage of occurrences on both sides, and analyzing and comparing those results. Again, we kind of preface it by saying, one thing that is different is that we're looking at SPY itself. We're looking at like an ETF that doesn't typically move as much as individual equities. When you look at like, an AMD that's up, $15 today, you usually don't have a 6% move in SPY. So these trades don't move as much. You don't sell something for $1 and you wake up tomorrow and it's trading at 10 cents. These are much slower moving trades. So the legging aspect is a little bit different, which I think we'll see in the data here with this study.
Mm-hmm.
So the next slide, please. So in the past 10 months, up to October, the average daily price movement has increased by 2.4x, and the daily percentage change has increased by 1.5x compared to 2015 to 2014. It's not a shock that over the last 5 years and in this data set, the last 10 months, has been much more volatile from a price perspective. The things are moving much more significantly than they have been in the past. You can see here the daily dollar move is obviously much wider. That's a reflection of just the stock market getting bigger. 2015, the stock market was a fraction of what the size is right now. When you look at percentages, which kind of weights it together, you can see it's much bigger from a percentage standpoint. You're talking about 0.9% of a daily percentage change versus 0.5%. And a lot of those years, the 2015, 16, 17, 18, you remember those days of where, we would wake up and the market would be up 0.1%, couple points, and would just sit there all freaking day. It was the biggest grind, no volatility, no two-sided action. It was brutal. A lot of this data is reflecting that here.
Yeah. And now Like what you're talking about was like markets up 7 every single day. Now markets up 30 every single day. That's just a reflection of the price of the product that has increased as well. But yeah, we've had some pretty volatile times, especially intraday, and that two-sided action has been good for 2025 for sure.
You're getting a little bit, I would say you're getting a little bit more two-sided action in the last couple years than compared to what we've been used to prior.
Mm-hmm.
Next slide here. So as a result, some traders wonder if they should time the market by legging in and out of a position in order to take advantage of this volatile market, as opposed to managing the position as a whole. By doing so, traders aim to achieve more winners with shorter holding durations. I've been legging out of a lot of individual positions, less so in the ETF positions I've been trading. So I think we'll see why with these slides here. So next slide, please. So legging in and out refers to managing multi-leg positions independently, such as exiting a put before the call instead of closing both at the same time. Basically just taking off one side of the trade as it becomes profitable and leaving the other side. You're getting more directional. I think this is something that in smaller sized accounts is a little bit more justifiable, because it's very hard to get directional exposure in those trades. So if you're starting with something that's neutral delta and you're trying to get short delta into this up move, closing out of puts is going to synthetically get you that short delta without putting a new short delta position on, because you have limited capital. So it certainly has its merits.
Mm-hmm.
Next slide here, please. So we analyzed the performance of selling SPY 45-day, 1 standard deviation strangles using 2 management approaches. So we managed the whole position at 50% of the max profit, and then we managed each side independently at 50%. What do you think this looks like?
Well, this is where my initial statement comes into play. Managing independently at 50% means you are buying back that option for still a sizable amount, and that debit paid is risk added to the other side.
Yes.
So when we talk about legging out, we're talking about closing the untested side at 90% profit, 80% profit, like a much more sizable amount where you've basically extracted all you can out of that option if it's a short premium trade. But that's what I'm expecting to see on the next slide.
Yes, exactly. So getting over to the next slide here. So our analysis found that legging approaches didn't help to improve the performance. In fact, managing the whole position slightly outperformed legging out over the long term. You'll see here, it really didn't change all that much. You of course have a larger loss because you're buying in that premium every time, just to what Mikey said of like 50% on one side still leaves a lot of value in that position that you're buying in, and that debit is added risk. And that's why you see your largest losses increase here, because most of the time you were just buying those put spreads or the put back, which is value that is adding to your risk on the upside. You'll see your average P&L, of course, has decreased as well. Not a huge amount, but certainly has. And your win rate goes down. Again, that's all a reflection of just buying in the premium. And the point being that 50% of the value is still a lot of the value left in that option, especially in an ETF where you're not getting as much volatility exposure on entry.
Yeah, totally. And I think when you consider the debit paid adding risk, that's where maybe waiting a little bit longer if you're trying to leg out, try and get more than 75%. I think that will help these numbers for sure.
Yes, for sure. Last slide here, a couple takeaways. So legging in and out increases the complexity of portfolio management and requires traders to take on more directional risk, especially so in like SPY. Managing strangles as a whole position is a more effective strategy than managing each side independently. Not a shock here. I think if you're going to leg out, and you should leg out of cheap risk, wherever it is, And I don't even look at it as legging out. Like I look at it as taking risk off.
Yeah. And everything is risk reward. When it's harder to manage a debit trade that has like an unlimited profit potential. Short premium trades, you know what you can get out of that position. The more you have on the table in terms of profit, the less you can make going forward, and you still hold all the risk plus the unrealized profit risk. So yeah, if we are legging out of an iron condor, we're waiting to get 75, 80, 90% of that value, because at that point, there's no reason to have that on anyways. But 50% is more of a debate.
Yes, good stuff. Awesome. That was a good one. We're going to take a quick little 90-second break, come back with Marty on the trade desk for our live from the trade desk segment. We're also going to take calls if you got some. You can give us a call at 855-238-2789 or 855-B-TASTY. We'll also take chats from the YouTube section, so hit us up there as well if you got some questions for Marty or for us. We are happy to take them, as well as trade ideas. We'll take those too. It's a tough market. We're looking for some new ideas, so put some trade ideas there. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it. I'm breaking rules, got it under control, got 'em all shook up for me. I'm breaking rules, got it under control, got 'em all shook up for me. 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 Got 'em all shook up
Hello and welcome to Options Trading Concepts Live. You know what? That's weird for me. I haven't done that. This is my first time ever doing that. But this is not normal, right? You got me on the screen. I'm Jamal Chandler. Hey, how you doing? You got the man, the legend.
Yeah, good to see you, Jamal. Tom Preston here.
How you doing?
Oh, I'm great, thank you. And I love doing shows with you because you know you have a nice a perspective on option trading and stuff like that I always like to hear, and I know our viewers appreciate that also.
Thanks, my friend. I really appreciate that. Yeah, it's been great actually moving up to OTCL. It's been awesome hanging out with Mikey and the crew and whatnot. And today it's you and me. And we decided to bring a little different flavor to this thing today. We're going to talk a lot about some of the sectors of the market that have been moving quite a bit. The quantum computing stocks, the nuclear energy stocks, and the rare earth mineral stocks, obviously, that have been in the news a whole lot. So we're going to get to that. But before we do, with the equity market here, I mean, what are you seeing besides those things these days? What are you paying attention to? What are you seeing? What do you think about this market that never seems to go down, that gives you a little bit of volatility every now and again and then fades? What do you think about all this?
So what surprised me, and I know enough about the indices and, you know, market capitalization weight and all that stuff and what's included in an index and what isn't. What I was very surprised, I was surprised to see that the S&Ps and the NASDAQ really didn't care that Tesla had sold off like it did, or Netflix. That you saw the weakness in those two big names, and the S&P shook it off. But I gotta say, Jamal, this two-sided market that we've seen in some of the individual stocks as well as in the S&Ps, I've had a very good week. These past like 10 days have been good for me trading. And here's the reason why. A couple of symbols that were losers, like treasury bonds, or notes, ZN. I was long ZN call spreads for the past month, and only until the past couple of days have they actually rallied up enough and turned those sort of moderate losers into winning trades. So that's something that I've been looking at, is the interest rate market, like ZN. One of the interesting things I think, Jamal's going on is that mortgage rates have dropped. I think I read to their lowest rate in about 12 months.
Mm-hmm. Yeah.
And if you have to pull up just really quickly, and then we could talk about my Tesla position in a second. But if you take a look at ZN right now, and this is. Yeah, on the chart there, which is fine.
Wow. Can we pull the platform? Did I share it? I should have shared it, right? Pretty sure I did. Thought I did. Yeah, there we go. Thank you.
Yeah, excellent. Okay.
And let's see. So, well, yeah, I have as you said.
ZN, yeah. So
yep, you're right.
These are the 10-year notes, and for what I like to point out is, and this has been historically true, and maybe it's not as true today, but mortgage rates follow the 10-year note market, or vice versa. And the rationale for that is that most people, when they have a 15 or a 30-year mortgage, only hold on to it for maybe 10 years. So somebody who buys mortgages like a bank hedges them with the 10-year notes. And what you saw over the past week or so is a little bit of a rally. You saw the mortgage rates, you saw the 10-year yields drop, which sent their prices higher. And that's what saved my butt in my long call spreads.
Wait, hold on. What you said was very important, and you're actually the first person I ever heard it explained that way. I've definitely heard that many times over the years, and I knew that it follows the 10-year, but I had never heard that reasoning. And you're saying for the most part, it's because most people maybe hold on to it for 10 years, their house for 10 years, maybe?
Well,
average.
And Jamal, and I am an outlier in a lot of respects, okay? And I hate moving, okay? It is such a pain in the neck, okay? I have 30 years of crap. Forget about my wife, okay? And let's make sure she's not in earshot with us. There's so much crap that just the thought of moving, I'd rather have I don't know. I'd rather have a nail in my head.
Dude,
I've been in this place for, I don't know, 20 years, whatever it is. We're not moving. As much work as it is, as much work as the ranch is, I'm not moving. So that said, Jamal, I don't know about your own personal experience. Most people, I just make this point really quick. Most people only live in their houses, I think, 5 or 7 years or something like that before either they move or upgrade, downgrade, whatever.
Yeah, I think you're right. I mean, it totally makes sense. And I'm not even going to get into my traumatizing childhood, which I moved around a whole lot against my will, I felt. No, but you're right. I mean, the idea of being steady is exactly what I love. But that's the first time I'd heard that reasoning. So I was curious, but continue, make your point.
Well, so mortgages are a market. Okay, so if I borrow money from a bank to get a mortgage, if it's a big bank, it might hold the mortgage. But what a lot of them do, especially the smaller banks or the mortgage originators, they package them. So they'll package Jamal's mortgage with my mortgage and sell it to let's say a hedge fund or something like that, or an investment bank, who'll take on a bunch of mortgages and start earning that interest. But like any trader, like a market maker, Jamal, they don't like taking risk. So what do? They take the mortgages and they hedge them. What do they hedge them with? Typically, and it gets more advanced than this, I understand, but typically they sell 10-year treasury bonds against them, because that 10-year maturity sort of matches the maturity of your average mortgage. That's the rationale.
Mm-hmm. Mm-hmm.
But I also want to point out, and so mortgage rates have come down, I think, maybe about 655 or so to about 620 today. Mortgages, what matters to people, I think, and I'm anxious to hear your take on this too, Jamal, is what matters is the monthly payment. And I did a quick calculation before the show. Going from about 655 down to 620 takes the monthly payment on a $100,000 mortgage down about $23 per month. So if I have a $400,000 mortgage, my payment dropped only by about $100. I'm not sure if that's enough to move the needle for people.
That's exactly what I was thinking. I don't feel like it is.
So this is, there are a lot of reasons why this is becoming sort of a barbell economy. A lot of people are having trouble affording housing right now, and I understand that, and that it really sucks. And I think we're going to have to see a much sharper drop, and there's the 10-year yield dropping. We're going to have to see a much sharper drop in mortgage rates, maybe down to the 5 or even the 4 handle or something like that, before people can actually start affording things. Because it's, hell, Target just laid off, 1,000 people or something like that? Did I get that number right?
Yeah.
That sucks. And it makes it hard for people to afford housing.
Yeah, you're seeing that more, and that's it's interesting because to that point, I mean that's been the news this week, that mortgage rates have come down the lowest in a while, even though they're still fairly elevated. But talking with my son the other night, my 22-year-old, talking about cars and how all of a sudden cars cost the most that they've cost, right? $50,000 on average these days. So you're talking about, even though you're hearing some relief in mortgage rates, it's still fairly elevated, and cars are going up. These are the things that most people, right, are typically relying upon what interest rates are moving and how much it changes their monthly payments month to month. Most people live month to month, right? And so
right.
That's kind of a fascinating area to be in this market, all while the S&P 500 is at all-time highs, but you're starting to see weakness in the job market. I mean, we haven't gotten a report in 3 weeks now, but you're starting
that little detail.
Yeah, that little detail.
Jamal.
and isn't it true that they only came out with the CPI today because they needed to make some calculations for Social Security?
Probably, yeah, something like that.
It was something like that. But then they said, well, we might not get one next month.
Well, I'm not a big economic data guy. And I understand it's important, and I understand it's a piece of news, and the market watches it. So I do give it some weight. Here's my kind of, and again, this is just my 2 cents, Jamal, is that again the barbell kind of economy. The people who are having trouble right now, the people who are, and we could talk about Carvana crashing, and we could talk about what was a Tricolor down in Dallas, the subprime auto lender going out of business.
And Jeffries had exposure to one of those too. I don't know.
Yeah, it's that markets that's getting hurt. And from what I know and from what I've learned from retail traders over the past 25 years is that most people are still not invested. They are not participating in the market in any meaningful way. What does that mean? Unfortunately, when those people lose their jobs, it sucks for them. It really does. But they don't have as big an impact on the market as all the hedge funds, all the people who continue to have their jobs, sticking their $100 a month into their 401ks, and by default going into the S&P 500 funds. That's what I think is what is keeping the S&Ps afloat, right? So you'd think, yeah, the economy for a lot of what's the old saying, Jamal? When my neighbor loses his job, it's a recession. When I lose my job, it's a depression.
Yep.
That's happening a lot, but the market does not care.
Yeah, no, I think you're right. Yeah, it's a fascinating environment to say the least right now. I want to come back to this platform in a second. I want to show you a couple of slides of the sectors of the market that we kind of teased here at the top of the show. If we can pull up the slides, that would be phenomenal. And I found just a couple of things here. I want to get your take on them. Let me pin these to the screen. Okay. 3 hot sectors of the market. These areas that we're looking at. So I found this fascinating. This is a chart of the worldwide ranking of rare earth metals in metric tons. Of course, everybody knows by this point. If you didn't, now you really know. China is leading the way with 44 metric tons. I was curious what you thought about this as far as, well, first of all, U.S., there's 11 on this list. U.S. is number 7. China and Brazil being the top 2. I was trying to make some sense of this geologically, and I really have never thought about this from the standpoint of rare earth metals. Why does China have the most of reserves? Why is Brazil second? I was trying to think longitude, latitude. That doesn't necessarily I really was.
All right, Jamal, I'm going to throw this back at you, okay? You have a background in chemistry. You have advanced degrees in chemistry. Okay. So I'm going to put you on the spot. Jamal, what is a rare earth in the first place?
There are these list of metals that have these sort of capacities, and again, I don't even know if I could fool anybody into telling them I'm an engineer or a scientist anymore. But there are these metals that have these capacities that really seem to have this really good affinity to be able to be used in electronics and all these other, a lot of things that we use. We're talking about cars. Cars are basically electronics with like wheels on them these days. I mean, I just bought it.
No kidding.
It's ridiculous the amount of chips that they have in them. But I mean, they use it in these chips. They use it in TVs. And you know what's crazy, TP? I remember this rare earth craze in 2011, I think it was. I was trading at the time at a prop firm.
Yep.
Keep talking about this. And mind you, I really believe that the market doesn't repeat, but it does rhyme. And it's fascinating to see this happening again. It was the same deal back then. China had all the rare earth metals and they were, putting a hold on it. And so these stocks just completely shot up. And that's a lot of what we've seen more recently, except this time around, right? The U.S. government is taking interest stakes in some of these stocks, which are causing them to move a little bit more. So I just find this whole thing fascinating. But this sort of whole idea around the rare earths, I mean, it was prior to, honestly, outside of 2011 and now, I haven't ever really heard much about rare earths, and it was not like we did a whole lot of research on them. I mean, the only research I came close to on doing rare earth stuff was in superconductivity. There was this one superconductor YBCO which started with yttrium. That was the Y, and that's one of the rare earth metals. That wasn't even my main area. I did research on BISCO, which is BSCCO, bismuth, strontium, calcium, copper oxide. No rare earth metals in that.
Yeah, Jamal, I have a couple of pounds of that in the fridge downstairs. Yeah, everybody. Yeah, you're talking our language, Jamal. Go ahead.
I just find it interesting that it's become such a big thing now, right? And again, outside of 2011, 2012, and now we really haven't heard much of it. But now it's coming back into the zeitgeist, right? And so we're going to look at some of these stocks. But
so let's actually take a look at a couple of these stocks. So MP, and I know them as the symbols, right? And as an option trader, I am not so much. I don't really think about what the company does so much. I know, let's say MP is in the rare earth sector. Let's take a look at MP on the trade page.
Wait, hold on. Before we go back.
Yeah, go ahead.
Let's finish. We got two more.
Oh, two more slides. I'm sorry.
Two more. And then we'll go to the chart, the platform. Let's move to the next slide. So this is nuclear energy. I want to get your take on this too. Nuclear.
Oh, jeez. Okay.
I mean, we're of a certain age where nuclear energy was like, you don't talk about nuclear energy, right? Like,
right.
The things that happened. I told the story before, but I got to say it again. A couple of weeks ago, we were talking about it, and I remember Tony was like, yeah, I remember 3 Mile Island. I was like, 3 Mile Island? Jesus Christ, Tony, that was a long time ago. Yeah. but for me, it was, I vaguely remember, I was a kid, but for me, the bigger one was Chernobyl, right?
Of course.
So don't you find it fascinating how much nuclear energy now with nuclear power is becoming coming into the zeitgeist?
This is I was 15 when 3 Mile Island happened, and coming out of, and I wasn't alive in the 50s, but the 50s, 60s, 70s, it was in hitting the peak in the 80s. It was all the nuclear arms race with Russia. So nuclear bad. You had a couple of movies. I forget what the China Syndrome and
China Syndrome. That's is that Meryl Streep?
Or Jack? I don't remember. But a couple of movies came out. Nuclear is evil. Then you have the final nail in the not the final nail, but the nail in the coffin of 3 Mile Island. That was plastered everywhere in the news when I was 15 years old. 3 Mile Island, oh my God, nuclear energy is the most dangerous thing in the world. Then flash forward to 7 years, in 86, we have Chernobyl. Oh my God, that was a lot worse, obviously. I think that actually was a meltdown of sorts. A lot worse. But in the United States, if I recall, after 1979, after 3 Mile Island, there wasn't a new permit issued to build a nuclear plant, I think in like 20 years or something like that. Mm-hmm. But here's what's happening, I think, is that with the growth of AI, with the growth of blockchain, which drives the Bitcoin and stablecoin markets, or the crypto and stablecoin markets, drives energy. What built are all the global economies require energy to function? And right now, everything else looks sort of not so appealing. And I think quietly, some very realistic, sober people are saying we need to bring back nuclear. And they're doing it in a little bit different way. Compare that to Europe, which over the past few years, Germany's basically shut down most of its nuclear plants. And I think their economy could be suffering for it. I am very pro-nuclear. I think, and you're a chemist, you understand this stuff better than I do. But just like 1970s cars, American cars sucked, they all fell apart.
Yep.
3 Mile Island probably wasn't built with the best technology. Right now in 2025, our manufacturing and engineering capabilities are much better than they were 50 years ago. Mm-hmm. And I think given the relative safety, the efficiency and the waste and the environmental impact of, basically you take your spent rods, pack them in a lead container and stick them in a mountain somewhere let Mother Nature sort it out. That nuclear power, I think, has to be part of our future.
Well, you hit the nail on the head because, like you said, Europe is ahead of us in this regard, and that's exactly what this chart is showing us here. France being the top, and it's on the way for sure. But yeah, you're right. It's all the new things that we're doing, right? And clearly, research has improved over the last 45 to 50 years that makes it more viable. Okay, last chart. Let's move to the next slide, guys. Last one here. Quantum computing. I actually know nothing about this other than some of the stocks that have popped up more recently, but this is projected worldwide market size of quantum computing over the next several years. Obviously, it's up and to the right. The only thing that I remember was earlier this year, the NVIDIA CEO was saying quantum computing, that's going to take about 50 years to get any results. And all of those stocks tanked for like about a few weeks. And then they're starting to rise again. And you see where some of them are now. What do you make of this area, and how much do you know about this area?
Not much, and I do not count myself in the league of people doing quantum computing at all. Okay, I have a little Casio calculator. But quantum computing, I think, as I understand it, it's going to make AI a lot more functional, a lot more helpful. It's going to make robotics much more useful. So, to say the least, because it just makes running simulations, it makes running calculations so fast. That's what it is. And, our brains, do calculations, make assessments very quickly. If we can get, a computer to do that even, 5, 10, 20 times faster than we are, I'm not saying it's the end of humanity, because we can always just go to the corner and pull the plug out. Mm-hmm. I don't think that's the risk. But as far as making nuclear power safer, okay, making those cars that your son looks at a little bit less expensive, things like that, I think quantum computing could have a big impact. I don't think it's going to take 50 years. There's a lot of very cool stuff. I watch this is what I watch on YouTube at night. Like the physics behind quantum computing. It's very interesting. I understand about 2% of it, but I just think it's fun to listen to. So I am a bull on technology, maybe not short term, but I am a bull on technology, a bull on nuclear, a bull on rare earth, a bull on quantum computing. I love this stuff. I think it's transformational.
It certainly feels so. Let's go back to the platform now, guys. Look at some of these stocks here. It certainly feels that way right now, TPA. You're right. I mean, it's a fascinating time. So you mentioned MP.
Let's take a look at MP. I know that you've traded this recently, Jamal, on the follow page of the platform.
Yes,
you can see what you're trading. So it's sold off a little bit. Here are the numbers I look at. Okay. So if we go into the trade page, and let's take a look at some of these options, because that's where I live, Jamal.
Yes, sir.
We have earnings coming out on November 6th. Okay, so I got to be willing to maybe deal with earnings. I don't know. First thing I see up in the upper left-hand corner, I see an IV rank of 52%. That's relatively high. Okay, that makes short option strategies fairly attractive. Then I go on the right-hand side, Jamal, at those volatility numbers. Those are the way to interpret those, what's called IVX. If people are familiar with what the VIX is, the VIX measures the volatility of the SPX options. These numbers here, so I feel like the November with 28 days has an IVX of 94%. Mm-hmm. That is the VIX calculation performed on those November MP options. That's what that number is. Okay, so 94%. That is smokingly high. If you pull those options up, So here's one of the things that the next thing I look at, Jamal, is I like to see which way the skew is pointed. And skew, as you've described before on the shows you do, is where either equidistant, in other words, 5 points out of the money puts versus 5 points out of the money calls, how do their prices compare? Or how do their implied volatilities compare? I make it easy for myself. I just look at the prices, Jamal.
Yep.
With MP trading at 72, you've got the 70 puts loaded up. The ask price is 630. And again, I can only process so much information, Jamal, so I just look at the ask price. I compare ask price, 630. 2 points higher is the 74 strike. So the 74 calls, the ask price is 690. In my reptilian brain says 690 is higher than 630. The skew is pointed towards the north, towards up. That's the way the market is anticipating the risk. It doesn't mean MP is going to go higher. That's not what it says. It says that the bias of risk is towards the upside. So I might look to sell a put in there. I'll look at, in this case, you have the deltas loaded up, Jamal. How much am I getting? Let's just create a new trade in there. Let's say let's click on the bid of 65 put. What kind of return am I getting on that?
375 mid-market.
375. So here's a couple of the big numbers that I look at for this trade, Jamal. First of all, it has a P50 number. It has a probability of making half of its max profit. When I sell a put, the max profit is the credit I take in, 375. Half of that is what, about $1.40, $1.35 or so?
Mm-hmm.
So there's an 80% chance of making about $1.35 between now and November expiration. The next thing I'll look at is what's my profit versus my buying power effect. So I can make 375 versus 736 of buying power effect. In other words, how much capital am I using for that short put? Not bad. Okay, I think that ratio is about half. That's pretty good, and that's due to that 94% volatility that you see in MP right now. Finally, Jamal, what am I getting? I'm getting $10 of theta, $10.8 of theta per day. Jamal, that's why the world hates us option traders, because sitting on our butts, short options just make us money through positive time decay. So here I pull out my handy dandy calculator, and what I do is $10.80 divided by my buying power effect, 736 is equal to about 0.014. That's very high. That percent of theta versus my buying power is very high. Normally, it's about a tenth of that. If I look at other stocks with IVs of like 15 or something like that. So if I were going to put on a bullish trade in MP and I were willing to take risk through earnings, I might sell that 65 put. You already have the 70 put on. You could do the 70 put, the 65 put. They're going to have basically the same numbers.
That's fascinating. I've never heard anybody talk about doing that calculation with the theta and the buying power. I find that really fascinating. I like that, TP. Yeah, you're right. I mean, I saw these fall over the previous, honestly, until yesterday, and even it was a little bit down, but you can see there was a downtrend here for the previous week or so. And I just looked at it from the standpoint, I'm going to try and step in here and see if we're going to get a bounce back at some point because of everything we've said. This stuff has been in the zeitgeist right now.
Yeah,
that's a fascinating way of looking at it. I never looked at that.
So Jamal, let's just to break it up, let's take a look at another stock from either rare earths or nuclear, like CCJ or something like that. Because what I want, you've got some moving, what look like moving averages on the chart.
I do, yeah.
What types of indications are you getting from those lines?
I think of moving averages as greed and fear points more than anything, just to kind of see where, I mean, again, trading is all about what the crowd is doing, right? And so I always find it interesting to see how they hold up at times. And they don't always, but in this one here, even you can kind of tell, I think, you can see a situation where when the stock was on its bull run, it was basically riding this little, very thin green line. If you can see that there, the 5-day moving average, 1 week moving average, right? It was riding that, dipped below strongly here, but for the most part, it rides that. And then even during the recent downfall, you can see it bounced off of the 50-day moving average, which a lot of stocks tend to do at times.
Okay.
Bounce there and bounce backwards. Again, I just use it for those type of reasons. I think when stocks are following the rules, if you will, when there's no big buying situation or no big selling situation, when they're mostly just sort of trading on their own day in, day out, I feel like sometimes they can follow along on these trend lines. So I just kind of look at it like that. By no means do I, do I base my whole trading idea around a moving average. It's just kind of another sort of guideline every now and again.
So it's and I'm not a chart trader necessarily, but I know a lot of people are. And so I'm not going to argue with someone who uses moving averages, using some sort of chart information to determine a bullish or bearish bias, or fundamental information. Oh, CCJ has great earnings or whatever. If that gives you a bullish or bearish bias, awesome. Okay. I'm not going to argue with you, but all I will ask is that you use a high probability strategy to exploit it. So let's take a look at CCJ options. If you were to be bullish on CCJ, so I'll do the same exercise with this. CCJ trading at $89, and very conveniently, the 28-day options have an 89 strike. Earnings are coming up in a few days.
Earnings are on November
5th.
Yep.
So we're looking after earnings. You have to be willing to take risk through earnings here, and these what Jamal and I are talking about.
Speaking of that, brief aside, does that influence you sometimes on how you sell? Do you sell? Doesn't matter. You just figure vol is high. You'll sell in an earnings cycle.
I will. And the reason is that there's enough time between 28 days and what about 16 days or so between now and when earnings come out. There's a decent chance I'll be able to buy that short putback before the earnings. I am not an earnings trader, Jamal. I will trade earnings. Like I might do a 2 DTE option around CCJ's earnings just to play, for context. But that doesn't pay my bills.
Yeah.
Okay. Okay. There are other trades we could talk about on another show. How do I pay my bills?
Yeah.
But for CCJ, I'm just looking going out 28 days because it gives me a little more flexibility. And I just do this exercise, Jamal. Again, the 89 strike. Let's go down 5 points and up 5 points. 89 down 5 points to 80. Let's change it to the 84 strike.
84. Okay. Oh yeah.
89 down 5 points, so it's 345. Up 5 points is 94. 405 versus 345. That looks like a bullish skew to me.
Yeah, upside skew. Once again.
So let's take a little bit. Take this one step. And by the way, folks, this is why I love. This is the platform that's so valuable. If you clear that out for a second, and then just click on the 84 puts again, the bid, that P50 number, you will not find that calculation anywhere else. Okay? The reason is that I built it for this platform and nobody else has figured it out yet. We're the only platform to have this type of number on it. There are some other things too. But again, this gives you a competitive advantage as an option trader. I want to do this little exercise though, Jamal. So again, 84 put, holy smokes, I need to put up $1,272 of capital for that.
What does that tell you about the name?
Yeah, well, right. It's a risky stock. The overall vol is 60. It's not like MP, but again, IV rank 51. So here's what I want to do. If I pull out my calculator, $9.20 divided by 1272, okay, is 0.007. Let's remember that.
Mm-hmm.
Now, as an exercise, Jamal, click on the ask price of the 82 put to create a short put spread. Bing. My credit goes way down.
I don't love that.
My theta goes way down. But my P50 number stays pretty high. But now let's do a quick calc. But look at my buying power effect, $136.
Yeah.
It's about 1/9 of what the short put is. Let's do the theta calculation again. 0.53 divided by 136 is equal to 0.003. Close to 0.004. So it's not as high, okay? So in this particular instance, you're going to get a higher return on theta on that short put than you will on the short put spread. Okay, so if you have a small account, something, let's say you have $5,000 in your account, I'm not keen on putting 25% of your capital on a short put in CCJ.
Yep.
Okay, you got to get your numbers. You got to get your number of trading occurrences high. I'm leaning towards a short put spread for a smaller account. Bigger account, if you can handle $1,200 margin requirement, so the 84 put, you get a higher return on capital.
Yep. Yeah, man, I love that calculation. I never really thought about that. Well, I also, that's what I wanted to ask you. What was the impetus behind the idea of the P50 calculation?
So way back when, back when I was in the trading on the, back when I was trading bonds and the bond and note options at the Board of Trade, I had just begun to think, what's the probability of notes doing this or whatever? And I figured out the probability of an option expiring worthless. That's the pop number you see on the far left-hand side. Mm-hmm. So when we built Thinkorswim, when I started that back in 2000, that was a calculation that I put on the platform. Flash forward to about 2006. Jamal, you've been around the block, and we both know people who have come and gone from this business. The people who seem to not last are the ones who think they have it all figured out. Mm-hmm. They're the ones that stop asking questions. So I asked the question back in about 2005, okay, now I know what the probability of the option expiring worthless is. What's the probability of that short option making half its profit? So that was not a harder calculation, but it was a different calculation. The pop number, the probability at expiration, is a closed form solution. It's a formula like Black-Scholes, or it's like an algebra calculation. Okay. The P50 number is more of a numerical solution. So it's a Monte Carlo simulation. So that's why if you hit swap, if you do this, Jamal, just for kicks, see that P50 number is 80 right now. Hit the swap button 2 times, and in the down right there, hit swap, and then go back to short. 78. See how it goes from 78 to 81 to blah 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 blah. Yeah. That's the Monte Carlo simulation running 1,000 potential stock paths for CCJ between now and 28 days. That's that. You want to talk about quantum computing? It doesn't require quantum computing, but that's the kind of computing it's doing in the back. Mm-hmm. So again, no other platform does this. And that, I think, is a huge number, because I can get out of these trades before expiration. You want to know how option trades can get 20, 30, 40% return on capital? This is how.
Wow.
And I'm not saying it's going to be a winner, Jamal. I'm not saying to win in all these trades, but you're putting the odds in your favor.
Yeah, that's all we can ever do, right? By the way, that's the first time I've ever hit the swap button on the platform. Never done it.
Well, yeah, because you don't buy options, so it's okay. Yeah, you're going to swap to a long. Oops. Oh, I don't want to be selling that. So let's take a look at another stock. So I was going. Let's look at Oklo.
Apple.
Beyond. Okay, do you want to talk about Beyond Meat for a second?
No, I don't. Not really, but yeah, sure.
We could talk about Apple or Beyond. Okay, Beyond Meat. Were you trading options or stock in there?
Stock. I decided to buy some at 250. We'll see what happens.
Here's the thing with Beyond Meat, or here's the thing with a $2.43 stock. You're basically trading an option. It's
exactly.
That CCJ put we were looking at a few minutes ago for $3.50, whatever it was, is more expensive than Beyond Meat.
Yeah.
So is there any advantage to trading the options on Beyond? I don't think so.
I don't think so neither. That's why I just bought stock. We'll see what happens.
Just buy the stock, take a shot.
Yeah.
I'm not trading it. I am, I'm not a Beyond Meat guy. Do you partake?
Not at all. Not at all. And again, first of all, I think this thing is madness. And like you said, it's taking a shot. Let's just see what happens if we come in next week and the stock is up double. That would be fun. If it goes to zero, I don't care. That's literally my thought process on it. And no, I remember we used to buy it every now and again just to try or whatever, but I didn't really like it that much. And I find this whole thing interesting and funny that recently now it's come back. And what it started, they did I don't even remember what happened a week ago. They did some type of.
They converted some long-term debt to equity. So they diluted their outstanding shares. They issued a bunch of new shares basically to retire some debt that they couldn't pay.
Yeah.
I mean, hey, I would love to do that, but it's that. So that's what it is. So and then it just took off because Beyond Meat is solving its problems or something like that.
Well,
I don't know.
Big offers in here, so I might be toast, but who cares? No big deal.
This is a meme. This is a meme stock.
Yeah.
Okay. So if you go to Reddit and Wall Street Bets or whatever, this is what they're talking about. It's a meme stock, and I would just buy the stock. I wouldn't fiddle around with options in it.
No, I don't think it's worthwhile. Okay, so Apple, you had a point on Apple.
Well, Apple again saved my butt with a rally. I was actually talking about Oklo, but that's okay. We could talk about Oklo.
Oh yeah, let's go to Oklo. That's definitely an interesting one.
And so again, a stock that's traded down. And Jamal, just to show another point about these options, if you go into the upper right-hand corner to the arrow next to accounts, the left, not that one right there. So see those stars kind of halfway down?
Yep.
Those stars, those are the liquidity indicator. 3-star liquidity is pretty good. It doesn't mean you're going to make money on a trade. It means how efficiently you might be able to enter and exit the trade. In other words, to keep slippage down.
Mm-hmm.
3 stars is okay. 4 is as high as it goes. So Oklo is relatively liquid, and I trade Oklo a fair amount. So we can do the same exercise, the 28 puts. The difference here is a $135 stock. This is a higher, again, if you sell the, sell the 119s maybe.
Okay.
Holy smoke, that's $4,500. That's too rich for a smaller account.
Yeah.
And if I go and I buy the 17 put, the 117 put to create a vertical, bang, 75 cents, it's $125 buying power requirement. So this is how easily you can adjust the strikes, adjust the strategy on the platform. Okay. We created it so it's click, click, drag, drag. And you see your numbers updating accordingly. Those numbers down below, whether it's your pop number, your P50 number, your delta, your theta, those update instantaneously as you drag and drop those options. So again, for a stock like a $135 stock, I'm leaning towards a short put spread instead of a naked short option.
Yeah, this one is to do your exercise again, do the 119. It's hard. On the upside a little bit different. They only go in 5s.
Well, yeah, that's fine. So
15 wide. We can do the 120, and we can do
to the 155.
155.
Yeah, I would go. So 135 down to 120 is $15. 135 up $15 is 150. So the skew is pointed.
I mean, you can see your
Kinda, yeah, it's pointed north.
I mean, it's not even equidistant, and you can see it's pointed north, right? Yeah.
Right. It's leaning towards, and that method, that's the method I used when I was trading, and I didn't have trading on the floor, and I didn't have all the calculations that I do now. And so, yeah, like you pointed out, Jamal, it is not perfectly equidistant, and it doesn't factor in necessarily the cost to carry, yada, yada, yada. But for a quick estimate of which way the skew is pointing, that's how I use it. 127% overall IV in these November options. That is screamingly high. Yeah, if you have the capital to be shorting puts in Oklo, okay. And that high, I'm not buying call spreads. I'm certainly not buying out of the money calls. Those calls are too expensive.
Way too.
For me, this is a short put spread trade.
Yeah, way too expensive. Is it fair to say that this has kind of become the epicenter of the nuclear revolution, Oklo, more so than CCJ? CCJ was that name for a long time.
Well, isn't CCJ, correct me if I'm wrong, Jamal, isn't CCJ a mining company? So they dig the uranium out of the ground. Is that correct?
I actually don't even know. I've never.
I think they do. I think they're an actual uranium company.
Oh, that makes sense.
Oklo builds the reactors, or these little modular reactors. And so it depends on how this expiration goes for me, Jamal. But I was thinking about putting a little mini reactor in my property. I think that'd be kind of cool. just what does Tom Preston have in his rent? Well, I have a nuclear reactor. What do you have?
The next you're going to tell me you have a DeLorean.
Yeah, really. It may not start. But it's, yeah, I mean, I think the whole idea of and we were talking about this earlier, Jamal, the whole engineering and the science behind nuclear reactors. I think Oklo is certainly, who knows, maybe it's not making a name for itself. But here's the thing. Who is it? Microsoft. Is it Microsoft is resurrecting 3 Mile Island to power its AI or computing business or whatever.
No kidding.
Amazon is getting into this. All these other big name companies that rely on, these instantaneous, billions of calculations a second. They need the energy to drive it. They're looking at things like the modular nuclear power plants that Oklo creates. So yeah, I think they're different sides of the same industry.
And see, when you put it in that terms, it's really fascinating what these other companies can kind of morph themselves into, right? Right before our eyes, whether it's Amazon, whether it's eventually Meta, they become, and Microsoft, the biggest thing. We haven't talked about Microsoft in terms of software in the last couple of years. It's been more about the fact that they have a partnership with OpenAI. They were really the first big company to have that type of partnership, and the others have followed suit. It's kind of fascinating what we're seeing here.
Well, I know that a lot of folks use ChatGPT for, and ChatGPT is that Microsoft? No, Microsoft is.
Well, it's OpenAI, which again, Microsoft.
OpenAI,
yeah.
So people are using the AI tools to do everything from write essays on the English Civil War to how to create, JamalChandler.com website.
Yeah.
And so it's saving people's time. You can argue about whether that's a good or bad idea, but that's how it can and I think, there's the AI that I can use for free. And then you have to pay a premium, you have to pay for a subscription to get the nicest stuff, the more powerful stuff. That's probably going to be the way, you want that AI in ancient English history. You pay for the premium service to get the better, essay on the English Civil War. Hell, I'll pay $19 a month to get an A. Sure. And the same thing, if I'm going to create my own website, yeah, okay, I'll pay for a subscription. If I can monetize it, I'll pay the subscription, right?
Yeah.
And which again is, it's this is probably, the Tasty Live Network is the only place you're going to learn about how to think about markets the way we talk about them, the way we think about making money the way we do, the way we think about option tradings the way we do. And it's free, and that's what we do for our viewers. And we love you for it. We love you for participating, love you for trading with us. But to go back to, let's take a look at Tesla. Tesla's another one that saved my butt. I like to say that, oh yeah, I've been trading Tesla, playing it like a fiddle. The bottom line is, last week, a late rally saved, I had I don't want to say a metric buttload of put spreads in Tesla, but I had some put spreads on. They were killing me. Late rally on Friday afternoon, bing, loser turns into a winner. Then I'm short a bunch of call spreads going in, after the sell, I sold a bunch of call spreads. What does it do? Yesterday, oh my God, it's threatening my short calls. I think I had the 450 strikes I think I was in. And then bang, sell off this morning. You hold these trades long enough, and that's why, Jamal, keep your positions small. The only reason I could hang on to these trades and make money on them was the losses were not catastrophic, because I kept positions in line with my account size.
It's been moving around quite a bit. I mean, even on that earnings yesterday, big dip and then kind of strong recovery to end the day. To your point about those short call spreads, looks like you might have dodged a bullet, especially after today's move. I want to get your thoughts on the last thing we started with, these quantum computing stocks.
Yeah,
there's a couple, but I feel like IonQ, QBTS. There's another, but I feel like IonQ is probably the one that seems to trade the heaviest.
Let's take a look at it.
It's another one I sold to put in recently, but let's do the same calculations.
So here's one of the things. So for me, Jamal, liquidity is the most important thing of all. It goes back, and we don't have to look at the stars, but what I look at is the bid-ask spread between the bid-ask spread. So this is 3-star liquidity. Okay, it's fair enough. So if I look at the 55 puts right now, you have a position there. It's 465 to 495. That's 30 cents wide. It's certainly wider than you're going to find in SPY. Okay, the SPY is the granddaddy of liquidity. But for a stock like this, Jamal, I'm sorry.
Next strike down, 330, 455.
Yeah, then it widens out. So you got to be careful with stocks like this. The reason it has a 125% volatility. So here's what market makers, when things get crazy on the floor, you keep them high, wide, and handsome. You widen out your bid-ask spreads and let them come to you. You don't try to be a hero and, tighten things up and be willing to take risk and stuff like that. So remember, a market maker does not take risk. Like we're talking about at the beginning of the show, hedging a mortgage portfolio. Market makers will buy a put and then immediately buy stock against it. So they buy put, get short deltas. They'll buy enough deltas of stock to get 0 deltas. If they short a put, they will sell stock against it. So here's what's happening. If the stock is moving around a lot, a market maker doesn't know where he can get filled. So the last trade was 61.96, right? Where's the next trade going to be? 60.95. It's ticking around a lot. So I need to widen out my bid-ask spread to wrap it around fair value, to pack in enough edge if I miss my stock hedge. That's why you see these bid-ask spreads widening out. So you got to be careful trading these things. Be patient, use price discovery. Do not hit bids. Do not just sell at 465 just to get in. Okay? I'd work that trade at 475 and see if I get filled.
Yeah, that's very important, I think. And I think sometimes, early traders are a little impatient, but TP's absolutely right. You got to just work a trade sometimes.
Because here's what happens. That slippage that you save by working limit orders in between the bid-ask spread, that makes or breaks your career. Really?
Sure about that.
I thought it was P50. I thought it was Theta. I thought it was capital management. Blah, 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 blah. Those little nickels and dimes that you save every single day add up over 30 years. And fighting, that's what traders do. Okay? Any AI system can go in and find the high probability put to sell. Okay, great. Give it to a machine. It's when you start to have to work the orders in between and compete against people like Jamal who are widening out his bid-ask spread, that sort of thing. When you have to compete against a human who actually is managing risk, then you got to be a little bit smarter. And by the way, the computer's going to have a lot bigger risk tolerances than you might. They're going to take a lot more risk. The computer's going to take a lot more risk than you might be happy taking. So that's why you got to step in and say, I think I'll be making the trades. I'll let the computer do some other things for me.
Oh man, we're at time. It sucks, man. TP, Uncle TP, as I affectionately call you, man. Love being on with you, man, as always, man. This is great. It's fantastic.
Well, I think what we could do, we probably need to start doing some more of these sessions together, because you and I have very different perspectives on some markets, some the ways of thinking about things, but it all sort of converges kind of into the same strategies, and I think that's valuable for people to see.
Yeah, couldn't agree more. Folks, thanks for watching Options Trading Concepts live today. Of course, we talked about quantum computing stocks. We talked about rare earth stocks. We talked about nuclear energy stocks. These are the three things in what I feel is the zeitgeist right now, and so does TP. So if you want to reach out to us, you can at any time. Tell the people how they can reach out to you, TP.
You can email me at tp@tastylive.com. And by the way, if you're not signed up for our daily cherry bombs and weekly cherry picks, where I write the cherry bombs and start writing the cherry picks, you need to sign up for those to get those in your mailbox daily.
Sign up for those ASAP. And I'm on Twitter at Jamal Chandler, and then Jamal at tastylive.com anytime you want to email. Folks, have a great weekend. Thanks for watching. We'll see you soon.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options.
If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
What's going on, everybody? Welcome back to another segment of Risk and Reward. Today's Friday. It's been another volatile one, Gus. How are you keeping up today? How's everybody's portfolios doing? I know the market's hitting another all-time high. Gold not as exciting, but a Friday for sure, Gus. How are we doing, brother?
Yeah, it's one of the Fridays of all time for sure. I'm doing good. Yeah, portfolio's looking good. All-time highs are pretty much always going to be a good thing for me with the way that I've been trading until proven otherwise. I was just chuckling to myself silently as we were sitting here pre-stream, looking back to just 2 weeks ago when on Friday we were talking about how the run might be over and we were having this giant sell-off and what's going to happen at the beginning of next week. Like, is this proven otherwise? And now just 2 weeks later, we're just back at all-time highs, cruising along.
Yeah, it's been pretty much the same story all year. It's kind of, it's like the same story every time, but it's impressive every time. I know we had CPI today. We sold off a little bit at the open, and then, I mean, we just ripped to the upside to all-time highs, like with no remorse. And then after hitting all-time highs, consolidating for a little bit, but just grinding higher, pretty much to another all-time high, and it's just going to keep going until it feels like it wants to stop. But I know some of the trades in the portfolio is doing pretty well too, because it gives another great opportunity to maybe start managing some long delta to the upside. I know a lot of people have more long delta in since we got that sell-off like we mentioned a couple weeks ago. And then just kind of an opportunity to reposition. So that's kind of cool at the same time, but another all-time high into the holiday season.
I suppose so. Are you counting Halloween as the holiday season here?
Kind of. It feels holiday season. I know over here over the last like 3 days, it's gotten a lot colder. So I mean, I like it. It's one of those things where you look outside and it looks warm and it's so deceiving. So just like these pullbacks in the market, deceiving. Just like this one, deceiving. So I think the top for the summer in Chicago has been put in though. I know it's a strong pullback, but I think the top is in because I think it's only going to get colder.
Yes, it would definitely be wise to reposition to short delta for Chicago temperatures at this time if you have not done so already. This is not, unlike most traditional assets, temperature can go below zero, and it does pretty frequently here in Chicago. So just remember, even if the temperature gets bankrupt, it actually still can go lower. You may not want to exit those shorts just yet. Yeah, I've always said, and I said like when I first moved to Texas, that I think Christmas just has less punch when you live somewhere where it's just warm like all year.
Right.
And so yeah, I think I might be a little bit more excited for it myself. This will obviously be both of our first Christmas in Chicago. What's going on, Wolf, Wit, Andres, Mikos, everybody here? Andres, sorry to hear about the zero DTE. It's bleeding on you. I know how that feels. Yes, it's the holiday season. Can't wait till it's over, says Grumpy Mike. Right on brand for Grumpy Mike. Yeah, let me know in the chat, guys. What's too early for places to start playing Christmas music?
That's a touchy subject, brother.
I was in a department store maybe 2 weeks ago now. I believe the 14th was the date because I even checked to see like what date is it that they're playing Christmas music already. But it's starting to pop up. I know our very own Thomas Westwater was just singing some Christmas music to himself at his desk yesterday. Said he's already in the spirit. So it's a touchy subject for sure. But are you an after Thanksgiving person? Is it November 1? Is October fair? Like, you guys let me know.
You know, I think growing up, I've always been a little bit, and we can jump over here to the Tasty platform. We can check out some of these underlyings at the same time. But I've always been more of a wait till Thanksgiving. Like, I want to really be able to soak everything up and then wait till Thanksgiving, maybe the day after Thanksgiving, Black Friday, maybe throw the Christmas tree up. That's like the perfect timing. And then, New Year's, take the tree down. Although sometimes I'll have my tree up maybe 6 months afterwards. But internally, that's how I'm feeling. So
yeah, you hit the nail on the head for sure. I totally agree. I think that my family has always done the tree like on Black Friday, the day after Thanksgiving. That's when the tree goes up. I can get behind it if you're a November 1st Christmas music is fine sort of person. I personally am an after Thanksgiving type, but yeah, I do think that before Halloween is starting to get a little bit crazy.
No, 100%, 100%. Heading into this fall season, we got vol contracting a little bit more here now. Vol really taking a dip. I mean, ever since we was it the put spread? I think you had bought a vertical on VIX, right?
I had sold a call spread.
Oh, it was a call spread.
Yeah, essentially same deal. Yeah, bearish trade. I needed it below 18, so I'm feeling real good about that right now.
Yeah, no, we got well below 18. Not only that, we're trading back near 15s in the VIX, which is interesting because it's nice to start to get an expansion in volatility, but that usually means we get more of a pullback in the market. And at the same time, it's like we get this opportunity to maybe manage a little bit more long delta, but then to the same tone, we're down on vol again, and it feels like premium's just a little low across the board today. So it's kind of more just a managing kind of end of week kind of feel. That's the sentiment for today.
Yeah, I'm inclined to agree as well, especially with, we finally turned back over and we're hitting all-time highs, obviously, in the broader market, and that translates over to a lot of asset classes as well. So, yeah, I'm pretty much just kind of letting everything print. My only, major management I need to do today, is Philip Morris, which I do not think is going to reach my critical price of 160 by the end of the day, but I'll let that thing run right up until 2:59 p.m. before I pull out of it. But, yeah, that's the only thing that's really give me any pause today. But yeah, otherwise, and VIX is the biggest winner in my portfolio today. We finally caught that down move. And it's funny too, because I took that VIX trade on this exact thesis. Like, it has manifested perfectly. I thought that we were just going to get that little blip and then the market really wasn't going to care and we would return to all-time highs and everything would chill out. And that's exactly what's happened. But that sentiment did not translate to the other positions in my portfolio. There were some things that I cut losses on. I can't remember. I cut one set of losses, and there was many other things that I was debating while we were down in the doldrums there getting rid of. And the whole time I'm holding that VIX position with the thesis that we're going to recover. So it was interesting incongruency of thought that I was having there. And I went back and forth a little bit. And should have just held strong to my VIX conviction, which was a broader market conviction.
No, which is really funny because it's almost like that vol play that you're kind of looking for, you went straight to the horse's mouth. You're like, let me go straight to the volatility index and trade exactly what my sentiment is feeling. So it's dope that it's playing out too. But it is funny that you went right to VIX, and is just recognizing those other positions in the portfolio are kind of more of like a slow burner, I guess, per se.
Well, yeah, and usually I'm using VIX. I'm usually getting long VIX kind of as a hedge against all my long delta, which is, that works the other way. But this time I got short VIX, just congruent with all the rest of my long delta. Essentially, well, doubling down isn't a fair assessment. I maybe 5%ed down, something like that, in terms of the rest of the positions that are long delta that I have. But it's worked out really well, so I'm pleased with that. And yeah, I think that being able to trade the VIX directly is such a privilege. What a privilege we have to have all of these assets that are just specifically catered to like your exact thesis. I mean, just 20 years ago, things were so different in these products. A lot of them didn't exist at all.
No, 100%.
Yeah, you're telling me like everyone wants UNH, and so they're just like, here you go, 2x leverage UNH. We made it. Here it is for you.
Yeah, and I mean,
it's awesome.
The rate at which we're developing some of these trading vehicles is crazy too. I'm like, I didn't even know that was possible, but I'll take it. The creativity, I love it.
Yeah, and it's smart for whoever is making these markets. I mean, they're really quick to the punch. Warren Buffett buys UNH, and 3 days later, they're like, "Here's your 2x leverage."
Well, I almost feel like it's so mutually beneficial because it's like there's such an opportunity to create these products because people want them, and then at the same time, people want them. So it's such a mutually beneficial kind of thing, but kind of crazy that we have the technology to do that. Because I mean, if you said this in the 90s, 80s, right, they're going to be like a 2x leverage UNH. You're like, what are we talking about right now? So seeing all these different products is crazy to zoom out on sometimes. But UNH has been a little bit more quiet. It's up on the day, but I know, as you know, in your portfolio as well with UNH, it's kind of been going back and forth. It's been really volatile to the upside, downside. And I know Mikey even makes those comments sometimes, how he's talking about like just rip to the upside. Like, what are you guys waiting for? So I know you guys are well positioned in there. Unity Software, that's been another slower one. That one's back up on the day at least. 28 days left till expiration. We'll be a little bit more patient there. Oracle's been one of the most volatile ones. I forget if you still have a position on in here too, but that P&L will just flip flop on a day-to-day basis with all the news Oracle gets too.
I don't. I've decided. I think that I think Oracle is just 2025 Tesla, and I'm not going to touch it. It
what do you
so
mean
bad.
by that? What do you mean by that? The uncertainty, the news that might just drop at any moment.
Yes, the uncertainty, the volatility, the broad headline making news with consistency that swings this thing every which way. I would say largely my thesis is bullish on Oracle. I think it might be a little bit overvalued right now. I mean, we're obviously in a little bit of a speculative period with it, but I don't know that valuation is necessarily unjustified either, given the future. Like, I'm not as strong that's overvalued as I am on, say, a Palantir. So I really can't get my head around this company. I'm laying off of it.
No, I hear you. In other words, that's why we're locked in some defined risk, dude. Trying to keep some things under control here. But as with gold, that's been another slow one. I have some long delta in there. I have some short delta in there. Near delta neutral, weighing to the downside just a little bit up here, as you can see, -3.5 delta. But that's been a funny one. After that sell-off in gold, I feel like it's been lacking a lot of volatility, or maybe it's just trying to trade within a smaller range right now before it decides what it wants to do next. But I feel like this sell-off woke a lot of people up, and I feel like there was so much anticipation up to this gold sell-off, and then it's like you get the sell-off, and it's like, all right, now what? We're kind of at like a stalemate right now. So in terms of the gold positions, just being a little bit more patient there. Did you still have on that silver one, or did you get a little bit of gold exposure?
No, yeah, I still have just my silver shorts. I need it. I have 68 DTE, and I need it below 68. So I guess I'm aligned on my expiration and critical price there. But, I said that wrong. 42. I don't know why I just did that. 68
Was that
DTE.
SLV?
Yes, SLV. Okay. I have 68 DTE. I need it below 42, which I'm still feeling fine about. My thesis that the rotation out of silver would be quicker and more pronounced than the rotation out of gold has not really come to fruition. They've stayed pretty much like perfectly correlated this entire time.
Right.
And when I saw gold start to sell off, and especially now that we've actually strung some down movement together and it hasn't just been one isolated day at a time and then we go to higher highs, I really thought that people would start getting a little bit more scared of silver. That hasn't manifested yet. However, I'm still feeling very good about this position despite it still being in the red.
Yeah, no, 100%. It's kind of a very similar story as a gold there. We got that initial crack and then kind of just waiting around a little bit more. So I know you have 68 days left to expiration, you had said?
Yes, which is, I think, plenty of time. End of the year is pretty much, I think,
that's a really
31st
nice
on the nose.
Yeah.
So
Q4.
Exactly, yes. Yeah, FY 2025, Q4. To acknowledge chat here, just grab some MO shares and wait. I don't know if that was in reference to my Philip Morris position or not. If it was, that's very funny because I think that Altria Group's primary thing is helping people quit smoking. So those would kind of be aggressively against each other positions.
That's an iron condor right there.
Yeah, it is. It would be a fun little portfolio to just use those two things against each other and see what you can get done. But and then yes, to the point about UNH has earnings and a congressional hearing coming up. I actually just wrote a article about UNH's upcoming earnings call and the Department of Justice probe earlier today. It is in the news and insights portion of the Tasty Live website if anyone would like to give it a read. But yes, that congressional hearing is going to be gigantic for them. I'm kind of bullish UNH through that congressional hearing pretty much no matter what happens. I think they're looking into specifically they believe that people were issuing fraudulent prescriptions to increase costs on Medicare patients is what the probe was about specifically. And I think that no matter what happens, whether they are found guilty or acquitted, so to speak, that just the uncertainty being lifted will be enough to prop this thing up a little bit more. Obviously, having nothing happen will be better than having something happen for them. But I think no matter what, just getting out of the woods, peeling that uncertainty back, that would really do a lot for this.
Yeah,
I was looking at shares for the 6.5% dividend, but the options are recently liquid too. Lower IV, but might look at selling strangle around shares.
I was noticing that through the uncertainty, IV was still sitting a little low. Although we kind of just discussed all that uncertainty a lot around this underlying. But I know we do have earnings before the bell October 30th. So I might put a little bit of a pause on MO, but afterwards, any type of pullbacks in MO, an increase in implied volatility would be interesting.
Amazingly, I actually think that you can just be bullish both this and Philip Morris at the same time. I think because it's a trailing thing, right? It's like as Philip Morris increases the number of people hooked on nicotine products, then there will in turn be more demand eventually for people who want to get off of said nicotine products. So yeah, they kind of feed and complement each other in that regard.
What was the ticker for?
Just PM. It's right at the top there.
There we go.
You're on it. That's PMM. I don't know what that is. PMM. I don't know what they do.
They do something. Not much. They have 20,000 shares traded on the day. Not much, but something's
going on. They don't do a whole lot. If anybody knows what PMM does, feel free to share.
27.5 IV rank, 3 million shares traded on the day for PM. IV rank sitting at 28. No earnings over here. This options chain is looking a little bit better.
Yeah, earnings just happened. That's that giant red wick you were just seeing on the chart there. Took a big old dive down after earnings, and then the market quickly decided that was not necessary, and we pulled back intraday.
What do you guys think of PMCC?
Poor man's covered familiar. Call, an MO.
Poor man's covered call.
Yeah, you're not deviating. Got your acronyms mixed up there. Yes, Altria Group, noted ticker PMCC. He's doing it again.
No, I was seeing what was going to come up for PMC this time.
There is anything? Yeah, I got you. But yeah, I mean, I could see that holding water. I think that's fairly aligned with the strategy that Theta Trader outlined there. Just a bit more protected, but I'm with it. I wouldn't say I have any strong broader convictions about MO, save for the thesis that I just shared, but that's more of a longer term thing that wouldn't apply as much to options. But yeah, I think they're in a good spot. Bull flagging, if you like technicals.
No, not much bull flagging, but just looking at where these highs are on Tesla, I was struggling trying to take that line off the chart.
Double long Philip Morris Altria infinite money glitch. I think if you were to really game it out, I think you'd want to be long Philip Morris for the next 5 years, 10 years, and then take those profits and rotate into Altria once it's a giant problem and Altria needs to save everybody.
And Altria needs to save everybody. Some of the Chinese names up a little bit on the day. The IV rank on these are still pretty juiced. We had that rally, and it was really interesting to see that the risk was being priced into the upside on these Chinese names. So even though we've been getting a pullback, the IV's still there. I mean, the premiums are going for a decent amount. I still have a position on in Baidu. Earnings before the bell, November 18th. I'm going to look to try and manage that one by next week at least. We'll get around 21 days on that one. Other than that, I don't think you had any exposure to the Chinese names, right? I think you had.
No, I haven't touched China in a little while. I'm not surprised we're taking a bounce. I mean, it's not like they were going to go down forever, but I did think that the run was maybe a little bit pronounced as well. So I don't know. I feel like we're entering a period of. I feel like these assets are fairly well priced to me.
Yeah.
Oh, Altria owns Philip Morris, which I somehow forgot. There you go.
Okay.
They know too. There you go. They also understand that as Philip Morris does better, Altria does better.
As for NASDAQ, it's been really quiet in NASDAQ as of late. Let's go over here to the active trader tab. Maybe we can utilize this a little bit more too. Team has been doing a good job on this. I mean, the UI looks beautiful. So I'm going to go over here to log, pull this down a little bit here though. But I mean, it's been, if we could pull this down, there we go. I mean, it's been a little bit quiet, especially with us ripping to all-time highs. It was kind of difficult to find an entry. It was extremely volatile. So I was like, you know what? Hands off. It was kind of crazy to see the rebound from yesterday too. So I'm like, you know what? Let's just put some hands off until we get a little bit more clarity in the market. All-time highs, all-time highs, all-time highs. So gonna be patient there. But it's been quiet in this neck of the woods if we've been wondering what's been going on in some of these micros. Nothing on the day at least, but hopefully we get this pullback because, sitting on your hands isn't that fun. Just sitting here and observing,
Yeah, no, I'm inclined to agree. And yeah, I mean, I don't know that I necessarily want pullback. I would be fine with continuation. I have enough exposure, but yeah, it's not as fun. It's certainly not as fun without a little bit of chop.
It's like sitting on your hands now. No, yeah, but maybe get on some.
It's like, I mean, I guess it's just different lines of thought here because I'm thinking I'm sitting on my positions. I ain't sitting on my hands. I'm sitting on this.
Well,
this
hey, no, exactly. I mean, that's kind of sitting on your hands. You're not too active. You're kind of just riding the wave now. It's kind of just like hands off the wheel at this point.
Yeah, and I won't be opening anything new, I don't think, into the end of the day, unless a spot jumps out at me that I really like. But Altria owns Philip Morris USA. There it is. USA brands versus Philip Morris global market. Ah, okay. I actually I didn't even consider the fact that Philip Morris is so global, even though I totally know that they are. Their dominance in Europe is part of my thesis for being long there. But that makes sense. Honestly, I think that the U.S. is a bit quicker than Europe in terms of rotating into stopping smoking as well. I mean, empirically, cigarette smoking is still much, much more prominent in Europe. So perhaps they could expand Altria into that market in 20 years or whatever, if however far Europe is lagging behind us on getting rid of cigarettes.
You know what? I think the whole scandal that's going on in the NBA right now, and it's just so tragic. Like, man, Chauncey Billups, he was my guy. Like 7 years old, 8 years old, seeing him come down the court, just pull up three. He was so nice at that. And then just to see him, in the middle of all this that's going on right now. But I feel like what's going on right now with that scandal is like the perfect way to explain kind of insider trading in a way that wouldn't seem as complicated from a stock market perspective. But that kind of scandal is kind of crazy. We haven't really touched on that topic at all, but it had reminded me of Beyond Meat too, because I remember the other day I had tweeted, I was like, I just feel like there's some corruption going on in Beyond Meat. I remember saying that, and I just can't prove it though. You know, those memes going around, like, I just can't prove it.
Yeah.
And I had made that comment, and someone had just said, like, even if you could, it's not that it would matter. And I was like, that's a good point. But it was just funny to think about these, the topic of insider information, even just seeing that into the NBA with these high profile figures. Did you have any thoughts on that too?
Well, yeah. First of all, to your point, yes, I think the comparison to insider trading is excellent. I actually just saw a tweet earlier today that said, if you think NBA players shaving points is crazy, wait until you hear about what politicians do with the stock market.
Right. But it was no, go ahead.
Yeah, no, and that's absolutely true, and I think that is a very good equivalency. To the point of the Chauncey Billups thing, yeah, this is like the craziest thing I've read in my life. Every time I read more details, I watched Kash Patel's press conference on it. It's nuts. I mean, they named Casa Nostra, the Gambinos, and the Lucchese crime families as being associated with this. They're using X-ray tables so that people can see other people's cards, and they got decks of marked cards so that people can see special markings on them with special glasses on. They got automated shuffler machines. I thought a little funny nuance part of that was that the FBI said that they have proof that they stole these rigged shuffling machines at gunpoint from a different organized crime family that was also rigging poker games. It's the nuttiest thing in the world. I don't know how you get wrapped up in this. It sounds like Billups was like the marketing arm. They were recruiting people in with the promise of playing with former NBA greats. Then they would steal them for all their money. $7 to $10 million they're citing. They arrested 30 people. That is crazy town to me, this whole thing.
And I mean, the time to do it's interesting, right? I mean, we've seen this industry really blow up. We've seen a little bit more regulation around this industry as well. And then, I mean, even for the players, I mean, it's going viral on social media. I mean, we know, I mean, it must be hilarious sitting there as a player, though, just watching people talk about the bets that they're putting on you. And you're sitting there watching that on TikTok and just, I wonder what the realization feels like of thinking like, wow, how I perform tonight is literally going to dictate people's P&Ls by the end of the night. Like, I wonder what just that realization in the moment of, like, as a player and just having social media and recognizing that.
Oh yeah, and I mean, they all knew this, and this isn't nothing new to them. I mean, I'll hear players come out about like the death threats that they receive when they don't go over their prop or whatever else. It's crazy town. People are getting carried away with that in the first place. But yeah, this only makes it more pronounced. And I think that what a lot of people outside the betting community wouldn't realize is that they say that there was one specific game while Rozier was on the Hornets where there was $200,000 in unders in his player props. And the traditional sports book is going to max you at like probably $2,000 on a player prop, on a straight player prop on a regular season NBA game. Like $2,000 is going to be your max. You're able to get down like maybe $5,000 if you have a good relationship with a sports book. So this is like a giant network of outs. I mean, they had to have a lot of people to get all that money down. It's very interesting. Didn't help DraftKings stock. No, it did not. And these prediction markets aren't helping DraftKings stock either. I'll tell you what. The Kalshis and Poly markets of the world are already putting a big dent in this. DraftKings, actually, I just saw rolled out their own prediction market. They're going back at it the other way, which I thought was fascinating. They don't like as much. They can't put as much hold on those markets, but they realize that they're losing if they're making those moves.
So can I bet on the outcome of this scandal? I mean, this is just full circle if that's the case. Surely. It just gets ironic to a point.
Make sure to check in with your local Batista. They are not okay. Let's wait until season opening to pop these guys. Yes, the timing was definitely not coincidental. This was definitely calculated to let the season start before they did this. And like people are going to be upset about that, but honestly, I think you got to make an example out of this. Like it sucks that these people have to be the example, but if the NBA wants this to stop, like they kind of just slapped Jonte Porter on the wrist when he got tied up in all this. There was never any FBI or anything like that. But I think that this is a coordinated effort between the NBA, the sports books, and the FBI to do this and make it a giant prominent thing and send a message to all these players that it's big trouble if you get caught up in this stuff.
No, most definitely. And I was even thinking about the other sports leagues, right? NHL, the WNBA, all the other national associations. And I mean, imagine the things that's going on over there and just people thinking like, yo, you see what's going on in the NBA? And some people are probably, tightening up a little bit, using these guys as an example, even outside of the NBA.
Oh yeah, and college sports too are the other thing that I always reference. It's you think this is bad in the NBA where guys are making tens of millions of dollars a year. I can only imagine what happens at Long Island University, what happens at New Hampshire or Providence University. These kids who aren't getting Providence actually is a fairly sizable basketball program, but these kids, whatever Delaware that aren't getting any NIL money, but you can bet on them. I mean, there was just some scandal last season where there was 8 people on a college basketball team and a coach. I don't remember the school that all got banned from basketball for life because there was a team coordinated with the coach point shaving thing. Like they were straight up in the locker room at halftime saying, "Great first half, guys. Now make sure we don't win by more than 10." Like it's nuts.
That seems like it could be a massive issue, right? And to the point that you pointed out, the difference in wealth, right? A lot of these professional athletes are already multimillionaires, which makes it even crazier to fathom that they would risk and jeopardize their entire careers and their just them and put their families in jeopardy like that too. But just to think at a college level, if you're not getting paid multi-millions, you would think there's a less likely chance you might get tied up into that because now maybe
the jealousies that can stem from your starting point guard is making $400,000 and you're making $0 and you play 20 minutes a game. Why does that guy get $400K? And so that might motivate you as well to go try to get your big bag in less legal ways.
Right. So now,
pull up Caesars or MGM as well. That's a good call.
MGM right there.
Yeah.
So, and now that we think about it too, though, how do you rebuttal something like that? How do you rebuttal something like that without there being some type of monetary incentive? How like you can put the regulations up, but it's hard to think that insider type of information isn't still going to continue, especially if there are other people that don't have the opportunity. You see what I'm saying? Like, how do you rebuttal something like that?
Yeah, and they'll just get better too, because I mean that's the thing is the way that you do this and don't get caught is you don't have your props go under every single time. You would a few times you would have the same coordinated effort where 200,000 gets down on your unders, and then you play normal and you get over your props, and then that throws the sports books off the scent. And that would be the proper way to do this. It's just when that much volume comes in on you and then you sub yourself out after 7 minutes, it obviously raises alarm bells. So you just need to be a little more tactful with it. Maybe there are people who are doing it who are more tactful with it right now. I don't know. But yeah, it's very interesting for the future of sports, for the future of sports books, what all this looks like. And we knew this was going to happen, right? With legalized sports betting, these guys are running up and down the court next to a FanDuel ad on the scorer's table right there. Like it's in their face. It's in the college kids' faces. It's everywhere. Rebuttal is a noun. Rebut is the verb. Thank you.
Rebut.
Yeah, that's good. That's good.
Rebut. And then another thing I think about is like, have you seen the footage of Rozier's body language, like on the court, off the court, the footage that's coming back up? So it's going to be just interesting how they're in 8K, right? So anything that's on their mind, their body language is going to give them away. Especially because seeing his body language, it's hard to see that maybe he knew this was coming, right? Or knew this was coming down the pipe. So it'll be interesting. These guys are in 8K all day, every day. So, there's going to be a lot more exposure, eyes on you.
Yeah, absolutely. I wouldn't say I'm coaching how to get away with it. I think that any logical person could come to this conclusion already, is why I'm not biting my tongue here a little bit more. Anyway, yes, to bring this back, somebody mentioned Win is up 1%, WYNN, if you want to pull that up. Yeah, I'm annoyed because I'm short Win, and it's very out of the money. I don't know that this short necessarily has a chance at all. I need it below 105. Let me not speak out of turn here. Alphabetical sort, it'll be at the very bottom. I need it below 100. So we are well outside of my profitable range on this short short here. And when all this happened, I said, yes, the gambling stocks are going to tank. This might help me. And it did not. Wynn is the only one who is just resilient and jumping. And they're not a primarily sportsbook company. They're more resorts, hotels, traditional casinos. So I understand that. But I thought that this would cause a sector-wide sell-off that might allow me to sneak out for break even. And it did not.
No, I mean, this has been resilient. This is looking like NASDAQ right here. So maybe we get another high. But yeah, risk and reward, like Greg is saying right here.
It's true. Careful, you might get pulled in on RICO charges. Risk and reward. It's true.
No, with that being said, again, as we left off on Beyond Meat, it's been absolutely crushed. I mean, IV is up there. It's pretty much a penny stock, but it's crazy to still see so much volume traded on this thing. 587 million shares traded just today. So there's some type of activity going down. Maybe it's just a lot of the bag holders selling out of their positions from $8, $7, $6, $5, $4. Who knows? But I think the story is over here on Beyond Meat.
I'll tell you what, though, something that's changed with these meme stocks over the years is that they now have the propensity to do this twice. We've seen a number of stocks, maybe Kohl's KSS, I think did it 2 or 3 times.
Did Kodak?
They will circle back on these and pump them again.
Yeah. Was Kodak another one? I think maybe Kodak, Hertz for a little bit. Hertz was supposed to go bankrupt. It was like a penny stock. It was popping off for a little bit.
I know BlackBerry it happened with.
BlackBerry, BBB.
That was another one. But yeah, these and Wolf also, that was like a really big one that just happened recently, Wolf Speed or whatever that company is called. But these meme stock traders, people, organizations, I don't know. They have shown the ability to get these things to run more than once now, which makes it a little bit less of a guarantee to just short off the top at the beginning, which I wish I would have caught yesterday, but I digress. But yeah, it has me, the whole point I'm saying here is that it actually has me debating getting long Beyond. I'm not going to do it today, but there's a point, maybe like $1.50 or something, where I would be like, I think they're going to get this again.
He said it gets to a point.
I might take a fun little long lotto and see what happens.
It gets to a point.
GNC also being thrown out. Oh yeah, Bed Bath and Beyond. Yeah. Oh yeah, BBBY. Missing a B. Yeah, GNC. Are they publicly traded? I'm not sure.
Oh, maybe not. Not pulling up their ticker right here, but we do have BBBY though. BBBY.
Triple BY. I think.
Triple BY. Oh, we got Best Buy right here.
Bed
BBY.
That's it, right? Yeah.
Bed Bath Beyond Best Buy.
Oh, I forgot. Best Buy is public.
No, Best Buy was BBY. Best Buy is trading at 13, a little over and a half IB rank. Not much volume.
I've been to a Best Buy in a while. You've been to a Best Buy?
It's been a while, but I mean, I love a Best Buy. I love walking around looking at some technology.
Yeah, well, that's true. That's true. It is fun.
No, it's been a while though. No,
walk around a Best Buy, but yeah, I haven't been to a Best Buy or bought anything from a Best Buy in a while. Amazon is just so dominant for me. I pretty much buy everything on Amazon.
I mean, buying a TV in person now is just crazy. Or like, I just think about that like back in the day, like buying larger items per se, like whether it's a fridge, a TV, speakers, whatever it is. It's like the convenience of just ordering it. Like you kind of just mentioned Amazon there. It's just like, why wouldn't you just order it? And I would love to see the difference in foot traction going into those stores, the difference in traffic.
Yeah, and to their credit, Best Buy has made a very successful push for online delivery and really fast deliveries as of late. I think they have same-day programs. If something is in stock in the store near you, they can get it to you same day if you order within certain hours. They have AppleCare included with their Plus membership. Interesting. Oh, my MacBook Air price. Oh, I see what you're saying. You went to a Best Buy, you got your MacBook Air best price, matched to the Amazon price, and then they included AppleCare when you have the Plus membership. That's interesting. That's neat. GNC went bankrupt and Moon for a week. I was going to say I do recall that happening. I was surprised to see that not pop up at all. But yeah, if they're bankrupt, that makes sense. Although I can't be completely bankrupt. I've been to a GNC location in 2025. I don't know when that happened. Maybe they're out now. I assume you're talking GNC, the vitamin company, unless this was something else. Yeah, but Jared, looking at under 2 on Beyond, yeah, I'm sort of eyeing that same thing. It's like I don't know that I even necessarily fundamentally believe in the company, but like if they're going to get into 2,000 Walmarts, that's significant enough to me that under 2, I would feel like this might start to justify a buy. Like 150 is the number that I threw out. I still might adhere a little closer to that. But the tail risk, the esoteric, I will assign an arbitrary 5% chance to the tail risk that the people meme stock this again is enough to like push me over the edge and get me to take a lotto. I wouldn't do anything crazy. It would be like a well less than 1% portfolio allocation to some kind of naked call that's pretty far out of the money. But yeah, as you can see, the premiums are pretty low on the call side there. There's some attractive stuff. So it's an interesting prospect. Like just snagging like one of those 4 calls or something for like $50. That's the type of trade I'm thinking here. It's just see if it 5x's.
I mean, this thing has went from what almost $10 to now almost sub 2. So I mean, we're getting there.
Yeah, so we'll see. Can't believe I'm even thinking about this thing.
That's how quick the tables have turned. I mean, this thing has gotten not just crushed. I mean, it's gotten hammered. I mean, from almost a $10 stock to $2, and we might be trading beneath there. So almost a 90% decrease in less than like 3 days.
Yeah, I'm far from a value investor, but I would say I'm more of a value investor than the average options trader. And
like
at a point, this gets undervalued.
Everybody's got a price.
Exactly.
Everybody's got a price. So that's the downside of the upside. No. Let's look at this portfolio. Let's see what's been moving on the day. Beyond Meat down the most on the day. We got Deck down about 12% on the day, been getting absolutely hammered. Must have been by earnings.
What company is that?
Deck is Decker's Outdoor Corporation. Sounds like
is it just Decker's? I didn't know they were publicly traded either.
Yeah, it's Decker's. What items from Decker's are you familiar with?
Really, I couldn't even tell you. Well,
is it like a Coleman brand? You know what I'm saying? Like an outdoorsy kind of.
Yeah, but I think it's more like materials to my knowledge. I'm not 100% certain. I just feel like I've seen their logo on outside like a cabinet you'd put next to a pool, like one of those plastic like stuff like that. I feel like I've seen the Decker's logo around before.
Yeah, no, it looks like it might be in that camp. No pun intended if it is an outdoorsy item. Then we got D-Nut. It's a cheaper stock, down 8% on the day.
Yeah,
TSLL.
Krispy Kreme there. They've been
Donut. What a name.
I know. What a ticker. I agree. But they're going bankrupt, it looks like, which is a shame. I've never in my life had a Krispy Kreme hot donut, which is an experience I refuse to miss out on. So if this bankruptcy stuff gets a little more serious and the end date is near, I will be going far and wide to get my hands on a hot donut from Krispy Kreme.
That would definitely catch me off guard. I wouldn't have seen that coming. There's a Dunkin' Donuts I feel on every corner. Is that a coincidence in Chicago out here? I feel like there's Dunkin' Donuts.
Definitely regional.
Is it regional?
I mean, it's not like Dunkin' Donuts itself isn't regional. I'm pretty sure that they're all over the place. I mean, I know that they're all over the place, but I think the density of Dunkin' Donuts is a bit more pronounced here in Chicago than anywhere I've ever seen it. And because in Texas we always had Shipley's. That was what was everywhere. Shipley Donuts.
Okay.
Like there's one every 2 miles, and it was good. It was good stuff. I actually think they just sold to private equity, which is kind of a shame, but good for the founders. It was just founder owned this whole time. But yeah, that was what was down there. And Dunkin's were around, but it just wasn't as prominent.
Yeah, no, Krispy Kreme is looking very similar to Beyond Meat over here. Very similar nutty price action. But we got Krispy Kreme, SOX, what is that, the semiconductor?
Yes.
Semiconductor of the volatility index, and then DraftKings again. I'm surprised I didn't think of this a little bit earlier, but this one's going to be an interesting one. Just the entire sports betting kind of industry with all the headlines going off right now. That's like our CPI, but I bet kind of in the sense of sports betting. But we'll see how those hearings go. Do you know when Kash Patel is supposed to speak again?
I don't know when he's supposed to speak again. No, he spoke yesterday at like 10 a.m. Central or something like that, and I listened to a replay when I got home from work. But yeah, I'm not entirely sure when he speaks on this again. If it will be him, I'm not even sure what happens now.
Oh, okay.
And also, I would like to add, as we talk about this, there's 2 sides to every story. Everything that we've said is alleged, and we have no idea how this is going to go, and we should absolutely let this run its course in a court of law and let a jury decide. I don't want to condemn any of these people or be the guy getting clipped in some months if this all doesn't pan out. Nothing that we have said is factually confirmed. It is all alleged, and there's 2 sides to every story, and we'll see how this plays out.
Yeah, because not Chauncey Billups, man. Not Chauncey Billups, the one that used to pull down the court 3. Man, it's just crazy. Childhood guy, too. That's wild. But anyways, with that being said, DraftKings getting hit on the day. We'll keep an eye on that. They have earnings after the bell November 6th.
Dunkin' is so much better than Krispy Kreme. Interesting. Let me think about this. I think the Krispy Kreme has better donuts if we isolate the donuts to a vacuum, but I think that Dunkin' is better holistically. Their coffee is better for sure. So grain of salt. I don't know, but Krispy Kreme donuts I think are elite. And I'm talking from the location. I've never had a hot one, but I mean like fresh in the case from the location. The Krispy Kreme donuts you like buy in a box at Kroger, those don't count.
Yeah.
Spent way too much money at Shipley's. Shipley's is great. Happy to hear Shipley's being endorsed, guys. I love Shipley's too. It was on the way to middle school in the mornings. We would, if we had extra time, we would stop at Shipley's and get a donut. I really love the maple one. Also, I just do yeast donuts. I can't get there on cake donuts. It's just not what I'm looking for when I want a donut. Data
Depends
trader
on the day.
data. I prefer Farrell's donuts. But you got to come to Santa Cruz for those. Interesting. If I ever found myself in Santa Cruz, I'll be sure to get myself a Farrell's donut.
AMC, absolutely dead. GameStop and AMC. I heard GameStop was supposed to be doing some type of business overhaul. I thought it was BS, but it might still be.
GameStop is just trying everything. They got saved in 2020, and then they were like, okay, guys, we're saved and we have like a year, but really our fundamental business still is not good at all. So we gotta figure out something. So they're trying everything. They're buying Bitcoin. They're restructuring. It's whatever at GameStop right now. It's funny.
The buy Bitcoin strategies.
Buy Bitcoin strategy. It just works.
It just works. Why? It just works. Trust me. It just works. AMC's still dead. Netflix, I know had earnings not too long ago. Netflix took a tumble, gap down, then sold off to the downside. Not much going on over there. Volatility a little dead. Not much shares traded on the day.
Oh, is Intel getting whacked?
Intel. Nike not doing much over here. INTC. Intel's up. Red on the day, but they're up. Let's zoom into a 1 hour chart. It might tell the story a little bit more.
They just had
clear.
earnings, right? That's what this is.
Yeah.
Yeah.
So it ripped to the upside after the bell yesterday, and then it gave everything back into the pre-market and then into market open today. Yeah, as the market opened up, I mean, we were pretty much flat after we put in the highs overnight.
Earnings moves like this are always just so brutal. I just feel so bad because
that's tough.
It's really hard for anybody to win this situation because you either got short in earnings and you lost, or you got long through earnings and you thought you were going to win and hopefully you exited, but now you have lost. So like the only people who win this are people like me who swoop in and say this move is too much and get short right at open today.
That's true. Or anybody that's still selling those strangles or iron condors to be a little bit more safer on some of the earnings plays. That was what I would do the first year, but after that, being delta neutral on earnings was just tough to do. So if anybody was selling some iron condors, hats off to you because
we got conflicting GameStop positions here. I'm an unproud GameStop owner, and then Mike Evans follows up with, I really want to short GME, but it's anytime something can go wrong, it should be able to be shorted to $0, but they just won't die. That's absolutely true. Well, I would say that was more true in 2020. As much as I hate this stupid buy Bitcoin strategy, I do think that actually gives them some actual value now. So that kind of changes things a little bit in terms of GameStop. They have trading card grading at GameStop too now, I'm being told. You know what? Sure. I'm with that. I have a bunch of cards I need to get graded by PSA, and I've just never gotten around to it because it's such a hassle. I know that GameStop grading isn't going to carry the same weight, but maybe let's go Beckett or something. I know people are getting tired of PSA anyway. Went short earnings and lost. Apologies, Wit. I think that was a pretty fair conclusion. I mean, it's Intel. I don't know. They have a lot of free capital. I mean, people are just throwing money at them. I joked when Nvidia made that $5 billion investment that Nvidia was just like, we have so much money here. Here, poor Intel. Here, competitor. Have $5 billion. Compete with us. It's not competitive enough. But yeah, apologies to hear about that trade. Oh, it's PSA grading at GameStop locations? Are you kidding me? This is groundbreaking news, Kyle. If you're being serious, if I could do that, holy cow. Might have just opened a door. Will they do it on site? Do I got to mail them still? I got questions.
Still.
It's arranged. I started a Berk trade. Oh, Berkshire Hathaway in 45 DTE range. Sometimes I go further out, or with Butterfly, we'll do less than 30 days and hold almost to expiration. Like it. Let them eat cake. Precisely. Nvidia is the one in the market that is in the position to say, let them eat cake. They have, I'm trying to think of a good comparison as it pertains to chips. Let them eat cake. Let them build chips. I don't know. That doesn't work. I'm going to retract that. I'd like to scratch that from the record. You take it to them, they send it to PSA. I see.
BR, Lucid has been quiet. Lucid's been a quiet one. Absolutely dead over here. Absolutely terrible to look at. So we're going to go over to Rivian. Absolutely terrible. 37.5.
Company, man. I'm so sick of Rivian.
Are you sick of Rivian?
I say this every time. I've been long. I'm still pretty deviously long Rivian. I have all expiring September. Oh no, I have September 18th, 26, naked 12 call, naked 20 call, and then I have January 15th, 2027, naked 25 call.
Okay.
And all Rivian does all the time is just test the 17 level and then go right back down. And it's so frustrating. I've stopped even getting excited when I see it rip and Rivian is at the top of my portfolio in the morning. I've stopped even expecting the run to come. Look at this. Look at this chart. It looks
every
like the
time.
Himalayas,
Right.
man. It just goes up, it touches 17, and it shoots right back down. I hate it. I hate this company. I'm so frustrated. I'm so long. Damn it. Rivian to the moon, though, still.
You know what? As long as we're to the downside right now, it's looking like maybe we trade back towards 17. But at least now you know not to get too excited.
Yeah, no, we're gonna go back towards 17, and then we'll come right back down to here. I know already. I don't know why I'm even still doing this.
I don't remember last time we pulled this up, but it seems like we put in this range whenever last time we had brought it up, and it's still trading within this range. So not much going on over here. But it was fun when the EV sector was extremely volatile. I will say that just because you had the names like Rivian and a lot of other EV companies popping up here left and right off the back of Tesla. So now that Tesla's a little bit more quiet, feels like Rivian, Lucid, all those other names have been kind of dead recently. I don't want to say dead, but not too much action.
Yeah, I feel like Rivian has to gain some prominence here sometime. I mean, they're so nicely integrated in the U.S. Their factories in the U.S. They source pretty much all their parts from the U.S. It's really streamlined, and they're opening new factories. I mean, they are clearly expanding, and the market just doesn't care. But we'll see. Fortunately, I still have a year, so
yeah.
Although I was saying that 3 months ago and 6 months ago too.
I mean, it gives me a little bit more faith now that I've seen Rivians driven on the road with my own eyes a little bit more here and there. It's not one of those companies like a Carvana that I'm still a little speculative about. I've never seen one in person, but I've heard they're real. But something like Rivian with my own eyes, I got a little bit more faith since I've seen it myself.
You've never seen one of those Carvana vending machines anywhere?
I've never seen one anywhere yet. I still only hear about it online. I've seen some videos because I got that curious. I also saw another video go viral where they were purchasing his son at 16 a new vehicle. It was like a Nissan. I forget what vehicle it was, but it was at a Carvana kind of shop. The video went viral. So other than on social media and on the stock market, seeing Carvana trade, never seen it in person. So I don't know if I'm being gaslighted or gaslit right now, but apparently they're doing well.
Yeah, we had one on a relatively regular commute for me in Houston, right off I-10 that I would see all the time. That's funny. I've never even thought about somebody never having seen one before. It's like a very prominent thing that I would see on the regular.
Yeah, no, 100%.
Epic branding. I agree. And that's the whole point. That's the whole point. It's literally just branding and novelty. They don't even, that's like not how they primarily sell cars. They have large fleets of cars that are not in the vending machines. And that's actually how it works is if you want to do the vending machine pickup, they put the car in there like for you just so you can come get it out. It's just an extra step, but it works. It's fun. We have them all over in Dallas. Yeah, absolutely. I would see them. Yeah, I would see them in Houston as well for sure. CoreWeave up 7%. I saw mentioned. Dopamine mentioned CoreWeave up 3%, 7%.
Well, what's ticker for CoreWeave again?
CRWV is that one. I'm on at 145 with Jamal on engineering the trade today. I'll have to bring this up to him. I know he's the biggest CoreWeave bull I know, actually.
Jamal's actually propping this one up, right? Lower IV rank, earnings November 11th. What's so attractive about CoreWeave right now? What are you missing here? What's been going on over here?
I really couldn't defend it super well either. I mean, it's quantum, right?
CoreWeave. Let's see. No recent news. Let's see what we got.
Yeah, AI cloud computing.
There we go.
But yeah, they have. I believe that they're part of the NVIDIA ecosystem. Was the original reason for the big run up, if I'm not mistaken. If you guys have ever, it's really really popular on social media right now. That chart with all the circles with NVIDIA in the middle, and it feeds out to all of the other companies, and it's like the huge NVIDIA network. I've seen that chart like 20 times in the last week. I'm sure somebody else knows what I'm talking about, but I believe that CoreWeave is one of those smaller outer circles that contributes to NVIDIA. Somebody can correct me if I'm wrong. Gus, the one on I-10 is that one on the way to Galveston. Yes, there you go. I went to Galveston a whole lot. My one of my high school buddies had an aunt with a beach house down there. She was lovely. She let us stay there all the time. We were respectful. I'm sure if we tore it up, she wouldn't have been so keen. I'm scared of UNH. Are you long UNH? Is it just like a phobia thing in general? You got United Health phobia?
Depends on which side of the trade you're on a few weeks ago.
But yeah, I don't know. As a UNH bull, I'm a little bit scared myself, but I'm mostly bullish. Drinking an ice cold strawberry Fanta, partially frozen delish. How about that? That does sound very tasty. I'm a big pineapple Fanta guy if I can ever get my hands on it. I don't do a lot of soda, but pineapple Fanta or pineapple Jarritos specifically, that's good stuff. You absolutely should, Theta Trader. Dr. Jim would be better suited to elaborate on that. Long core weave with an in the money put. Love it.
This about page is actually really clean for those companies. Now we can see exactly who's the chairman, who's the founder. They did a good job. This is clean. Anything else top of mind before we start to wrap for the day? I know I'm not going to be putting on any new positions. I know we're at all-time highs going into the weekends.
Sorry. Initial comment. I wouldn't want to be the CEO of UNH right about now. Secondary comment. Gus, you should explain Carvana to Liz and Jenny. They're very confused about how it works. Jenny at one point seemed to believe you put the giant coin in the machine and got a random car. Okay, the next time I see Liz and Jenny, I will definitely explain Carvana to them. I have a pretty good handle on it, I think. As far as closing thoughts headed into the weekend, nothing super concrete. I mean, I would have more thoughts if we hadn't just returned straight back to all-time highs like we did today. It's actually, I mean, if you would have made me make a trade yesterday right before it closed, I would have gotten short into today's open. But yeah, I mean, I think we're just cruising. I hope VIX can stay low for me for another 3 market days. And yeah, I'm fine with until proven otherwise. UNH earnings on Tuesday. That's really kind of what I have my eyes set on. I was already deviously long UNH, and then I discovered UNHG on Wednesday with you on air, whenever that was, and then that compelled me to get even longer. So I'm really hoping that earnings goes well. I'm hoping they say we beat EPS by 200%. We're upping our guidance by 300%. We beat the case with the DOJ, and our CEO came back to life. That would be my ideal UNH earnings call. I'm not asking for much, really. I don't think. I think that's all.
We might fill the gap after some news like that. So,
Gus, ruthless. I don't even know what I said. Sorry.
Well, with that being said, no. Anything else top of mind heading into the weekend, though, Gus? What you got going on?
I mean, Texas A&M got a big game against LSU tomorrow. That's I would say that's really what's top of mind headed into the weekend. I hope we can go into Death Valley and come away with a win. But yeah, no, nothing super critical for me. Just hoping we can make higher highs. I'd be fine if we just went higher every single day for all of eternity in perpetuity.
Honestly, we just might, and I think that might just be the move. So we'll find out on Monday. And I mean, if you backtest this, I mean, we get a new all-time high almost every weekend now. So I don't know what's going on over there. I don't know if it's I don't know.
Oh yeah, World Series. Also, I didn't mean to overshadow the World Series. That totally slipped my mind.
Go Dodgers!
I was rooting for the Blue Jays just because I'm tired of the Dodgers being richer than everybody. But I, as a fan of a poor team, the Reds in the MLB, I'm inclined to root for the fellow poor teams. Though Toronto is much less poor than us, but go Blue Jays! I'd love to see Canada get one. I am an Aggie, Kyle. Yes, that's correct. A&M is so due. I'm hoping so. It's been like we haven't won in Death Valley since like 1994. I'm scared. Oh well, best of luck to you, Adam. I hope we ain't both gonna be happy, but best of luck. I just hope both teams have fun.
No, you don't. With that being said,
no, I don't.
With that being said, that's going to do it for today's segment. Thanks for everybody taking the time to hang out with us. We will be back same time, same place next week on Monday. Everybody have a good weekend, and we'll catch you guys next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company. There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
And this is From Theory to Practice. Welcome to the show today. Welcome to the Friday edition of what it is that we are trying to do. And today we are going to shoot from strength and go over a little volatility crush. So Paul, bring us right there into the title slide. So what is volatility crush? So it's earnings season, right? I mean, this is it. We are smack dab right in the middle of earnings season in the markets. October is notoriously one of the heaviest earnings months of the year, along with, January, April, July, and then October. This is when all the heavy hitters in the market report. Well, one of the phenomena that is oftentimes associated with earnings releases is this idea of volatility crush. And as option sellers, specifically premium sellers, we can take advantage of this idea of volatility crush. So Paul, go ahead and bring us into the information here today. So volatility crush is a phenomenon in the marketplace that essentially is once a binary event comes and goes, once a known binary event that's on the calendar, it's on the schedule, once you get onto the other side of that binary event, the volatility that is in the options, both calls and puts, it is going to collapse. Because of course, think about what volatility represents in the marketplace. It represents uncertainty. It represents the unknown. So once you get through a binary event, the unknown becomes known. And so obviously the volatility in the options is going to move lower. This is an incredibly reliable phenomenon when it comes to earnings releases, but also other, binary events. So earnings reports, economic data, FOMC. We've got an FOMC meeting coming up here next week. And if I'm not mistaken, I don't know that we've ever had a more important FOMC meeting than the one that's coming on down the chutes next week. So you're not going to want to miss that. But when it comes to these binary events that are on the calendar, and these are just a few examples, there is a reliable phenomenon of the implied volatility expanding going into the event. So going into the event, implied volatility routinely moves higher and higher and higher. Now, why does this happen and how is this happening? Well, again, my objective with these kind of educational pieces to kick off from theory to practice is really to reach out to the beginner trader, to reach out to someone who's, brand new to trading. So I don't want to go too far down the road and get lost in the weeds. But the basic idea is this. It's actually quite simple. In the option pricing models, when it comes to implied volatility follows the option price. So when the option price goes higher, implied volatility goes higher. When the option price goes lower, implied volatility goes lower, and vice versa. When you think about volatility and option prices in that way, you can understand that, all right, if option prices are moving higher and everything else is equal, like all else equal, ceteris paribus, option prices are indeed moving higher, that is going to cause volatility to increase for those options. If option prices are moving lower, then that is going to cause volatility to decrease for those options. Well, just back up one step. What causes option prices to move higher? Well, at some level, at least at a base level, it's no different than any other asset in the marketplace. It's no different than a stock. It's no different than Bitcoin. It's no different than anything else. It's supply and demand. It's supply and demand. So if there's a lot of demand for an option, that's going to cause the volatility associated with that option to rise because the option price itself is rising. And of course, if there's excess supply of an option, if a lot of people are selling that option, that's going to cause the option price to move lower, which of course will cause the volatility to move lower as well. Okay, when you're moving into one of these binary events, again, earnings report, economic data, whatever, you're going to have a lot of traders that are positioning themselves to try to take advantage of the potential explosive moves in the marketplace or in that stock as a result of that binary event. So that demand on the options is going to cause the option prices to rise. If the option prices are indeed moving higher, then you're going to have volatility moving higher to follow suit. Okay. The event comes, the event goes, and now all of a sudden, all these traders that had these positions on prior to the event, they're going to unwind those positions. So as they're unwinding those long option positions, that's going to put downward pressure on the option prices, and the volatility is going to follow suit lower. So that's the basic idea behind kind of what is driving this volatility crush. What is driving the implied volatility expansion going into the event, and then of course the extreme rapid implied volatility contraction on the other side of the event. The other thing I want to say, generally speaking, at least with earnings, I can't say this is the case with every economic data point or every FOMC meeting or whatever, but with earnings releases, generally speaking, maybe 10 to 14 days prior to the earnings release, that's when you start to see implied volatility pick up steam. That's when you start to see the implied volatility expand for that stock going into that earnings report. And of course, this is going to be kind of an increasing function where you have the implied volatility expanding, arguably the most at the very end of the cycle right before the earnings release is dropped. And that's not a hard and fast science where it's always going to be that way every single time. But if you're just trying to wrap your mind around this phenomenon, and maybe this is brand new to you and you've never even really understood this or even heard this term before, start thinking about, all right, 1 to 2 weeks prior to an earnings report, that's when I can usually expect to see implied volatility start to go higher, implied volatility ranks start to go higher, and then of course we can take advantage of this as premium sellers. How do we do that? Well, that's in the green box on the bottom of the slide. We like to sell volatility, generally speaking. We buy volatility for some earnings and we do directional plays and what have you. But generally speaking, if you do a short premium, short volatility play, so this could be an iron condor, this could be a short vertical spread, it could be short strangle. There's a number of ways that you could do this. If you were to sell volatility right before the earnings release or right before the economic data drop or what have you, you are taking advantage of selling volatility at its highest relative point for that event. Because again, once the unknown becomes known, it's very likely that you're going to have a pretty significant volatility crush in those options. Well, if I sell options and I'm selling volatility, I benefit from volatility going lower. So if volatility does indeed follow suit to the downside, then that's going to give me a little Kickstarter. It's going to give me a little catalyst into my position to potentially, move more quickly towards whatever profit targets I might have for that position. It's been said before, and I can't remember who said this, but man, it is a catchy little jingle. For every gimme, there's a gotcha. So, all right, I've got the gimme of a volatility crush. What's the gotcha? Well, man, if I'm walking into a binary event, if I'm walking into something that has the potential to be an explosive move, obviously, volatility crush or not, if I'm on the wrong side of the directional move that ensues from the outcome of the binary event, that's not going to be a whole lot of fun. Like, that is not going to be a super desirable outcome. So, of course, it is advantageous to sell the volatility right before the earnings release or the FOMC or whatever. But you have to understand that you are indeed kind of walking into the lion's den. And if you are on the wrong side of that directional move, if there is one, it could be very, very painful very, very quickly. So what is the solution? Well, the solution is the same solution that we've been putting out there for years now at this point, decades at this point. It's you've got to trade small and you've got to trade often. Focus on trading small. You've got to control that position size on empty so you can take advantage of the volatility crush on average over time. But even for the big moves that do get away from you, they're not so damaging and so catastrophic that you can't recover from that. So that is at least a quick little, 5-7 minute little primer on what is volatility crush. So, all right, Paul, bring us into the market. Man, we did it. Man, we absolutely did it. Wow, well, now we can kind of just put our sweatpants on, put the hoodie on, and we get into the old market. I see you guys in the chat though. Man, I see you guys in the chat. Look at you guys. Man, I appreciate you guys so much. Look at you guys. Paul, you can bring us in. Yeah, there you go. Man, I see you guys so much. I see Greg Lutton. Greg, I owe you an email. I know that. I appreciate your patience very, very much. I see Theta Traders in the house. Ash Finn. Man, Rancid's in the house. Man, Sam L. Kyle Hamill's in the house. Man, Margin Walker even showed up. This is crazy. Look, small trades often showed up. That's exactly what I'm talking about. That's some good stuff. So, all right, let's look at the market, though. Man, take a look at this. Take a look at this, guys. We are lucky. We are very, very fortunate today. You've got E-mini S&Ps up 62. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, up 290 on the day. You got the boomers up 520. Look at these boomers go, man. Like you thought they were mailing it in? Up 521 on the day. Man, look at these guys go. Got the Russell 2000 Futures Index up 37. Looking pretty good indeed. You got bonds are about unchanged. You got oils about unchanged. You got UB40 about unchanged. You got the shifties getting smacked around a little bit with gold down 23. You got the Hunt Brothers down, 33 cents on the day. And so yeah, volatility, I'm assuming, is getting smashed today. Some might even call this a volatility crush. How about that? You got volatility futures down 22 cents, which you can see right there. And then you've got the spot volatility VIX down 93 cents on the day. And so, yeah, VIX getting absolutely just clobbered today, down into the 16 handle. Guys, we had them right where we wanted them a couple of weeks ago with the VIX at 28 or 29. But the VIX hit like 28, 29. It was like the overnight cycle. It was at like 3:30 in the morning, so like nobody was even awake to trade that. I mean, obviously all of our European friends, they were trading that. But for those of us here in the US, it's like, man, only the true Shooter McGavins were ready to go trading that at 3:34 a.m. But no, we're back. We're back to slim pickings. And, if we just think about, just basic, let's just have a talk here about basic market, phenomena. Obviously, at the end of the year, we've got the Santa Claus rally, right? I mean, that is a known phenomenon. Like, we can basically expect another, 2 to 16%, to be tacked on the indexes from the Santa Claus rally. But we've got to back up before that. That's down the road. That's December stuff. We've got the Thanksgiving rally before that. So before the Santa Claus rally, the Christmas rally, we've got the Thanksgiving rally. That's going to be another 4 to 9% on the indexes. But before even the Thanksgiving rally, why do you think the market is up today? Do you think it's from CPI? No, of course not. Because even though it was an unofficial surprise print that was delivered by a couple of YouTube guys that aren't even affiliated with the government, everybody knows it doesn't mean anything. Everybody knows it's completely made up and fake and imaginary. The reason why the market is up today is because everybody's starting the Halloween rally. Like, that's it. Halloween is next Friday. It's a week from today. So this is going to be another at least 450 basis points on top of the index with the old Halloween rally. And so, yeah, market's looking good. Market's looking strong. And, yeah, it just, it makes sense. Of course, we played it to the downside. And so we're getting hurt a little bit. But but for you guys, once again, you're welcome, man. Like, you are welcome. Like, again, I don't know if I could do any more for you. I'm going to try to figure it out. I'm going to see if I can't find a way, but I think I'm pretty much delivering about the most I could possibly deliver to you guys. If you do the opposite of me, you will be just fine. Yeah, you would have lost a little money on Procter & Gamble because we actually somehow were able to, eke out a little profit on Procter & Gamble earnings from this morning, which is a little bit surprising because apparently we've been able to sidestep and dodge the apocalypse, at least for the time being, and yet Procter & Gamble is still up. And so that's pretty interesting indeed. So that's going to help to soften the blow of this SPX butterfly, but it is a blow nonetheless. I mean, if you look at this butterfly, we played it to the downside. If I'm not mistaken, we were playing SPX lower by what, 30 or 40 points? So if you would have done the exact opposite of this trade, right now you'd be hurting because you would have overshot your mark. But all day long in the morning with the market open, like after CPI, whatever, you would have had ample opportunities to manage this guy for a nice, healthy, plump profit if you played this guy to the upside. And so unfortunately, ours didn't work out. But, the good news is, because there was always a gimme, right, with the gotchas, not only did we make you guys a bunch of money, those of you that faded what I did here, but I don't have to manage it. I don't have to do anything to the trade. And so this is a very minuscule gimme. But again, if we're just kind of scratching and clawing for whatever we can find, it's out of the money now. It's out of the money. You can see right here that there's 0 days to go. This is actually a good little illustration for the new traders that might be watching the show. Like if you're brand new, like this will happen to you, of course, where you'll have some option position, you'll have some directional play that you try to play for. It could be a binary event like a CPI, like I was talking about today with, the volatility crush and what have you. Or it could be some other reason why you're right up against the expiration date of that cycle. If it's out of the money and you bought that spread, which is the case here for this butterfly, you don't have to close it. Like you don't have to do anything. You don't have to go in and, just kind of manually close that position. I mean, there's no closing commissions at tastytrade, which is super awesome, but there's still fees and stuff. Like there's still fees and things like that. So if it's out of the money, you don't have to do anything. Just let it go. It's going to expire. It's going to go out to pasture and then it's just going to disappear over the weekend. And so you'll come into your platform on Monday and this guy will just be gone. I mean, you guys will see this with my SPX trade. You'll see it on Monday. Like you'll see this guy on Monday, it'll be gone. Like there'll be no SPX trade. It will be about $3.50 lighter, of course, but we've done worse before and we'll certainly do worse again in the future. So SPX, I don't have to do anything. So that's kind of nice. Procter & Gamble though, I do want to do something here because obviously this trade is working and you can see that our long call is in the money. And so another quick little teachable moment for you guys here. You can see this is a spread where I am actually, one side of the spread is in the money and the other side of the spread is out of the money. So in this instance, if I didn't do anything, what would happen? Well, I would be assigned on the in the money option automatically, right? I'd be automatically assigned on the in the money option. Or I guess since I'm long that call, I would automatically exercise that option would be the more technically correct way to say that. You're assigned if you're short the option. If you're long the option, you're the one that exercises. You assign the counterparty. So the short side of my call would be assigned. I would be the one that would be quote unquote exercising the option. My 150 call would be automatically exercised and I would have 100 shares of Procter & Gamble come time Monday. But the 155 call, so just to be very clear here, let me grab we'll grab some magenta. This 155 call, this guy you can see is not in the money, right? It is out of the money. And so unless Procter & Gamble moves another $2.50 by market close today, which is probably not going to happen, because again, we're talking about Procter & Gamble here. It takes a tectonic plate shift for Procter & Gamble to move $1.60 in one day. No, that does not happen. Like almost ever. This is at least a 4 to 5 standard deviation move for Procter & Gamble. I am sure of it. And so chances are this 155 call is going to expire out of the money. So then what's going to happen? It's just going to go out to pasture, just like the butterfly, just like SPX. If you have a short option or any option for that matter that expires worthless, it disappears over the weekend. You come to work on Monday, you show up in your platform on Monday, and it's gone. It's absolutely gone. Okay, so when it comes to spreads where one side is in the money and one side is out of the money, there's really nothing magical happening. There's nothing super complicated happening. You just have to think about each leg independently and just understand the leg that's in the money will be exercised / assigned, depending on which side of the market you're on, long or short. If you're long, you exercise. If you're short, you will be assigned. The other leg, the other side of the spread that is out of the money, that's just going to go away. That's just going to disappear. Okay. So when it comes to closing out of this spread, what should we do? I mean, again, what is the likelihood that Procter & Gamble shoots up $2.50 in what, 2 hours, less than 2 hours? Very, very, very low. Extremely low. But just from it, and oh, by the way, another thing too, on expiration day, you actually have the after hours market that also counts for potential exercises and assignments based on the strike prices of the option. So it's actually a little bit erroneous for me to say, until 4 o'clock. It's actually not true. It's whenever the after hours market ends, which I think might be 8 o'clock. And so, but again, we're talking about Procter & Gamble. We're not talking about Tesla. We're not talking about, Amazon even. I mean, we're talking about a stock that for this thing to move 3%, I mean, you need a lot of things to happen, generally speaking. But still, I think just for a good practice here, just for kind of, a best practice and to kind of, really kind of keep things buttoned up, I think it makes sense to just go ahead and close the whole spread together. So close the long and the short. It may cost you an extra penny or two to close out of that short, but now you don't have these naked options dangling out there. And not to mention, when you move from a vertical spread that's $5 wide to, all right, I'm just going to close the long call and I'm leaving the short call on, that might be fine if you have plenty of buying power just kind of sitting around, but your buying power is going to go up significantly because, again, the margin required to hold a short option is significantly higher than it is to hold just a spread, right? And so you have to understand that if I was just going to hold that short call, even though it is probably going to expire worthless, it's not really worth it to me, in my opinion. Now, some of you that are really trying to optimize everything around the edges, you're like, Jim, I don't really want to give up that 2-3 cents. I'm willing to take that shot, take that chance. I say go for it. I don't think that makes a ton of sense to me, but I can respect the fact that you're really trying to, make some things happen around the edges. And so let me go ahead and let's close out of Procter & Gamble though. And yeah, I'll just try whatever mid price they give me, 276. That would be fine. I may have to give up a few extra pennies on this just to get out of this guy right before expiration. I'll try 273. I think I'll probably get filled here. It is Procter & Gamble. It's not. Yeah, so we got filled. So again, I mean, the theoretical mid price, the theoretical value of the spread was 276. We got filled at 273. I mean, only you can decide if that's okay. To me, that's okay. You may say, Jim, that's 3 cents. If I do that 1,000 times, it's this, it's that, it's the other thing. It's that's fine. Then by all means, hold on to that short call. And most of the time it will go out to pasture and you'll be okay. And so, all right, so that's Procter & Gamble. That's, we poured one out for SPX, sadly. And, as far as the other things that are happening, look at this. I mean, Palo Alto, Rigatoni, it's all looking fine. GDX, everything is looking okay. Chipotle down 70 cents, which of course makes sense. But I think what I want to do today, let's close out of this MNQ short put as well, because this strategy is working really well. Also, I mean, you can see obviously with the market up 300 points, the NASDAQ market that is up 300 points, we've got a short 24,000 put. And we're going to pick up more than 50% of max profit. And so we're going to end up picking up, it looks like about $500 on this trade. That's super, super nice. That's really, really great. I mean, again, I've been saying this pretty much all of 2025. We maybe even can go back into 2024 when I kind of started, shouting this from the rooftops. But futures options in the indexes are a really, really, really nice option for everybody out there that's trading. These are pretty small positions because MES is only 50 shares. MNQ is only worth about 80 shares of SPY, and MES is 50 shares of SPY. And so these can be really, really small positions from a beta weighted delta standpoint. The buying powers are very favorable, especially if you're in an IRA. If you're in an IRA and you're trying to do some things and, be a little active in that account, it can be challenging because you're cash secured on everything when it comes to equity options. Even the indexes like SPY or QQQ, you've got to put a margin all the way down to 0, which, that's just kind of that's a stick in the mud, right? But if you do something in MES, then you still get the S&P 500 exposure, but now you're going to get a ton of margin relief. If you do something in MNQ, you still get the QQQ exposure, the NASDAQ exposure, but you're going to be able to do it at a fraction of the buying power, which is really, really nice. Now, again, it's gimmies and gotchas. The markets in MNQ, as we've seen, are not typically that amazing. Sometimes they're pretty craptacular, to be honest with you all. But still, is it worth it? I think so. I think it is. Again, it's for you to decide. You have to make that call. But I think it's worth it. So, all right, so let's go ahead and Let's close out of MNQ. And then, man, look at this. Hold on. Let's close out of MNQ. Let me try, the mid price is 174. I'm going to try 175 and a half. Let me see if I can give the man an extra point and a half. He gave it to me. Wow, look at that. Man, he gave it to me like that. I didn't even have to put up a fight, man. That was nice. All right, so we got out of MNQ. I'll stay in MES for now. Our MCL strangle is looking pretty good. That's awesome. And so, cool. All right, great. So I'm right at the halfway mark of the show. And now I am going to get to you guys. Man, it's almost like I've done this before. Like, man, it's almost like we've been in this exact same spot hundreds of times now, thousands of times now. I mean, can you even imagine that we've now been on air for 10 years at Tasty? That's crazy. Well, it'll be 10 years in January, and I don't want to put the cart before the horse. I mean, I checked Polymarket this morning. It's still only a 53 delta that we make it to January. But let's say that we do. Man, 10 years, that's something. That's 100% something. And so, all right, let's go ahead, though. Where am I at? Let me surprise and delight somebody in the middle. Where are we at? Let me see here. Can I find somebody I can surprise and delight? Let's see here. Let's see. Let me see. Trying to find somebody in the middle. I can't find any. Trying to find one. Oh, here we go. Wait. Let me see if I can find it. It looks like Sammy. Where's Sammy at? Can I find? Oh, Sammy. Here we go. So Sammy, or I'm sorry, not Sammy. Swami. So Swami, what's going on there, Swami? So I see Swami there in the middle. I try to prioritize the new people and the surprises and delights. I don't always do that. Sometimes I also prioritize the old crusty people. But sometimes we try to prioritize the new people, like Swami. Welcome to the show. Like, thank you so much for being here. I'm so excited that you're here. I don't recall you ever being in the chat before, so this may be, day number 1 in the chat. This may be day number 1 on the show. Either way, like, I'm so glad that you're here. I really hope you get some value from my show or any of the other shows on the network. We have so many great shows to choose from. And if I can ever help you in any way, please reach out. Like, I'm more than happy to do that. But Swami has a great question. Swami says, Dr. Jim, what do you mean by keeping the positions small? Do you just hold cash in the account and maintain a small number of positions? Okay, this is a great question because I did say that to open up the show today when we were talking about volatility crush, but I did not necessarily elaborate on that. So what I mean by that, here's the easiest way, Swami, to think about position sizing. When it comes to your position sizing, I would think in terms of, your two different, I'll use my blackboard right here. You want to think in terms of your two different strategy types. So you essentially have defined risk and undefined risk. Like, these are your two main strategy types. These are your two buckets, right? Defined risk is going to be your vertical spreads, your iron condors, your butterflies, right? Undefined risk, strangles, short puts, ratio spreads, jade lizards, right? And those are not exhaustive lists, but those are probably, a few of the more popular ones that we use for each category. Position sizing is going to vary depending on which category you're in. And the reason why is actually quite simple. And I kind of even alluded to this a second ago when I was talking about the Procter & Gamble. If I held that short call, just going into the expiration today, my buying power effect on that position would expand drastically going into the close. Now, again, that's only for a couple of hours. It's probably not going to be that big of a deal. But still, to kind of, help to support and aid the point that I'm making right here, with an undefined risk position, you almost always have to put up more capital than a defined risk position. And the reason why is actually quite simple. With an undefined risk position, you have literally undefined risk. There is no theoretical limit to how much you could lose on that position. Now, that honestly sounds a lot scarier than it is most of the time. You will get into some situations like an Oracle, like a NVIDIA, right? Like a Tesla, whatever. You might get into some situations where it's like, man, like, obviously I can't lose a theoretically unlimited amount of money. That's literally not possible. But man, this Oracle move, this NVIDIA move, this Tesla move, whatever, it might as well be theoretically unlimited for me because that's what it feels like. That is going to happen to you. But practically speaking, usually whatever buying power you put up for an undefined risk position, that's a good approximation of what a worst case scenario would look like for you in that stock. But again, Swami, just to be very clear, it can and sometimes will be worse than that. So you have to understand that. But going in, you've got to wrap your mind around what's a likely outcome for me. I can't trade based on, the 1% of the 1% of the 1%. Like, that doesn't really make a ton of sense, in my opinion, at least. So undefined risk is always going to be more buying power than defined risk. Okay. So with that being said, how do I start to think about the actual position sizes? Well, generally speaking, defined risk positions somewhere between 1 and 3% of your overall net lick. So whatever your net lick is in your account, so it's 10,000, it's 5,000, it's 25,000, whatever your net lick is, whatever your account value is, 1 to 3% of your account value. So for example, let's say you had $20,000. If I've got $20,000 in my account, that means I'm looking at about $200 to $600 per defined risk position. So again, verticals, iron condors, etc. For undefined risk, usually between 3 to 7%. So now I'm looking at 600 to 1,400. So 600 to 1,400. So 3 to 7%. So these are really, really, really good ranges for you to consider when it comes to staying small enough. Now, one final comment. This is such a good question. It's not something I've talked about recently on the show, so it was a good time to spend a few extra minutes on this. In terms of these ranges, one thing you are going to notice, and again, I don't know how much capital you might be starting out with, and that's going to matter a lot in terms of what I'm going to say next. When you are on the smaller end of the spectrum when it comes to account size, so this would be anything 25,000 or less. So 20,000, like the example I have here on the slide, 10,000, 12,000, 15,000, 8,000, like all of that kind of fits into this category. The reality is you're going to oftentimes have to be on the higher end of these ranges because that is just one of the concessions and it's one of the limitations that you have to accept having less capital. That's just the way it is. That's just the nature of the beast. Right? I mean, the reality is when you have more capital, you are open up to more flexibility. It does make a lot of things easier. And that's just the way that it is. I'm not going to sugarcoat it. I'm not going to pretend it's something that it isn't. That is just the truth. When you have a larger account, 40,000, 60,000, 80,000, 100,000, 150, 250, 500, you get into really, really big accounts. Now, all of a sudden, you're going to notice it's going to be very easy for you to not only go to the low end of these ranges, but actually go below the low end of these ranges. So a lot of times, if you've got $300,000 that you're trading with, you'll have defined risk positions. I mean, a 1% defined risk position on a $300,000 account will be $3,000. It's obviously very easy for you to go to 0.5%. Like maybe I only want to risk $1,500 per position. That's only 0.5%, but it still has a tremendous amount of economic significance, right? And then of course the same will be true for undefined risk positions. If I've got a $300,000 account, 3% is 9,000, 7% is, 20,000. And it's like, man, one short put in SPY or whatever is usually about 5,000 or 6,000. So it's like I can do one short put in SPY, the S&P 500 index, and I'm already below the low end of that range when it comes to 3 to 7%. So those are a couple of things to think about. I spent a few extra minutes on this question because it's just such a good question. And Swami, thank you for being here. It's just a really, really good question. Hopefully that was helpful for you. And so, all right, let's see. Let me go back to the beginning now. We surprised and delighted Swami there. So thank you there, Swami. Let's see, where are we at? Ash Fan's in the house. What's up there, Ash Fan? Appreciate you, my friend. Theta Trader in the house. What's up, Theta Trader? Taking Fridays off from your back alley root canals. I would be taking probably Monday through Thursday off too, if I were you. But Theta Trader says, Dr. Jim, power of options observation. I sold a $4.95 Berkshire Hathaway. Call or put, it doesn't say, in November, which has now gone in the money. And so I could probably deduce which one you sold if I looked at a chart of Berkshire Hathaway. But you go on to say, but because of theta decay and implied volatility drop, I'm actually slightly in the profit despite the adverse price action. Man, this is some amazing stuff, is it not? Like, is this not some incredible stuff? I mean, what you just put there, forget about the calls and the puts. It doesn't even matter. What you basically just said is, hey, I sold an option. Right. And when you sold the option, I'm sure there was some amount of out of the moneyness on the option. Right. So you gave yourself some room to be wrong, right, to where the stock could move and you could potentially still make money. Well, the stock has since moved through that range. It has chewed through that buffer. But now, because of the time that has gone by, because of the implied volatility drop, I mean, I would assume that you probably sold a call on Berkshire Hathaway to allow this to happen. I would assume, but I could be wrong. It's amazing the power of short options. It's amazing the power of selling premium. And so that's awesome. I'm really glad that you shared that with us because that, like what you're outlining there in the chat, it's not a super uncommon thing. Like it can be uncommon to be like tested and have it go in the money, like you said, and still make money at least early on in the cycle. Of course, that doesn't always happen, but it's also not completely far-fetched. It's also not just completely like out of the question, never going to see it. Like it's not that either. And so it's really cool that you laid that out there. So thank you for sharing that with us there, Theta Trader. Greg Lutton in the house. What's going on there, Greg? I appreciate you, man. I appreciate your patience too. Thank you so much. Dan Ducarn in the house. I appreciate you, man. I appreciate you. Appreciate me very, very much. And so thank you there, Dan Ducarn. Sam L's in the house. Happy Friday, Doc. It's time for the Open P&L Bros. I believe you mean the P&L Open Bros to rise. The coffee to flow and the algos to start hallucinating gains again. Let's wrap up the week with laughter and learning. Yes, let's do it, man. Let's 100% do it. And so thank you for being here there, Sam L. Wolf's in the house. Let's see. Dr. Jim, thanks for another great week. I'm staring down a pre-made banana daiquiri for after the market closed. Have a great weekend. Aren't they all pre-made? Like, aren't you getting like the pre-made mix? Like nobody's cooking up fresh banana daiquiris, I don't think, right? Are they? Like nobody's out there like, they got like organic but bananas like they just got off the field and it's like, man, here we go. Like, nah, man, that stuff's been sitting on the shelves for months, maybe even years. And so that's the only way to do it though. Like you got to get the stuff. You're getting the stuff at Sam's Club, right? You're not getting the stuff at like Whole Foods. No, man. I want the stuff where I'm going to get a 45 pack for $1.80. That's what I want. And so that's what I'm saying there, Wolf. And so good stuff, my friend. And so I may have some banana daiquiris with Autumn on the beach at the beach tonight or on the beach tonight. I don't know. I don't know that we'll go that direction. I think I'm going to go the caffeinated direction, actually. I'm a big fan of like 4, 5, 6 o'clock coffees. And I sleep fine somehow. I don't know how I was able to, kind of luck my way into that genetic makeup, but the good Lord blessed me with an ability to fall asleep pretty easily most of the time. And so anyway, I don't think we'll go banana daiquiris tonight, but I'm glad that you're doing it, my friend. Sam L says maybe one last regret trade for the road. Yes, there you go. I think I'm not going to do anything right now. There's so many things happening next week. So many things are happening next week, and we already lit a stack of cash on fire with SPX, and so I think we can now, RIP to Dr. Jim's hot streak that ended at what, 3 or 2? I don't know. It wasn't very many, but I'm pretty sure it's over now. And so next week, with the Metas and the Microsofts and the Amazons, whatever, and the Uncle J's, like I'm going to make you guys so much money. Again, don't overthink it. Don't overthink it. If I'm doing X, you need to be doing the opposite of X. If I'm doing Y, you need to be doing the opposite of Y. This is basic stuff. And so again, let SPX today be the first kind of, inkling in that direction. But let's see. Theta Trader says $40 of sweet green in BRK today. I can buy a burrito bowl. Yes, just one actually. In fact, I think you might have to put it on that little that cheddar thing where you pay for it in like installments. And so that should get you maybe the first installment of several. But that's good. That's good. It's a start. And Sam Hall says if you can't beat him, join him. Said a wise and underappreciated man. That's correct. That's the only way to play it. And so Margin Walker, what's up, Dr. Jim? I loaded the 2-minute chart today so Errol could buy himself one of those fancy coffee drinks. Man, we appreciate you, and I know he appreciates you. And so once again, we got to get my man, that those fancy coffees aren't going to buy themselves, right? I mean, the Range Rover didn't buy itself, and we fell short of that goal, by the way. Like it never came to fruition, and that's on us. That is on us. So we cannot let this happen again, guys. We cannot let this happen again. So we got to make sure my man has a steady stream of fancy coffee drinks. So let's make sure that he is well equipped with everything that he needs. And it's up to us. It's up to us. Ranch is in the house. What's going on there, Ranch? I appreciate you, my friend. Let's see. Super Veloce 92. South Africa has just been removed from FATF. I don't know what that stands for. I'm so happy to be able to trade again. Well, that's good. That's great news. Thanks for being here there, Super Veloce. Appreciate you. Stephen Bivens. Dr. Jim, this might be a little in the weeds, but do you have an opinion or any experience with TTS or MTM? I don't. I'm not familiar with them, but I'll take a look. TTS or MTM. Oh, are you talking about something else? Are those okay? So I thought they were tickers, but I guess I'm wrong. And so you'd have to let me know what you mean by those acronyms. They're not obvious to me. Maybe it's obvious to you all out there. You're like, Dr. Jim, it's X or it's Y. It's not obvious to me. And so I don't know what you're talking about there, Stephen. And so and we're getting close to the end of the show. If you put it in the bottom of the chat, I'll see it after the show, and maybe we can continue this conversation next week. But let's see, Danish Dynamite, Dr. Jim. This crazy bull run is making me close out of my profitable delta positive positions, which is great, but it is leaving me with a lot of negative delta and a lot of negative delta that has negative P&L opens, right? You guys know what I'm saying. Don't let the penal open bro see it. But this is just the reality. This is just the way it works. What do? Do you put new ones on at OTH? I think you meant ATH at all-time highs. So personally, take it for what it's worth. It's a Friday. It's the end of the week. The only thing standing between, you and banana daiquiris like Wolf is me. And so I don't want to necessarily overstay my welcome here. I got 7 minutes left. But let me wax poetic for 11 to 13. So when it comes to when the market moves around, when you sell premium, you are naturally negative gamma. So what does that mean? I mean, there's a lot of math behind it. We could go through all that and whatnot, but intuitively, it's actually quite simple. It means that when the market moves up, you become bearish. When the market moves down, you become bullish. So you're naturally a short-term contrarian just by the very nature of selling options and having that negative gamma baked into the position. Okay, so you're experiencing that right now there, Danish Dynamite, where the market has rallied, all your positive delta positions have hit their profit targets, and you're left with either only or mostly short delta positions. The way that I generally look at that is I'm like, all right, let me lean bearish right now. Let me not necessarily, and I actually talked about this at the crash course in Detroit on Sunday night with one of the questions I got at the end. Great Q&A, by the way. And we're going to do the same thing in Tampa. Like, that's such a fun time of the event. Like, the event is fun for all the obvious reasons or whatever. But at the end, I'm making sure we did it in Boston. We did it in Detroit. We'll do it again in Tampa. I'm carving out at least a 20 to 30 minute block where we can have like a group Q&A. We just put the mic in the middle and you can just stand right up and just ask me questions. And then everybody gets to hear the question and everybody gets to hear the answer, which I think can be really beneficial to all of us as we all kind of learn together. But one of the things I brought up is, in my opinion, I think it's easier and more effective when it comes to whatever you're trying to achieve in the markets. Obviously, that involves making money to some degree. I think it's easier and more effective to actually take a directional side than be delta neutral. I think being delta neutral all the time can be really, really difficult to do, especially if you have things outside of your portfolio that you're trying to do with your life. I don't know, like a family, right? Or like friendships or hobbies, right? Like things like that. Like if you're just locked in like all the time, 25/8, like maybe you can make it work. You're always adjusting, whatever. But I actually think it's a little bit easier to say, all right, I'm going to play it a little bit bullish. I'm going to play it a little bit bearish, whatever. So I bring that up now because it feeds directly into your question there, Danish. And again, this also kind of jives with my personal view of the marketplace. I think the marketplace is very cyclical. I think the marketplace, it ebbs and flows, and it really likes to kind of constantly seek out this equilibrium point that is in the market at any given point in time. So what that means practically is when the market does go up, I think there's a greater likelihood that it's going to come back a little bit. And when the market goes down, I think there's a greater likelihood that's going to bounce up a little bit. Now, again, don't let the momentum bros, don't let them know that you heard that. Don't let them know that I said that, because they will rake us both over the coals, right? But that's what makes a market. That's what makes all this stuff so fascinating. And so I would actually, Danish, in that situation, I would just breathe easy and say, all right, I'm going to be a little bit bearish right now, and that's okay, right? Again, I may get taken out behind the woodshed. That's very possible, right? But again, I kind of think that you may have some opportunities to get out of those bearish positions too at, profits or, scratches or whatever. I wouldn't necessarily be rushing out the exits to lay on a whole bunch of new long delta at all-time highs. That doesn't make a ton of sense to me, but I respect the fact that somebody might want to trade delta neutral. It's obviously it can be a very successful way to trade. I know a lot of traders have done it. It just doesn't really jive with the way that I view the market. And so those are my honest thoughts. Those are my 100% honest, authentic thoughts. And so let's see. Mikos in the house. Carp Dog in the house. What's going on? Steve Aguilera in the house. Man, appreciate you guys. Rancid Viper, look at you. Dr. Jim, howdy, buddy. What's going on, my friend? Jared Kramer in the house. Dr. J in the house. Selling calls on Tesla this morning. Going to pay for my steak at the Roadhouse tonight. At the Roadhouse tonight? Bro, you're going to the Texas Roadhouse for steak? Man, don't do that to yourself. Don't do that to yourself, especially when I know for sure there is a bonefish in that same strip mall. I know for sure, sight unseen, that there will be a bonefish within 100 yards of that Texas Roadhouse. Don't do this to yourself, man. At least hit up the Great Wall Buffet, which will also be there, right? Either one of those would be a better option than the Texas Roadhouse steak. Don't do that to yourself, man. You're already clearly a glutton for punishment by selling calls in Tesla. And so now you're going to, you're just supersetting, just a bad decision with another bad decision. And so I wish you luck, my friend. I hope it works out for you. Let me know how it goes next week. But let's see. Sergio. Oh, Dr. Jim spinning the wrong song. Yeah, I think they kind of went in with one intro just to make sure you guys were paying attention. And then they looped it back around with the right intro. So we got it all. We got it all squared away. And so let's see. Joel James, Dr. Jim, Trump meets with Xi on Thursday. You have to imagine the market rips up or down. That's what it usually does. Buy a put and a call in SPY, 7 DTE. Oh, I see what you're saying now. You think it's going to be a big move either way. Got it. I'm new to this, so maybe it's dumb, but what do you think? Yeah, I just don't really like, I don't really like, did you say, oh yeah, buy them both at 30 Delta? So I think that there's a time and a place for buying some options and buying some premium. I really, truly feel that way. The time or the place, though, usually involves a deep in the money option that becomes a substitute for that underlying asset, whether it be a stock or a future, where you want to take a directional shot, but you kind of want to have one-for-one movement with the underlying asset. And, you want to save the buying power of actually using the asset itself. So case in point, I don't want to buy Tesla stock. I'm going to buy a leap call in Tesla. Or I'm going to buy even a 0 DTE call in Tesla. It doesn't even have to be a leap. I'm going to buy a 90 Delta call in Tesla to kind of have, a simulated stock position at a fraction of the buying power. You could do the same thing with the indexes, same thing with futures, like all those kinds of things. To me, that's a much better play than doing something that's out of the money, because with out of the money, it's all extrinsic value. And so especially 7 DTE, like that extrinsic value is going to dissipate so quickly. So if you don't get the move that you want, like they can just squash that premium right away. Not to mention, here you go. The Xi meeting on Thursday of next week, it's a known unknown on the calendar. Like we know it's coming, right? We don't know what's going to necessarily happen as a result of it, but we know it's coming. So what can we expect? Volatility crush. What can we expect? We can expect, right, volatility to be bid up going into the Thursday meeting or whatever. And then once it happens, the volatility gets crushed. If you buy options, right, that volatility crush is going to be working against you. So that is not something that I would prefer to see you do. If you want to take a directional shot, by all means, take a directional shot. But I would say pick a side and go 90, 95 Delta on something. Even a 0 DTE, even a 7 DTE, whatever. I think you're going to have so much less extrinsic value because the volatility crush, by the way, it only impacts the extrinsic value. That's another piece to this puzzle that's actually really important. It's not going to impact the intrinsic value because the only thing that impacts the intrinsic value is the moneyness of the option. And so the volatility is obviously going to cause the market to move, which is going to indirectly impact the intrinsic value of the option, but it's not going to have a direct impact on the extrinsic value with the volatility changes. But if you were out of the money, now it's all up for grabs. Now it's all open season for whatever volatility changes there might be. And so hopefully that helps a little bit there, Joel James. But man, I'm out of time. Man, I can't believe it. I can't even believe we made it through the CPI this morning. I'm still a little bit in shock. But man, I'm so glad that you guys came to hang out with us today. I really, really, really appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early, but he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy, and I live here in Chicago, so yeah.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
What's going on, everybody, and welcome to the most dangerous show on the tastylive network. It's Engineering the Trade. I'm your host, Jamal Chandler, and I got a special guest today, Gus Downing, in the house. What's up, dude?
What's going on? I'm doing good. All-time highs mean good for me. CoreWeave is up big today. I think that means good for you, so I'm hoping that we're two happy campers here.
I know, right? It's a good day. I mean, it's a good day. You can't complain. I mean, it's been an interesting week, man. I mean, for me, I don't know about you. I'd love to get your take on the highlight of the week. For me, the highlight of the week was the gold move. What feels like 2 weeks ago. I mean, it feels like 2 weeks ago that this happened, but literally you could take you back to last Friday when we had the drawdown in gold, which I think the previous 2 Fridays had done that. And then on Monday, I mean, it was just absolutely mooning Monday. And I just, I went on overtime. I pounded the table, literally pounded the table. Like, this is ridiculous. This is crazy. I looked up the current headlines of gold, and it was just like major news outlets saying why you should be having gold in your portfolio right now. This is the greatest thing. And I'm like, this is stupid. This is about to fall. And sure enough, it did. and it fell quite a bit. And that was like the biggest highlight for me of the week, for sure. What about you?
Gold has definitely been one of the highlights of the week for me as well. I've actually been short silver into this move. I was operating on a thesis that maybe when people started to rotate out of gold, that would scare everybody out of silver even faster and more aggressively. That hasn't exactly manifested, but I'm happy to have the exposure to the metals. But for me, I think it would be these quantum stocks finally starting to stall out a little bit. I am short RGTI for the second time now, and this one's going to work out. The first one did not work out so well. But yeah, that company, that RGTI specifically, Rigetti Computing, would be the highlight of the week for me. I was just about pounding the table on risk and reward a few times while that was going up, because I mean they peaked at an $18.5 billion valuation, I believe, doing $7 million in revenue a year, which is the craziest thing I've ever heard. So yeah, I'm happy to finally see those coming back to earth a little bit, and that's paid me some dividends as well.
Yeah, it's funny you mentioned those, because earlier today on OTCL, I was with TP, and we talked about those 3 areas that have been really kind of, fascinating in the market right now. Quantum stocks are one of those areas. Rare earth metals is another, and then like the nuclear energy stocks is another. And again, a lot of it is on like what's expected to happen in the future, not currently happening. So it's kind of wild, and then you see that in the volatility of all of them too. I mean, pretty much all of the names in those sectors I just talked about all had pretty high volatility, somewhere between 80s and 100s for sure. So there's a lot going on in the whole space.
Oh, absolutely. And all three of those spaces have really begun to run together in my brain. I'm constantly having to refresh myself on what, like Oklo, for instance. I'm always like, is Oklo a quantum or a nuclear? And I have to go look because I can never quite remember. And it's funny the way things work out because it'll be that way forever now. I'll never know what Oklo does.
I know, right?
But
actually, TP mentioned that today because I was like, nuclear, right? And so I'm just thinking, CCJ and Auckland. He was like, he knew exactly. Like, I think CCJ is more of a mining. Oklo is like, I don't even remember what the hell he said it was.
Yeah, I know. I know Thomas Westwater is really high on CCJ. I do believe they're a uranium miner. And then I don't know what Oklo does either. I couldn't tell you. It's something in space. I'm high on nuclear and the future of nuclear. I hold some SMR and things like that. I never try to get too specific with the names. I really like GeV as well in that vein. But yeah, things definitely got a bit over exaggerated there earlier this week, I think, and in the last few months, really. I shouldn't even localize this to this week, but yeah, I'm happy to see everything breathing a little bit, and and all those ran up against, especially this month, have ran up against the small pullbacks that we see in the market as well. There has been little correlation to the broader market, so it seems like everything's sinking back up a little bit now, and I'm happy to see that.
Yeah, it is. And that's the thing. I mean, you don't necessarily even need to know what Oklo does, right? Like, unless you're just deciding to like take, half of your future, like whatever money that you have, and you want to put it in Oklo because you find this thesis that you care about, that's a different thing. But other than that, you don't really need to know what most of these stocks do on a daily basis. I learned that a long time ago. Like when you're trading a bunch of different names, you don't necessarily need to know everything about a name unless you're like, oh, okay, I'm interested in this space. And if you're like, I'm truly interested in nuclear and I feel like this is the best name, that's when you dive in and like, okay, I'm going to take a position in this thing. Again, we mostly trade small trade often, but like if you feel like this is something that you really believe in and you want to take a big position, that's the only time you really need to know like what something does, right? Like other than that.
Yeah, precisely. I mean, yeah, as a trading vehicle in the short term, I think it matters very little. The only thing I ever care about is whether I think the move is substantiated or not. Like if something, goes up on some giant run, are we actually pricing in new information and this is the level that this should be at? Or is this something that's just purely hype driven and will probably come back down? But once you do the little bit of research to strip that nuance away, it becomes, the names become largely irrelevant. And honestly, I was doing that like with the rare earths, for instance. I was like, these become a short sometime, but where is it? Like we have this whole, broader macro turmoil thing going on right now with the rare earths. Like they should be up. I just don't think they should be up this much. And then at a point, and then this happened with the quantum stocks as well, at a point it just gets to where I'm like, this has to be too high. There is simply no way that these things should be this high. There's no way that any rational movement has 10 straight 3% green days in a row over and over and over. It becomes a bit excessive.
Yeah, we could pull up the platform. I mean, I feel you, dude. It does get a little crazy in some of these names sometimes. Real quick, I'm curious too to know. It's hard not. I'm curious with everybody. I was talking about this in the morning with Nikki and Mikey, and I'm curious to get your thoughts. You bet on stuff every now and again. Does this new scandal that came on NBA make you feel like you're going to bet less or bet more on NBA, or do you bet on NBA at all ever?
Well, I never do player props for any sport ever. So as far as that market, that's something that I've never attacked in the first place. But I don't think that it's going to influence my personal betting habits much, if at all. I think that because the point shaving stuff, I think that that's just kind of been happening forever. I think that some people are, especially with the individual props, I think that some people are just better at it than others. And that's really what kind of scares me is for every one person that we find that is definitely doing this, is there 5 more, 10 more that we just aren't going to find because they're a little bit smarter about it and, not making it so obvious, not pulling themselves out at 7 minutes into the game when there's hundreds of thousands at handle on all of their unders in the book. Yeah, I think that that's very interesting. But the Chauncey Billups stuff is what's way more fascinating to me. I was just talking about that with Errol. But, I mean, they're naming Casa Nostra and the Gambinos and the Lucchese's. I mean, this is like an 80s movie. I don't know how he got wrapped up in that. I kind of thought, I didn't realize that the Mafia even still had this kind of income going for him. But apparently they do. It's nuts.
Exactly, man. I don't know. I'm not saying he didn't do anything. I mean, he clearly did something. But there's more to the story, is what I feel. I mean, because right now the story sounds too simple. It sounds like you said. It sounds like a story we've heard before, and I have to feel like where repeat crimes is a thing. And yeah, sure, things repeat, but like not like 25 years apart. They may be 100 years apart where nobody's like, why? This seems too simple. There's got to be more to the story here. Or maybe there's going to be more people named. I'm not sure what's going on. I'm waiting for all the facts to come out. Because usually the first story is usually not the whole entire story. Let me just say that. That's all.
Yeah, absolutely. And as I said earlier with Errol as well, it's really important to disclose that this is all alleged. There's two sides to every story. The truth will hopefully work itself out in court, and we should absolutely let that happen. But yeah, I think there has to be more to it. And what's most intriguing to me is that, well, they said that there's 30 arrests. Kash Patel said they've made 30 arrests, so I'm interested to see what names come out in that. But I'm really interested because they have just only said that broadly these two things are related. But they haven't specified in any way. They don't seem to go together at all. So, yeah, details have to be forthcoming. I'm interested to see how the Rozier situation could possibly be related to, we're talking about poker games in LA versus a basketball player in Charlotte. I don't know how those two things tie together. But
I think what they're trying to do is make it a RICO case, right? Like clearly they're doing that, and they're trying to make them related. They're trying to make it a RICO case, and that's the easiest way to get everybody to go down all at once. So that's why all the arrests. That's why they're seemingly related. That part seems pretty straightforward to me. I mean, that's typical FBI and cop stuff. But I mean, look, these dudes put themselves in those positions first of all, so they just not good decision making at all. I mean, man, that's just tough. It's crazy.
Well, yeah, and that's the other thing too, is it's like there's got to be some leverage or something. Like you have to really be wrapped up in it, because why in the world would Terry Rozier making $12 million a year suddenly decide that he really wants
everybody
to make
keeps asking.
200K this one time? It's very strange. So I feel like somebody had to have leverage on somebody here. I just don't know what happened.
Yeah, that's what everybody keeps asking. And again, you never know, how people spend their money. You never know what dumb mistakes people make. You never know what, like you said, some other people in the family, like who knows? Like I said, there's a lot more to this story. I think it's just the beginning, bro. Like this is wild. It's really wild. And you can't find anybody who's not talking about it right now. Anyway, yeah, it's been an interesting week. I pounded the table on gold. I'm not really doing that now at this point because, one thing I can tell you is that it's a different trade now. It's a very different trade than it was last Friday, than it was on Monday, and then it was on Tuesday. So it was high. It was ridiculous up here. I thought it was very extended, and why did I think that? Because the way it was above that 5-day moving average right there. Like if you just look over these last several months, most of the time when it got pretty extended above that average, it did a drop there, right? It extended above the average and at least a 1-day drop, let alone a potential 2-day drop. And so it happened here. So that was my whole thought process, right? And so more recently, we saw it do that, and then it came down on a Friday and then right back up. And then we saw it do it last, I guess it was Thursday, Wednesday, Thursday, Friday, I think. And then, no, this was Monday, Tuesday, Wednesday, Thursday, and then we dropped on Friday, and then right back up. And I was like, this is ridiculous. Like, this is dumb. This is going to fall probably soon. And sure enough, it did. But that's not the case now. I think it's a whole new trade. And I love when things are moving around. I think it gives you an opportunity. It's the same thing as volatility. I mean, volatility literally only means there's movement. When we have more volatility, we have more movement. I love that. It allows you to get in and out and trade something. Right now, I can't make heads or tails of this. And so I'm not trading anything in gold right now for that reason.
Yeah, it was really interesting. This whole action with gold has been fascinating to me. I mean, this is the most excited anybody's been about gold since ancient Egypt or something. There was a lot of that type of action. I mean, it became like an excitement, overvalued Palantir style type of move where there's all of a sudden all of this excitement for this asset that is generally considered to be very boring, something that you use in very boring ways. And not that it's not important in that regard, but it's just not something you usually see get hyped. I mean, gold being overvalued is not a sentence you would say very often. So yeah, I'm fascinated by the whole thing. I'm hoping we get slightly lower lows. I may have been a bit too ambitious with my silver position. We'll see. I need under 42 on SLV. It's currently hanging around 44. So would love a little more of a down move. I don't think that a little more of a down move would be unreasonable in any sense of the word. So yeah, I'm hoping we can get another leg down and I can get out of this.
Yeah, not at all. I mean, I suspect it's not gonna make it easy for you. I think this is just gonna chop. If I had to guess, just right now, because I think a lot of people are a little nervous still. The buyers who liked it here, they're still kind of interested, but they're a little scared. The sellers are trying to push it down some, and they need to get it below this clearly this low of from 10.9. Gold, similar issue. Like it bounced strongly around 4,000. They were trying to get it below this low of 40.11. It didn't quite happen on the second day of the sell-off. It got to low as 40.21. So this is the area, this plateau, right? And like for gold, it's 10.13, and for silver, I think it's that 10.9 day. And so I think this is the beginning of some type of chop. We'll see what happens. We'll see who wins out. Hopefully, you can get that a little bit. They can get that down for you. And,
yeah, we'll see for sure. My confidence is lacking a bit. Although, yeah, I do think that just having the hype kind of stripped out of it should help a little bit with that. And now that we've moved past the just gold to the moon type of campaign that we were on, it's going to be really interesting to see where the market assesses the legitimate fair value of gold to be now. Because obviously we went a little bit crazy there at the beginning, but there is legitimate reason for the uncertainty that generally spurs gold buying. I'm not surprised to see that it's up. I was just surprised it was up that much. So yeah, it's going to be interesting to peel all that back and see what we land on for the fair value of gold amid a government shutdown, and what happens when things go back to normal as well.
Yeah, no, that was perfectly said, and that's exactly how I felt. I wasn't surprised to see it up. I was just surprised to see it up that much and with such velocity over a short period of time. Earnings this week, the big ones for Tesla and Netflix. You do anything in any of those?
No, I wish I would have grabbed a post earnings move on Intel this morning. Actually, that's the only one I've really been kicking myself about. But Tesla and Netflix scare me to trade under normal market conditions. So you will not find me in getting involved with earnings with those two very often.
Oh man, it's faded, huh? I didn't realize that.
It did, yeah. And this is the type of post earnings move that I love to take advantage of, just when things get a little bit too overblown and you can kind of play that reversal, that regression to the mean. I was too slow on this one and missed my entry, so I'm on the sidelines. But yeah, it has just given it all back. Same thing happened with Philip Morris the other way. That was I have a losing position that I'm probably going to have to, I'm going to have to make a decision on by the end of the day. It expires today, as they do not climb to what do I need, 215, something like that. No, 160. I have a naked call at 215. But anyhow, it was a very similar move where post earnings it ripped to the downside and then just immediately got it all back. It's always interesting to see that happen.
This is probably a good strangle to sell. I just don't like how much this thing is in the news nowadays.
Yeah, and that's the tricky part too. And I need to read a little bit into that earnings report and see what kind of color they gave on this today. But they just have so much money right now. And I know that Apple and Nvidia both have just kind of thrown a few $1 billion at them as of late. So there's capital laying around that they, I assume, are deploying for good use. But I'm interested to see how they're using that capital and how much of it might still be laying around, because that's what would scare me off, is if at any point they could just say, oh, we're spending $3 billion to open a new facility to manufacture chips. Obviously, that's going to send them to the upside. And so it's tricky.
Yeah, I know, right? I mean, honestly, this is high implied vol. See, this is Jamal's trading school of thought here. So this is high implied vol. Yeah, sure, 50s or whatever. But I mean, this is definitely well over the normal. And when I say normal, I mean Intel for the last 10 years has probably been high 20s. So I think IVR, not the IVR, but just literally flat implied vol. This does seem kind of high, but I mean, the way the stock is moving, the stock was just at $41 earlier today. And the way the stock is moving right now, these upside calls look fairly cheap, in my opinion. I'm not buying any, but I'm going to keep an eye on this thing. This thing's starting to move around again.
It is.
It's starting to move around like a younger stock.
I know. Intel and IBM both are kind of like a renaissance. They spent the whole 2010s kind of, stagnating, running sideways. It felt like they were getting left behind. And then suddenly they're just, whoa, I hadn't seen that yet today at all.
Oh God. For real? I don't have any here, right? Holy cow. I had, in my personal account, I had some 300 and 310 calendar calls. Damn. They actually came back to life. I was up on them. So I closed it. Oh man, I didn't realize it was up $20-something, bro.
Sorry, I didn't mean to give you the FOMO. I hadn't checked this today yet either. I totally forgot that they were going off this morning too.
Holy cow. Well, yeah, you're right. I mean, I mentioned that on This Week in Stocks, like IBM, Intel, what was the other? Oh, Honeywell.
Honeywell, yes.
That one, because that one went up on earnings. This not doing anything now, but it went up on earnings yesterday. I'm like, what year is this? These stocks are going. They're moving like growth stocks.
Honeywell is another one that I trade often to this day, and I really couldn't tell you what they do. Is it home security? Is it thermostats? I have no idea. I have no idea what that company does.
They were like one of those multi-conglomerate companies, like a 3M. Like they did a whole bunch of different stuff. I don't even remember. You're right. I can't remember off the top of my head. I remember feeling the same way once, and I looked it up. I was like, what does Honeywell do? And it's a lot of
logo
stuff
I
that's
see
around
on
your
thermostats.
house. I think
that's how I think of it.
Yeah, it's something like that. Man, IBM. Whoa, bro, dude, I'm like shocked. Look at this chart, man. I mean, look at this. The other day falls down on earnings, kind of rebounds a little bit, and then today. I mean, this has got to be based off of cloud computing to some degree, right?
Yes, it's got to be something like that. I mean, CoreWeave is flying today too. I don't know what macro is going on in that department, but it's
been all over the place recently.
Yeah, not as pronounced. It doesn't.
No.
CoreWeave doesn't look as nice once we look at an IBM first.
Yeah, I know, right, dude? I don't know, man. I wish. See, this is man. See, look, I love to sell things when vol's high, but I love to buy things too. As you know, I've talked to you about this. This is one where I would love. I don't love these options though. God, jeez, 30. I mean, I love buying like when I feel like a name might go. I love buying like 30 Delta calls, but I don't like buying them for $3 and change. That's for sure. I like buying strips. I got to figure out something in here. There's no trade though.
Yeah, this IBM. I mean, seriously, what year is it? I cannot believe
I know
what we got going on with IBM. I've told this story before, but I had a professor my final semester of college who it was like a finance class, obviously, and he mentioned he would always, anytime he needed a stock to reference as an example, he would pull out IBM, and I would always be like, "Oh, this boomer still thinks IBM is relevant. Like this is whatever. Why don't you say Apple? You old guy." But then all of a sudden, here we are. I hope that guy was holding a bunch of IBM because it would be working out for him right about now.
That guy's probably still talking about IBM now. He's been talking about it forever. Hey, you know what that goes to show you? Just stick with something. Eventually, it comes back. Okay. About 10 years ago, I was rocking Crocs like whatever, no big deal. Now everybody's rocking them again. This is what happens, Gus, when you get old. You know what I'm saying?
The Crocs have come back in full force. That's for sure.
Oh man. Yeah, it was interesting because early in the week, you talk about the quantum computing stocks, they took a dive, right? Early in the week, late last week, early in the week. Same thing with the nuclear stocks, right? We saw similar deal with those, and same thing with these rare earth energy stocks. But I'm telling you, I think those three sectors are the probably most interesting sectors in the market for me. Whether you think they should be down, whether you think they should be up, I just think they're fascinating. I think they're trading heavy. There's a lot of volume. There's a lot of options activity. So I like it.
Yeah, as a trader, I'm inclined to agree. It's just wherever the volatility is at is where I'm going to go. And recently, it has been in all three of these in pretty much the same way. I mean, like I said, it's hard to even separate out which ones are which in your brain sometimes.
Yeah, exactly. I mean, I got these rare earths. I got them in a list down here. I always end up doing this when something's the stuff that's interesting or hot. I usually put in a list. I mean, it's changed now because once upon a time it would be things that were moving and I'd move out what was it. But it got to the point, I started doing this when I first came here and I started formulating my list here on the tastytrade platform. I initially put in the Mag 7 because obviously those are the ones that were trading the most and they kind of still are to some degree. Sometimes they still determine a lot. And you can see I've added some others, but yeah, now I've got these rare earths. I have yet to put any of the other groups that I said, whether it's quantum computing, et cetera. Probably should, just to see if they all kind of move on the same day. I love seeing trends, right? And so I as I'm sitting here, I probably should just add them to it. But now my list is going to be so enormous. I mean, sometimes I'll definitely make separate lists, but I'll only do that. I just feel like right now they're all kind of doing the same thing at the same time. So that's why it's like a one massive list right now.
Absolutely. I agree. I mean, I don't think there's any reason to separate them until they give you a reason. But as long as these seemingly uncorrelated sectors just continue to move in perfect correlation, you might as well keep them all on the same list.
Yeah.
Thanks to everybody in chat as well for clarifying Honeywell for me. I appreciate it. And Theta Trader for trolling me and saying that they mine honey.
Oh, yeah. What did he say? What do they do? What does Honeywell do?
Honeywell, they split. It says they split between aerospace and materials. They make instruments and measuring equipment. Is a different comment. Osborne here says he used to work for Honeywell. You know what they do quite well. If you want to spill the beans on that. Also, I saw something asking about how you're managing a ISRG position. I wanted to float that to you.
I closed that out earlier today, and it should be on the It should be on the follow page, but I closed it out earlier today. I even put it in the explanation. So I had the 500 calendar calls here for earnings. You can see the big move it made. Probably should have closed this one out right away, but I kept it on. Just most times, just like we just saw with Honeywell, right? Most times after earnings, you usually see kind of a pullback, and there's really not been much of that in iSurge. It really kind of kept going. I was hoping that it would kind of pull back some to maybe to this area, maybe even to like this 200-day moving average, but it just kept moving up. And then it got annoying because look, in a calendar call spread, the further out call is always supposed to be worth than the near term call. But because the options were wide in iSurge, it was making it look like they were almost even, if not the near term was a little bit more worth more. So yeah, this morning I came in, stock was kind of down, but it really wasn't moving anywhere. And so I just decided to close. I eventually closed it out.
Yeah. Okay. That's interesting.
Yeah. Make sure you close that out because obviously there's a short call component to that. It's gonna get you're gonna get assigned to that over the weekend if you don't.
Yeah, I'm surprised that thesis didn't work out a little better for you. Generally, off a gigantic gap like that, you would expect a significantly larger down move before it just goes to make higher highs. But it's resilient, I suppose.
Very much so. Yeah. But great move on that one. And like I said, I probably should have closed it initially. I just didn't. Whatever. It happens. But let's see. I think there's I still have no, I don't. I closed that out too. So yeah, I mean, I don't know. As far as next week, I probably will, similar deal. Who knows with these earnings? I feel like outside of iSurge, many of the few earnings I played, whether it's Tesla or Netflix, my calendar call strategy didn't really work. A lot of them have pulled back, and I feel like some of these names, even the ones that are beating on earnings, Tesla did not, I don't think, but the ones that are beating on earnings are kind of getting punished a little bit.
Yeah, when we're just in such a bullish environment. I mean, it's crazy town. I'm clowning on Errol every day. He's always got some new short position on somehow, and I'm like, man, just blindly get long. That's all you have to do in this market. Is just blindly get long, literally anything, and wait a week. it'll be up.
He got brainwashed, man. Tom was the one who told him about having a little short delta every now and again.
Yeah, I'm close to 100 portfolio delta right now. I'm just blind to the upside, and I'm not putting anything new on. I'm not like doubling down on this. I've been keeping about the same amount of buying power out, but yeah, I mean, if the profits are going to keep coming through, I'll keep taking them until they stop.
Yeah, I have a decent amount of my positions are a longer delta. Jesus Christ, when this micron just keeps going. A decent amount are like kind of longer deltas. I really haven't found the need to try and get short delta anything. I mean, it's like.
What's your angle on UUU?
Oh, glad you asked. Actually, that's a 100% upside call that I sold for $2.05 yesterday, and I can actually close it now. Good call, Gus.
Thanks, yeah.
I think I'm up 50% on that, right? And I got to be at this point. Yeah, that's what we call a close. That's what we call a quick trade, ladies and gentlemen.
How about that?
Yeah. Yep. There we go. Let's get out of there. Liquid too. We'll take it. Yeah. When I saw this yesterday, I'm like, wait a minute. There was it was like $2 bid at the time, and it was like, I mean, again, this is 100% to the upside. You're like telling me that's $2? What? Sold, bro. Yours. I don't care if it has earnings, and I typically don't like to sell things in around earnings cycle. Typically don't. No, sold. Yours. Out. And yeah, we're out quick. So that was nice. Quick trade. But yeah, that was the angle. 100% upside call that I sold for $2.
Well, sweet. How about that? Yeah, that's been one that's scary to me. I wanted to get short for a second there, but I decided to lay off. I'm fortunate in having done that. That's just another one that's going ballistic in these sectors that we're talking about.
Yeah. Damn, we ran out of time. It's crazy how fast things go. But thanks for coming on the show, man. Good to see you as always.
Of course, yeah. Happy to be here. Thanks for having me.
Thanks for watching the show, folks. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call, the last call, the last call.
And we are back. I'm Ilya Spivak in San Francisco. That's Thomas Westwater with the beautiful Chicago skyline behind him. Appropriately, he is in Chicago. Thomas, what a day. It's interesting almost to look at this and see which things didn't move, because that's almost as fascinating as the things that did. How are you feeling on this special CPI Friday?
I mean, yeah, the number came in. It didn't spook the market. It was enough reason for, S&P 500 to break out to a new level. Pretty, risk day, gold, silver down, although they're well off their lows that they were trading at this morning. SMH carrying a lot of weight today, so the chips really doing well.
That's right. That's right.
They beat estimates, and everything looked pretty good. So, that was a reason to buy chip stocks, and people are doing that.
Yeah, to be sure. I mean, this is unmistakable, and lest you think that economic data doesn't matter, allow us to disabuse you of that notion, because this right here is the CPI release. So there it is. It is not as if that isn't clearly the place where the market took its shot. So coming into this, I mean, obviously we can see that there's a long, quiet settling where the market is waiting, and then boom, right there. And for good reason. If we look at this set of numbers here, it's pretty rosy on the whole. It's not a bad set of figures. Breaking down the inflation numbers here, see if I can share my screen so we can take a look. Here's the various components in the month-on-month change in CPI. We can see here energy was the big one that really made a splash, 1.5% rise there, but otherwise not really big. And in fact, if we take a look at what energy is here with this jump, there's also a massive downswing back in July. So in some sense, energy is kind of evening out here rather than creating a tremendous swing one way or another. If we take a look at the year-on-year dynamics, it's really cars, and there you sort of have perhaps a conversation about what this is, sort of tariff and tariff-related things wise. But if you look at the overall kind of makeup of what's going on here, I think the thing that really stands out, I mean, you can obviously see right here that goods inflation is accelerating. So all of this kind of conversation about there is no goods inflation, there is no impact from the tariffs. Yeah, okay. La-di-da. These are core goods. We've obviously heard Stephen Meehan make the argument that, oh, this is the same issue that everybody in the world is having. No, Stephen, this is core goods. This excludes energy and food and the other things that other economies are having issues with. But we can see here, this is not a big jump or anything like it in goods inflation from August into September. And in fact, goods inflation came in a little bit. Services came up a bit, but we can see overall the year-on-year is coming in. And of course, shelter, which is the big argument that people like Stephen Meehan are making, is heading their way. There was a big spike in August, not so much in September. And that's been really the way that the sort of dovish contingent has really justified saying, you know what, we don't need to worry about inflation. If this shelter component comes apart, then really the whole thing becomes a very different inflation story. And at least this month's numbers sort of go that way. They sort of paint that picture. If we take a look at what this does to Fed policy expectations, here we go. Here was yesterday for October. Here's today. World-o difference, as in not really. So we're still sitting in the high 90s. We're going to get this cut next week. That's not a controversial thing. There's not a summary of economic projections this time. So we're just going to get the Fed issuing a statement, Powell giving a press conference. For December, the pricing also not meaningfully changed. A little bit firmer today, 92%. The possibility that we get a 50 basis point cut a little bit livelier, almost 5, a little bit over 4.5. But ultimately, no big changes. What was interesting for me in all of this, as we were saying at the top of the show, and I'm curious your thoughts on this, obviously equities made a move. I mean, there's no question. There it is. Obviously, we see it across the board. There's the same move in NASDAQ. I mean, it's unmistakable. It's right there. But no real changes in policy expectations, as we just saw. This data didn't really alter the market's calculus, even looking at what's on the menu for next year. Here's the SR3 contract, the SOFR contract for December of next year. And we can see here's today. There's nothing going on here. And if we even took a look at where the data was, I mean, here it is. Boom. There's a pop. So rates initially come in because the markets go, oh, goody, this was dovish. And then we come right back. So this ultimately didn't really move the needle because it was close enough to expectations that it was like, oh, okay, this is about right. You don't get a big move in the bonds. Nothing. You don't get a big move in the dollar. Nothing. You don't get, I mean, you get something of a move in gold, but only kind of. It dips a little, comes right back. Not a whole lot going on. Why are stocks caring? Are stocks caring about what this actually means? Or are stocks simply caring that an event risk they had to worry about is out of their way?
Yeah, I'm going to echo what I said yesterday on overtime that, the CPI event, now the market can focus on earnings. We had the good Intel numbers yesterday. SMH is really carrying a lot today. AMD was up or is up 7%, NVIDIA up nearly 3%, Intel up about 0.6%. So all the chips are doing really well. And that's what's been driving this market is this focus on AI. And Intel said that chip demand looks strong because of artificial intelligence. So, I mean, all of these big AI names are up today. And it looks like, people aren't betting on Intel. They're taking what Intel said, that chip demand is strong, and they're applying it to, names they like more. That's why AMD and NVIDIA and other chip stocks, they're doing very well today because the demand outlook still looks like it's intact. And that's been one of the overhangs on the market is this fear that this is going to unravel at some point. And when it does, it's going to happen quickly and everyone is going to rush out. So the Intel earnings is just, pushing that concern farther out now. So the market can say, this AI narrative, it's continuing to drive investment. All of these chip stocks are going to continue to increase their sales, their margins, everything like that. And it's going to carry us. But like you said, no change. The cut next week is fully priced in. So, it's priced in at this point. It's not going to change anything. Now, Powell could come out and say something,
as he that the market doesn't
like. But, most of the time, he's been pretty, calculated in his language to the point where it does not cause big fluctuations in equity markets. Now, you could look at like gold and silver. Yeah, they were down a little bit more. They came up. Still moving a little bit lower. So, it's your typical risk on. People aren't buying gold, aren't buying silver. Equities are going higher. Bonds weren't really too changed today, and that's because these rate expectations haven't really shifted that much. Like the chart you showed, there was an initial pop in the SRZ3, and then it came down. Bonds quite unaffected. So I think what this says, is right now we have the green light to go higher next week. With the caveat of, we have a lot of big names next week. So we have the FOMC decision where people will be watching Powell. We have Meta, Microsoft, I think Google. I'm not too sure on that, but definitely a lot of market cap concentrated in the S&P 500 is going to come out with their earnings. So far, earnings have been looking pretty good. So, I mean, there's no reason to really expect a lot of any big event risk that would drive prices down. There always could be that, but so far I think we're going to move higher. I think the S&P 500 breaking into this new level is very encouraging. And the fact that we've seen these levels hold, most of the gains were in the morning, but they're holding into the close. And on a Friday, that's a pretty encouraging sign. That's saying that traders aren't expecting, I guess you always expect it, but you're not worried too much about some kind of tweet coming out over the weekend or some headline risk coming out and unraveling this all. So the confidence is pretty high. And, Monday, that confidence is probably going to grow even more, barring that, I guess the only thing that could possibly happen is Trump comes out and says something crazy on China or something crazy about
Got the meeting
India.
next week.
Yeah, the meeting is next week. So, that could also, I think the fact that they're meeting alone is slightly bullish because that shows a willingness to negotiate. Now, they could come out of this meeting and say that, where we didn't make progress or, there's still roadblocks. But if they come out of that meeting and it sounds pretty rosy, I think, they'll just keep us on the same course we're on now, which is for up and to the right.
Yeah, so just as you mentioned, huge week for tech earnings next week, even if we just completely take away everything else and just focus on this. And I think that makes a lot of sense because, of course, that's where most market cap is trapped. And so we've seen, for example, the first week of bank earnings, the markets didn't care. They just ignored them completely. And really where we started to get the markets having any kind of response to earnings was this week with Netflix first and then Tesla and now with the chips names. Obviously this market is at this point almost looking at these things as sentiment indicators. It's relatively quiet Monday and Tuesday on this front. There are a couple of interesting names, but things really start to heat up on Wednesday, which looks like it's going to be a very kind of inflection point sort of day, because obviously not only do we have the big earnings day, we also have on the same day the president meeting with Xi Jinping ahead of the APEC summit in South Korea. We also have the Fed policy announcement, and the earnings calendar reads heavy. So we got Microsoft, we got Google, we got Meta, we got eBay, all on Wednesday. Then Thursday we've got Apple, and that's sort of that for the week. Obviously there's a lot of other names here that matter. MasterCard is on here. That's an interesting barometer on consumer trends. There's ADP. That's an interesting barometer on the labor market. Verizon, another big consumer name. On Tuesday, there's Electronic Arts. That's interesting. So there's a lot of interesting things here, but as far as like those things that really move markets and that really have kind of S&P and NASDAQ significance rather than sectoral and individual name significance, Wednesday and with Apple to some extent Thursday, we have an absolute avalanche of everything. And what's interesting here is if we look at these vol levels for next week. So here's where we are. We can see it's not terribly heavy going in. So here's the 29th right here. These are not massive departures, as it were. This looks about how you would expect it to look, and we can see going deeper out into the following week, vol readings are not terribly higher. It's not a dissimilar story in the futures. So it doesn't look like you have a worried market, at least today. Now, I suppose that means that the markets are already not worried, or that Monday and Tuesday, as we've seen, give the market a chance to basically even out. And going into this week, they evened out topside. They took that big haircut on the 10th of October. That was here. The subsequent week, they just idled. They seem to reset going into this week's reporting. Things evened out. And then today is when we get the real catalyst, and obviously we've pushed on. I don't necessarily see a strong case for this rally to just run away on Monday and Tuesday, only because there's probably a level of digestion and probably a level of sort of anchoring exposure ahead of these big event risks, because Wednesday is going to be just bonkers as far as headlines. It's all coming out. And then it's easy to paint for yourself a picture where that's not a one-day thing. Where going into Thursday, markets are still going to be digesting it. There's still going to be whatever fallout from the Xi and Trump meeting, whatever they say there. Still going to be all kinds of back and forth around the Fed. Apple earnings are still coming that day, so the markets are probably not going to shoot all of their shots. So here we are going into that. Monday and Tuesday, you probably, in my mind, get a little chop right here. Something sideways. And the idea would be to hold above these levels. So essentially to hold above 6,800 or so on the S&P to sustain the breakout. Let's say somewhere between 67, 80, something like that, and 68.15, 68.20. So whatever this wedge is right here, to hold those levels. And if things sort of settle there and the market manages to hold, you probably have a foundation from which to spring forward. I, for one, am out of my shorts as of this morning, as far as the indexes go, because this is how taking pot shots at a market works in my mind. You see a little bit of soft footing, you take your shot. If it's not the one, the only way that approach works is if you keep the losses small. So, okay, this was not the high? Lovely. Good night. So I'm out of my short side, and I didn't change anything else. I didn't get out of the bonds. I didn't get out of my long dollar exposure. I did not get out of my short gold exposure. I did not get out of anything else. Obviously, I covered crude oil earlier in the week, thankfully, before the new Russia sanctions hit. So I didn't have to sell all the way at the top. But is this an interesting opportunity now on the board going into next week? This kind of stopped at a very auspicious spot. So whatever sort of this fuzz right here was, we sort of stopped right there again. Is this against that high now a sell of the risk of supply disruption? I mean, generally speaking, fading geopolitics has been a winning approach here. This obviously is the most dramatic version of this back in June with the Israel and Iran unpleasantries. But here we are. Is this the place to fade this? You've talked about a glut.
Yeah, I mean, I'm in a short call spread at 62.75, 63.25. I'm only doing that 14 days out, the November 7th expiration. I put that on yesterday. Oil, it tried to keep going this morning, couldn't quite get there, and now we're 0.5% lower. I wouldn't expect this to see a big retracement back to 56 or 57 right away. But I do think we're running up against the resistance you noted there. And like you said, geopolitical risk, these tariffs on Russia, the new ones, are the reason why we went up so much.
Yep.
So, I mean, it makes sense if you keep your view of the oil market steady, which we're going into a year now in 2026 where almost everyone sees a surplus market. So, if crude had its chance to, put in a big rally, it would have happened already. It would have happened in the past couple months, But after a big down move like this, it's not untypical to see a retracement back to the prior levels of support and retest that. So, I mean, I think when you balance the risk reward here, I think it makes sense to be neutral or short oil.
Mm-hmm. Yeah, I mean, I'm with you. I'm looking at this and thinking, oh, lovely. There's a mulligan here. If you didn't sell, I mean, and I did sell. It did work out. So this was the range. It cracked right here, and when it bounced into here, I sold. Basically going, oh, this is a break of a big level, a retracement. This is going to go down. And it ran slightly higher after I shorted right around here. So it had this little wiggle, and it did sell off. And I got out right here on this initial bounce before this gap. Whoever was front running this, thank you. This was exactly the price signal that I needed to cover and be out before the Lukoil and Rosneft sanctions. And also, to your point, I think geopolitics is a thing you sell here because it's a supply-demand story that is not supportive, clearly. So looking at where we've stalled here, this kind of short-term range bottom, you can see it clearly on the 4-hour. This, I think, is my line in the sand. And you can see here, by the way, on top of everything else, brutal reversal candle and negative divergence with momentum, which I'm tracking here in the simpleton's way with the relative strength index because it's a single line, it's basic arithmetic, average of closes up over closes down. It could not be any more basic. And I like that. So I'm looking at this and going, okay, so price is setting a nominally higher high, but momentum is diverging from that. Okay, this could be either a digestion or a break. Give me a 4-hour close under this low or an 8-hour close, and then fair shot back to here and then back down to here. So I don't have it on yet. I don't love putting stuff on Friday, though I do sometimes. But that this is holding above the range is giving me some nice encouragement to keep my money and wait. And if next week you get a move through here and a close, even on a 4-hour basis, I'm looking to sell.
Yeah, definitely. And I mean, I might add a short put spread a little further out to this position, around 56, somewhere around there, just to kind of work myself into a more neutral trade once we get back towards the middle of that range, or maybe even sooner than that. But, the oil market, the one thing keeping it really alive right now is, at least for refiners, is diesel or heating oil. So HO futures, because if you look at the price, the diesel futures have put in a pretty strong recovery versus crude and even gasoline. So gasoline's recovered, but if you look at this in the term of crack spreads, and I know we can't get that on the chart, the crack spread between HO and CL has really it's at the strongest levels after a 3-day rally here. It's at the strongest levels going back to mid-July. If you look at something like the 3-2-1 crack spread, which is gasoline, RB, diesel, HO against crude oil, the 3-1 crack spread is much lower. So these refiners, your crack spread is your theoretical refining margin. It's what you could sell the fuel products for at a premium versus what you buy the oil for. So it's your margin there. Of course, there's other things in there that reduce that margin, operating costs, things like that. But if it wasn't for diesel and heating oil, the crude complex, crude prices would probably be significantly weaker, because when you're a refiner and you're taking oil, you have to make a certain amount of gasoline, you have to make a certain amount of diesel. So if you only need to make diesel, you still get gasoline as a byproduct of refining oil. So you get gasoline, you get oil, you get the heating oil. That's just how it works. They could do a few adjustments to get a little bit more diesel, but really the technology and for a lot of refiners isn't there to really move those numbers in any considerable fashion. So I mean, the HO is hard to trade because there's not options on it, and it's you can trade an outright future, long or short. That's all you can do. But it's just something to watch. Once HO, the futures start really selling off, and I don't think that's going to happen anytime really soon, which is why I think crude prices ultimately, even if we get into a weaker economic trajectory, the crude prices are going to stay, they're not going to go lower than the low 50s, and even that would be surprising. I'd see maybe medium 50s at the start of the year. But it's just one thing to consider when you're looking really into the crude oil market.
This is a really interesting setup in heating oil, actually. You can see we're hitting the top of this range dating back to late July, which is obviously an auspicious level. We've hit it a few times now. And when you look at the pricing structure here, you get this really clean reversal today. And again, negative divergence on the oscillator. You can see it here on the 4-hour really, really cleanly. Now, you don't have the confirmation of a break because you're still holding this former resistance as support right here, but not dissimilar from crude. If you ended up down here, let's say, through this low, this would be a turn, and a tradable one. Now, it's a tough thing to trade, to your point, because you don't really have a small vehicle and you don't really have options. Now, you could look at UGA, which is the gasoline fund. And you could say, okay, well, the same way that I might fade USO instead of CL or even MCL, maybe I fade UGA, but as like a play on refined products. But it's not terribly liquid. As we can see, there's only 16,500 contracts that changed hands today. So shares. So it's not the easiest thing. And you do have options on it, but liquid they are not. And so it's a difficult thing to kind of make happen. So consider this is 16,500 shares. Even if you look at USO, I mean, this is tradable, but this is 6.2 million shares. So obviously this is a much bigger thing. So if you're going to take a shot, and that's what I've been doing, if shorting energy sort of generally is your bag, I would think USO is kind of the smallest still liquid thing that you can do. And if you wanted to do MCL, that's obviously viable. Not as liquid as USO, but still viable. And of course, if you are if you have the appetite to use a big contract, then full CL is right there. But that thing is a little too rich for me. That's a whole lot of contract to swing around. So I'm staying away from there. I've been shorting crude and shorting energy through USO. If this is what I'm putting on, then I'm probably doing it this way. But the setups in both heating oil, to your point, and in gasoline, they don't look great. They all kind of look like maybe we've run into something here. We'll see what that is.
Yeah. Let's go over natural gas really quick.
Yeah, absolutely.
I think this is a pretty good place to get long if you're trying to put something on 45 to 60 days out. We come back and kind of retested this 3.9 level, which was a swing high in September.
Yeah.
And this is we're going into really the real start of demand season now. U.S. LNG, liquefied natural gas exports are, I believe, at record highs, if not right there. So Europe is really starting to take a lot more gas from the United States as we approach winter there as well. Flows to Asia have actually been quite strong, despite most APAC countries having pretty good storage levels actually over the summer. There's two more projects that are going online over this winter that will allow more natural gas to be moved to Europe and Asia. So demand, external demand outside of the United States is going to increase. Internal demand driven by weather is going to increase. U.S. stockpiles are still about 5% above average for this time of the year. But, with prices down here, with that inventory level compared to average, it really leaves us nowhere to go except up. And I say nowhere to go except up. I don't know that. I mean, these prices, no one knows what's going to happen, but I'm pretty confident.
Especially with Nat Gas, the Leroy Jenkins of markets.
Oh yeah. Nat gas is something that don't bother putting EMAs or SMAs on Nat gas because
forget it.
They usually never respect the level, and they can blow through it in a few minutes with no resistance at all. But the horizontal levels do have more respect there most times. So getting long this via a short put spread, the IVR is at 43. That's not bad. There's plenty of ways to set up a trade here. I'm in 31 days out, so the November 24th expiration, short put spread at 3.85, 3.9. So, trading about 13 cents above that right now. I feel pretty good on that. I'm going to keep this on. If we get a rally, I'll probably take it off and then just wait until the next small pullback and put it on again. But over the winter, December, January, I would not be surprised at all to see us trading around 5.
Yeah. And I mean, again, so 5 is essentially back to around this high here. So back to mid-June. And of course, you can do MNG to reduce size. You can also go the ETF route and look at UNG and essentially say, okay, well, if we're going back to mid-June, then we're going back to about 18 on UNG. Setting this up here, if you wanted to look at, let's call it the sort of normal tasty methodology, in this case, out to 42, and you wanted to do it as, let's say we're going to short the put here just to extract the vol. So here we are. The market is at almost 13. That's fine. If we give ourselves about $1 of room here, you can get solid-ish risk reward. I mean, it's not great, obviously, but when you're selling options, you wouldn't be looking for 2-to-1 risk reward and things like this because you're getting paid on the way in. So since you're getting paid on the way in, you'd be trying to get as close to something that's not awful. So if you can get better than risking 2 to make 1, that's already a step in the right direction. And so here, it's a little bit better. You could, if you wanted to, approach it with a little bit more time on your hands, which is something that I've really enjoyed, actually, to kind of dilute my exposure to Delta as much as possible because these markets have been very jumpy. Here you can see there's a little bit more liquidity. So you might have something more to work with. And even if you pushed this out a little, even if you said, you know what, okay, let's give it a bunch of time and look at it like this, maybe you can still do pretty well as far as risk reward to set something up. Now, obviously, if you start to get into sort of wide backstops on this thing, then the risk reward runs away on you. But you can do something that's manageable here and ultimately not get back-ended into a crazy NG position or even an MNG position that rips your face off in short order, as natural gas sometimes does. And instead do something that's opportunistic but not sort of vertigo-inducing. Before we sign off here, let's take a look at gold. I don't really see anything terribly exciting going on here today. I don't see a reason to do this or that thing. Obviously, I wish I remembered or knew that there were 1 ounce gold futures, or I'd have gotten into this move overnight and sooner. But here I am in GLD, and I'm basically in from here, and I'm shorting calls. So this comeback in the vol, that's working, and that's good enough for me. This seems to be digesting. Anything else you see here as we go into the Fed? And does the Fed even matter for this? Because it seems like this has really departed from all of that conversation.
I don't think the Fed matters. I think gold is, I see it kind of digesting in this level for a little bit, maybe through next week. But ultimately, I see us going higher. So I will position myself long, and I'm still long silver. Definitely took some pain on that this week, but I
big level though.
Decent place to, if you've been waiting to get long gold and you see it just going up and up and you're like, yeah, I can't get my point. If you want to take a stab at it, I don't hate that trade because really, what's been driving gold since the summer, it's largely still in place. I mean, this was a profit-taking event. Prices ran too far, too high. People, a lot of people that have been in this trade since June, July, they've had a really good gain. So it made sense that at one point this thing would have a pretty, large pullback. And that's what we got. We got one of the largest pullbacks, daily pullbacks in gold in quite a while. And, it makes sense that happened, but I think the narrative is still intact. And I think if you see an opportunity to get long and you've been wanting to, I think you take it here.
I am not going to take the long side yet, but I'm definitely with you that the sort of architecture of the narrative is there. And now it's just a matter of, okay, do we have a deeper pullback? Does the digestion continue or doesn't it? It's sort of why I'm selling premium here rather than actually buying puts, because I have a lot more confidence in vol cooling than I do in prices falling. Before we call it a day and a week here, let's just quickly take a look at Bitcoin, and only because it's very interestingly not participating in the risk move today. So nothing to do, apparently. We tried to limp higher and ultimately didn't go anywhere. Is this thing still a risk asset, or is something fundamentally broken here?
No, I think it's still a risk asset. It's not always going to move with equities, but when there are big moves in the equity market, usually see Bitcoin. And actually, the past few months, Bitcoin actually leads.
It's worked pretty well. Yeah, it's been a really good barometer for risk.
So I don't trade Bitcoin, but I do look at it if there's big moves up or down. And I've been, seeing that as this might be front running or sending a signal of what is to happen in the equity market.
Pretty ominous sign for the equity market then, if it's this soggy. From your lips to the market god's ears, Thomas, because I'm still in my IBIT short. That didn't shake me out today because obviously it didn't go anywhere. So I'm still sitting here waiting for this range break to really get some legs. Hopefully you're right and Bitcoin is foreshadowing some risk-off momentum and I get paid on this thing. And with that, that's the last call for today and the week. Of course, we are going to be right back on Sunday for first call just at the futures market open. I'll be there. You should too. It's going to be an interesting weekend of headlines, no doubt. It's been that way for a while, and I don't envision that we're going to not get some variety of Truth Social, Twitter, something or other this weekend. But of course, it'll be very interesting to see too how Asia and European markets are going to digest all of this today. So definitely tune in for that, and we'll see you next week. Have a great weekend, everybody.